for us, the chairman of Waltersmith, a veteran banker before he ventured into oil and gas, and as we heard him say yesterday, the outgoing chairman of IPPG. Please welcome Alhaji Abdulrazaq Isa.
Good morning, ladies and gentlemen. Distinguished ladies and gentlemen, kindly permit me to stand on already established protocols for the day. Maybe I should hold on for a few minutes to allow people to settle in. Good morning. Oh. Morning. How's it going? Okay. Okay, once again, good morning, everyone. Distinguished ladies and gentlemen, kindly permit me to stand on already established protocols for the day. On behalf of IPPG, it gives me great pleasure to deliver these opening remarks and set the context for today's panel discussion: Transformative Deals and Nigeria's Upstream Future. There's no doubt that this discourse is timely and extremely important to all of us as we seek the growth and development of our industry. Let me take this opportunity to express my profound appreciation to our esteemed panelists for being here today to share their invaluable insights as industry leaders. Personally, I'm looking forward to them sharing their perspective on the way forward for the Nigerian energy sector, particularly in view of the conclusion of the IOC divestments and what should be expected going forward. You will agree with me that with the divestments, the caliber of people gathered on this stage, this session promises to be exciting, deeply engaging, thought-provoking, and solution-oriented. As mentioned in my address at yesterday's opening ceremony, Nigeria's independents now have a national responsibility and a pivotal role to play in shaping the future of our nation's energy landscape. Nigerian independents have always demonstrated resilience and adaptability in the face of evolving global and domestic factors. However, we must acknowledge that with this transformational shift, the bar has been raised for us, and we must therefore be very intentional and strategic in ensuring we optimize value for country from these IOC divestments. This panel session has been framed to explore strategies that can empower Nigerian independents to effectively navigate the complexities of today's energy landscape and pave the way towards a more sustainable and resilient future for the industry. Specifically, the identification of key policy interventions that support the growth of Nigerian independence, particularly with respect to the definition of sustainable financing framework to support the development of these divested assets, the enhancement of security to minimize operational disruptions, development of requisite talent for the future, facilitation of technology transfer and ensuring asset integrity across board. Since I have the role of delivering this opening remark, kindly indulge me, Mr. Moderator and distinguished panelists, as I request that a part of your discussions here today, you carefully consider and seek to answer this critical question. Going forward, how can Nigerian independence be the catalyst for rapid industrialization and economic transformation of our nation? And I think this is a very, very important question that we need to address. If we do justice to this question, I can confidently state our time here has been well spent. Therefore, I look forward to a productive session and urge each and every one of us to actively participate in today's deliberation to enable us chart a path forward, one which empowers Nigerian independence, strengthens our industry, and secures Nigeria's energy future. Thank you very much.
Thank you very much, Abdulrazaq Isa, the chairman of Waltersmith Group and of IPPG. Can we give him another round of applause? He has set the stage for the conversation with a pertinent question, so let the conversation begin. First off, I'd like to welcome one who, as the head of NNPC Crude Marketing Company, saw a time where we, as a country, produce crude of over 2.3 million barrels per day. As a regulator, he's now enabling the business environment to ensure that we get back to that levels and above. He's on our panel. Let's welcome Engineer Gbenga Komolafe, FNSE, Commission Chief Executive of the Nigerian Upstream Petroleum Regulatory Commission. That's fine, sir. Yes, that's fine. Joining him, so let me take this, make this excuse for Engineer Tony Etta. He sent in a message that due to some logistics reason, he couldn't fly back from London into Abuja, so he will not be joining the panel. Okay. So joining our panel for this morning is an expert who has decades of experience, who has been with his company for many years, having served as CFO at some point, but now is saddled with the responsibility of answering that question that the IPPG chairman asked. He's the Chief Executive Officer of Seplat Energy PLC. Let's welcome Mr. Roger Brown. Joining them is one of those who add the A in the steam of STEM. He's brought his expertise in finance and economics into the industry, and for many years now, in various leadership roles, has continued to deliver excellence project after project. He is the Chief Executive Officer of Chapal Energies. Welcome, Mr. Ofoma Emmanuel. You heard the ministers say yesterday of oil, the role that the GCEO is playing in helping increase our production. And gas spoke of how NNPC is also playing their part in the heavy lifting of infrastructural development for the acceleration of gas utilization. He is on our panel this morning, the Group Chief Executive Officer of NNPC, Mr. Mele Kolo-Kyari. However, he's represented by the man who is actually overseeing most, if not all, of NNPC's E&P business, the Managing Director of NNPC's Exploration and Production Limited. Let's welcome Mr. Nicholas Folkart. Mr. Folkart. Thank you very much. Thank you. Let's give him a round of applause, ladies and gentlemen. Thank you very much, Mr. Foucault. Okay, so our moderator is one of the few people in this industry who you can say boldly, he's had experience as a regulator, he's had experience as a producer, he's had experience, as a legislator, but not serving in the legislative arm, but advising legislators. Let's welcome the chairman and chief executive of Energeticals Limited, Mr. Austin Olorunsola. You're welcome, sir. So I want you this way. At the very beginning. Yes. But I need to adjust your chair a bit so you can really see your panelists. Okay, so there's one more panelist who will be joining us shortly. He's been held up in a meeting. He will be coming shortly. So once he comes, I'll bring him on stage. And that is the Group Chief Executive of Oando PLC, Mr. Wale Tinubu. He will be CON. He'll be represented on this panel by the Managing Director of Oando Energy Resources, Dr. Alex Irene Ainoje. So once Alex gets here, moderator sir, I'll have him sit next to Mr. Foucault. But for now, please continue.
Good morning, distinguished ladies and gentlemen. Let me just join the chairman of IPPG to just welcome you to this early morning session. I know it's still a bit early for quite a few people, considering that we had a long night last night. But I promise it's going to really be exciting with this top executives you are seeing all here. So the topic, it's transformative deals, Nigeria's upstream future, and we'll be discussing it from two key perspectives. First, to be good to celebrate what I call the new indigenous major energy companies. And congratulations, guys. These are the people who are going to be redefining Nigeria's oil and gas sector. But secondly, apart from celebration, we'll seize the opportunity to have conversations around the upstream future for Nigeria, strategic objectives, priorities, some bit of roadmaps, if possible, governance, as well as the enablers that will be needed to ensure what I call a safe delivery of this transformation. I actually see two shifts really happening. There's a bit of it that is a transition, okay, which defines all the period of the transaction and all. But the end point of it really is a transformation of the whole upstream sector. And we really don't expect that those taking charge today would certainly run it as the IOCs. It's a totally different period. So we are certainly very much into a very different phase of our industry. But that said, I think let's just get going. Let's start with those who have acquired, and then we can come back to our regulators as well as NNPC. So Ufoma, congratulations again for being part of the new Nigerian independent majors. And I'll start with you. What kind of trends do you see emerging in Nigeria's upstream sector? following this whole wrap of divestment process?
Thank you, sir, and thank you again to distinguished panel and members of the audience for inviting us here. I think, first of all, the ability for a relatively new entrant into the market is facilitated and fostered by the business environment. And I think, it's important that we acknowledge the support and the help of the regulator and also of the administration in sort of creating that platform where we could emerge and do the things that we've done. There were a lot of people, entities that were part of this story, this journey on the way forward. But it's very important to acknowledge that a good business environment is relatively important. So before I answer directly, I want to thank NUPRC and Engineer Benga Komolafe for all the work and the support that they've given to us. I think a couple of things are pertinent around this. Nigeria as a country, we've had 50 years of hydrocarbon production. And when Nigeria is one of the few countries or natural resources countries in the hydrocarbon space that at one point in time had 5 or 6 major IOCs in country with multiple assets. And that speaks to the scope and the breadth of the resource base that we have, but also the reliability and so forth. Now, we're coming to a watershed moment as a basin because overall your water cuts are getting over 50%, your assets, your infrastructure has been depreciated, and we need to start making investments for the next 50 years of production. Okay. What is the industry going to look like going forward? And the critical difference here is that you have technology that's come into the industry that has opened up other basins and given the IOCs who traditionally dominate this space optionality. And so, for example, we are seeing investments going into places like Senegal and Mozambique and Namibia, and we're getting to a point where Nigeria is now competing for dollars, even though we have that history and that track record. For whatever reason, there's competition now that wasn't available before. And so the high grading of the IOC portfolios where professionals now looking at projects on a standalone basis as opposed to securing resources across a geographic spectrum means that not only are the IOCs divesting, but this churn in the portfolios will continue for a while. And so we need to step up to fill that gap in a way that also meets our own expectations and our own demands as a country and as a nation. And I think, for the next generation of indigenous players, we have a shared responsibility towards our industry and also to our stakeholders in terms of, ensuring that we can...
They will be looking at things from the portfolio you have in Nigeria here. How do you see that basically going forward in terms of answering the question that the chairman of IPPG really asked that we should discuss in this panel?
So I think it's important to look at it from where we're coming from. So this is, I would say, the third or the fourth divestment cycle. And the difference between this cycle and the previous ones is that we're no longer taking single asset risk. Historically, when we divested from IOCs, the IOC would sell you one field or one OML. And in that vein, you would then be dependent on third-party infrastructure for evacuation, which you didn't control. So in addition to taking the traditional risk on subsurface engineering, etc., we were, in a sense, boxed in, right? And having to live and die on the likely outcomes of one well or a couple of wells is something that has, I wouldn't say has hampered the industry, but it limited the optionality. Yeah. And in this instance now, I would say that for most of the divestments that have happened, they are portfolio transactions. And that sense of optionality is what will allow us, breadth and space. And so I'm a lot more optimistic about this divestment cycle. And if I look at, for example, the ability in this instance, which is something we couldn't do previously, for collaboration between the different IOCs, where there are shared interests in terms of marginal fields, straddle fields, and also opportunities to share and develop infrastructure together. So I think that the overall nature of this divestment cycle lends itself to a de-risked environment where we are hopefully able to play with a lot more breadth and scope. Nigeria is big enough. We may not have assets in other countries yet, but I think there's enough in country for us to play.
Thank you very much for that. Roger.
Yeah.
Let me say congratulations to you too. I think this is about your own second or third round of acquisitions. But how do you see, or how have this recent one, this particular recent divestment, altered the dynamics of the Nigerian upstream oil and gas for you?
Yeah, thank you. Morning, everyone. But let me also start by thank you, because I always like to start with thank you, recognizing, it's only possible when you have alignment with regulators, government, partners, and everything else to get these deals over the line. So it's very important to recognize that and the amount of work, and I'm going to get into that in a second.
Sure.
Seplat is a teenager, I guess you want to call it that. We're 15 years old. We're quite young. We're older than some and not as old as others. But we've been around for a bit, and we've gone through a range of different divestments. I think what we've achieved as a company is that one thing's very clear, right, is below ground, best in the world. And that's what we're all dealing with. So that's the really positive thing around Nigeria, is subsurface opportunities is vast. And that is not just, the onshore and shallow water is mature, and there's a certain way of getting after that.
Sure.
But in the deep water, these deep water opportunities are ranking right up the top of the IOCs. This is why they're staying, and they're going to continue to do the deep water. And we need everyone. With us at Seplat, I think our success has been around a range of different things. One is having a very clear strategy.
Okay.
Having the right level of governance around the company and the intent around that. Having the right people, and probably I should put people first.
Yeah.
The people, and that's what these divestments, by the way, are bringing. The latest round, sure, in asset divestments, you got some people, but not that many. In the latest rounds, we're buying companies, right? So Seplat, we bought Mobile Producing, and in that comes 1,000 people. And these people have been extremely well trained. They're extremely focused, and they were there when ExxonMobil was producing almost 700,000 barrels a day.
Sure.
They were there.
Sure.
Right. So the people bring that value, that knowledge, the experience, the excitement, the partners' alignment is so critical, and that's quite a big change recently. I think in the last sort of 5 years, there's much more intent now, I think, from the partners to actually get after this, and then support of the government. So I think it's a bit of a mix. It's a bit of a, bake a cake, you need all ingredients. We need all the ingredients to deliver here. But when certain people look at this and go, oh my goodness, what does it mean for Nigeria? The answer is unbelievable opportunity and an unbelievable excitement. So when I looked at it, we predicted this back in 2010. It was when Seplat started, we saw the divestments coming. Now, albeit, I must say, and no one predicted 5 in the last year of the scale that we've seen, right? And that is a global scale. And that's why I've got to thank my individual next to me on the right, because to handle 5 divestments the way that NUPRC did do it, was incredible. So I think we have to clap for ourselves, don't we? As a country, to get through there.
Thank you, Roger. Thank you. But I just want to stay on the people aspect. The people. So as lofty as it is, you're getting a lot of experienced people who actually know the assets and everything. Fantastic. But how do you intend to manage the DNA issues? you know, because you are not ExxonMobil, you are Seplat, you know, and you are bringing in a lot of different people coming from different backgrounds and all that. How do you intend to actually really manage that?
To manage the
DNA issues.
The DNA issues.
Yeah.
Okay. All right. Well, look, I mean, I think on that, first of all, certainly there's been a lot of studies done on the DNA and everything else. But what I'd say is that we're about to spend quite a lot of money.
Yeah.
Okay. So we're, you know, beyond what we're looking at is obviously there's a lot of short-term oil gain opportunities, particularly if I look at what we've bought for the mobile producing. We're only producing out of 1/3 of the wells, right? So 2/3 of the wells are locked in. We have over 400 wells locked in. So we're going to get after those wells. That makes a lot of sense.
Yeah.
We're working through our infill drilling campaign, and when I say it's a campaign, it's lots of wells.
Sure.
And then look at other opportunities. You know and exploration opportunities. What that's going to do is push out the life of these assets.
Yeah.
Okay, so I think, you know, when one party retires, and it's kind of retirement, except that you retired at 60. The IOCs have owned these assets for 60 years.
Sure. There's
There's new people coming in. There's new ways of getting after it.
Sure.
And we're going to push out the life of the fields. So where we had look at decommissioning, abandonment, I think in the case of the blocks we've bought, 2040 to 2060, we're going to push that later.
Okay.
And that'll have implications for DNA. Of course, we'll follow the PIA and we'll follow the regulations. But actually, we will really look to see a lot longer longevity in these fields after we get after oil, after we get after gas. And the exploration, I think one thing that we've seen on our legacy assets that we bought in 2010 is, you know, we need to start to now look at exploration opportunities in scale. There's a lot more, we believe, in the deep. There's a lot more potential, and I think that will then transform and create a longer life for these assets.
Thank you very much. I thought you would give him a round of applause for that. So let's go to NMPC. Nicholas, thank you for joining us, sitting in for Mr. Chiari. I know that at this time you are neither buying or selling, but that's okay. That's okay. But one major shift that certainly will change for you is the fact that you are going to be having totally new partners. So it's no longer the ExxonMobils, it's not the IGPs, it's not the Totals of this world. How are you preparing for that?
Okay.
Yeah.
Okay. So I'll look at it. I mean, you know, in the upstream business in NPC, you know, we've got two sides. One is the n.i.e.s side, which has been dealing with the IOCs. And those where the new partners are coming, like Seplat or the SEPNU. And then if I go to NEPL directly, we have Oando, we came, so if I answer on the side of NEPL, I mean, for me, first, it's not a new partner. No, Oando was already there in the asset, which is a good thing. It's an advantage for them. I think that's one of the benefits, having an existing partner who knows very well the asset coming in, so I don't think it's going to change it. I don't see any challenge on that in terms of relation and having them on board. I think even in the other assets, I will speak for n.i.e.s in this case, but Seplat is also a well-known partner. We know everybody in Seplat. In NEPL, we've got Seplat West. We know exactly how to work together. We know their way of working. We've got good engagement. It's the same on n.i.e.s. So the good thing is that actually you've got companies who we have already existing relationships with them.
Sure.
So I don't think for me, I don't see that as a challenge. And it does require a lot of preparedness, I think. If I look at the challenge, I see a lot of positive for those companies coming. But they will face the same challenge as we all have on the supply chain, on the people aspect. I think we need to make sure, for me, the funding side that we will have to be careful about. Okay. That's the difference probably with IOCs. We know that. So that's where I think our focus will be, at least in NEPL, make sure that the funding is there.
Sure.
That's probably the big question mark.
Sure. And we're going to be talking about financeability and funding in the course of this morning. But let me go now to Engineer Kamolafe. These IOCs, how do you see Nigeria's regulatory environment adapting, hand-holding the next 3 to 5 years, even maybe more? I just want to know how you see the regulatory environment adapting to supporting all this new indigenous major.
Everyone for having me, and thank you, the moderator, this morning. For us as the regulator, the NUPRC, with the divestment, that's the 4 divestments having taken place, we are quite prepared to handhold the new entities in a manner that we're able to unlock the huge potential, that is our hydrocarbon potentials in the industry. And I must say this, and that is going to answer the question by the lead speaker, that is the chairman of IPPG, and he raised a very important question which aligns with the question raised by the moderator, which is very key. Given the fact that these 4 divestments holds huge potential for the that is achieving our target as a nation, that is our oil production target. I want to say that is in the first instance that we have put in place structured approach. If you look at the way we actually handle the divestment itself, we envisaged that is post-divestment challenges, I will put it, that is making the divestment successful in the structured approach that we proactively put in place. Like the regulator put in place 7 key pillars. So if you examine each of these key pillars, they are very futuristic and proactive in nature. Okay. For instance, one of the key challenges that could make or mar that is the divestments, post-divestment life, is the technical and financial capability of the acquiring entity.
Correct.
So we had proactively envisaged that without the capability in terms of the technical and financial capability of the acquiring entities, the divestment might not be successful post-divestment life. So the regulator has ensured that, first and foremost, the acquiring entities must possess the, that is technical and financial capability. And that is why we made sure that we diligently scrutinize the submissions by the divesting entities.
Yeah.
And of course, we were able to do this on record time. Another issue that could make or mar, that is the divestment, post-divestment life, of course, is we are having industrial relations issues, that is, industrial relations issues, and of course, host community issues. These are very key issues, again, that could retard the, that is progress, that is acceleration of implementation of the divestment. Again, we put in place structured measures to make sure that these the divestments are not encumbered in any manner in this respect. Then, aside from that, very key, we recognize that there is the need. Of course, we are lucky in the manner that the 4 entities that is acquiring entities are not going on in the business. So they are entities that, in terms of possessing good corporate governance, so we can say that about the acquiring entities, Seplat, Shapa, a number of them, they've been in the industry, so they quite understand the DNA of the business. So they have, good corporate governance. So in one of our regulations, of course, we try to address to ensure that entities within the industry possess good corporate governance. Then aside that, like I spoke about the host communities, what we've tried to do in terms of ensuring that post-divestment, or let me put it this way, that the acquiring entities do not carry, that is the burden of pre-divestment liabilities in the whole divestment process, which is very key. So we were able to decouple between the pre-divestment liabilities and post-divestment liabilities, because the acquiring entities might not be seized with all the facts as to knowing the liabilities they are acquiring. So the regulator diligently ensured that we decouple between the post-divestment liabilities and pre-divestment liabilities in a way that the acquiring entities will not bear unnecessary burden, so they can focus on on production as they begin to implement the divestment. For instance, we separated, we decoupled between that is decommissioning and abandonment obligations between the divesting entities and the acquiring entities. So we ensure that the divesting entities fulfill their obligation as relates to pre-decommissioning and abandonment obligations, so that the acquiring entities don't have to grapple with that as they begin to implement the divestment. Same for the host community obligations. So we equally try to decouple to make sure that the acquiring entities will only focus on their host community obligations when they take over. So we had thorough engagement between both parties to ensure that all these liabilities are properly situated. So that is very key, because these are issues that could that is the implementation of the divestment. Of course, we follow the trend in other nations that have gone through the rounds of divestment. In fact, we closely look at the model, the situation in Venezuela. That is the divestment in Venezuela, the one in Saudi Arabia, Kuwait, and Iraq. So we studied all these various models before embarking on the decisions we took as a regulator. So we recognize the pitfalls, the challenges, that Venezuela faced, the consequences of divestment there. So on the basis of the experiences, the case studies of these various countries that had gone through the route of divestment, we were able to develop a robust divestment process that we feel, will be better for our nation. And so that is what we put in place. Then, again, like I said, the question posed by the chairman IPPG is very important as to how we'll be able to make the divestment function. So we put a measure in place, that is post-divestment, life to aid seamless implementation of the divestment process as we midwife, that is the divestment implementation process. So maybe I pause at
Thank you. This man is at the center of it all. He's neither buying nor selling, but at the end of the day, he basically has been the one carrying all the. Please give him another round of applause. I think Oando has just joined us. So before I dig deep into your strategies, let me just ask you something at a very, very high level. If you can walk us through how you see the Nigerian oil and gas landscape post this raft of divestments?
Yeah, thank you very much. Apologies, I was hoping I would just come in for a photo op and go, but I see I've not been able to escape that. Thank you to NIES for putting this together. As usual, we're now used to this, so we know what to expect, and it's glad to see it's getting better. One of the fundamental things that we see post-divestment, and I talk about this all the time, is sometimes things need to get really bad for everyone to get serious about the problem. And I think as a country, when we hit the lows of 1 million barrels, 700 was what I had, but 1 million is what we say pretty much was our lowest point. I think at that point, everyone realized we're on our way to bankruptcy as a country.
Sure.
And if we didn't do something about it, then we would certainly not be able to tell a history, at least for those in this room, that represents some of the efforts we have brought to bear. And I think that resonated with not just the regulator, but the IOCs, local indigenous companies, and all the parties involved. And for the first time, there is a true alignment in purpose. Now, of course, we're not getting everything right, and there's still a journey to walk on that piece, but what I see in the singular thing is that we're all aligned on the fact that we must continue to increase the country's production in a safe and sustainable way. And the idea that our crude or gas or any of our commodities will not make it to sale point is sacrilegious in the highest regard, in the sense that it shouldn't be the case. So you see the security forces, IOCs, the regulators, the local companies, building the capacity to tackle these problems. And we can only do it together. I was speaking to a colleague of mine yesterday who said that as we move forward as independents who have acquired these companies, we need to be clear on, actually I was speaking to you about it, talking about hand-holding.
That's correct.
And how we must continue to ensure it is a collaborative future.
That's correct.
When I go out to look for a rig, I'm speaking to Bite, I'm speaking to Demola, I'm speaking to my brother Abdulrazaq and saying, what are the things we have to do and how should we do it? When I'm thinking of security, I'm thinking the same. How do we do it collaboratively? When we're thinking of terminals and infrastructure, how do we share? And for us, those are the big changes.
Working together.
Working together, yes, the alignment.
Yeah. Thank you. And thanks for that. Please, let's give him a round of applause for that. But I just want to then dig deeper, since I'm still with you. In terms of your own strategy as Oando, what strategies are you then really putting in place to really accelerate value creation for your company and the country, of course, at large?
I don't know if Nicholas has spoken, he's probably spoken to most of them, but
that wasn't my question.
that was good. So what we see is, and one of the encouraging factors of taking on these assets was the fact that the IOCs have a very unique operating model, and nothing wrong with it, it works for them, but you would find that these 30, 40-year-old fields require a slightly different approach to how you tackle the problems. Largely blown down, energy in the subsurface is waning, and you've got to you've got to approach the reliability and facility uptimes in a slightly unique manner, and I'll talk to some of those. We know for a fact a brownfield development would need to be sensible about cost. Yeah. We also know that for those molecules to get to sell point, we need to have uptime. And if you take those two components alone, the cost base of the larger companies, the IOCs, just can't carry the JV. So our approach is very simple. We optimize the base, which is improve every single molecule behind pipe and get it flowing through our local engagements, working with the security forces, and ensuring that we have a sustained flow, because that's typically what impacts your average and all the other elements that we calculate numerically for production. We then have a very lean approach to project execution. And I say lean because, again, we've dealt with the issues of bureaucracy. We've seen the presidential executive orders come to address some of those issues. But we're planning and engaging more. So my partner sitting right next to me, we have a very clear idea of what we're going to do over the next 5 years. We're planning for what we're going to do over the next 3 years.
Strategic collaboration, basically.
And that really is at the core of it. Yeah. The other elements are just in the execution excellence. We don't have a lot of time. And as a country, we certainly don't have the runway not to hit those barrel targets that we've set ourselves. So for us, everything is relatively urgent. So the cycle times for the executions are much shorter than we've experienced in the past. The final thing I wanted to just add to that is the host communities play a big part in the ability to deliver any of this. And that engagement has to be robust, it has to be true, and it has to be focused on improving the current state to a future you can paint and deliver to them. Now, that for us is very important because in some of our other marginal field assets, we've been able to achieve that. So taking that over and replicating that in a much larger scale is our approach. So that sort of summarizes how we deal with it.
Thank you very much for that. Please, let's... Ufoma, let me just twist that same question around and just say, how is Chapal basically positioning to capitalize on all these opportunities that are coming into your hands now?
Thank you, sir. I think
especially in driving production. That's really important.
So I think for different assets, there are different strategies, and given our size and scale in terms of how we fit into that. So both of the assets that the one we've concluded and the one we're concluding, we're coming into a non-operative position. And so I think the first thing is you want to have a very robust and dynamic relationship with your operators to ensure that you are essentially in a position to add value in terms of how you engage, etc. I think the deep water asset is quite a significant position, and if you look at the resource base in terms of what is currently being produced versus what can be produced, I think the discovered undeveloped resources by a factor of 3 outweighs what we're currently producing. And so from our perspective, the primary focus is saying to the current operator, which is Chevron, what are the things that we can do to help? How can we be helpful? As a smaller local player, how can we help facilitate the process of operating this asset, given idiosyncrasies like dealing with MCDMB, getting your permits on time, dealing with the regulator. And it's not to say that they are not able to do these things themselves, but I think it's just a question of, some things we can be more nimble with, and other things we want to be able to sort of facilitate and help in that conversation. Now, looking at the discovered but undeveloped resources, I think this is where we play a key role, and it's going to be where the bulk of our efforts is focused on. A lot of these assets are gassy, and Nigeria has a unique role to play in what we call the emerging gas OPEC. So if you think about OPEC as a body today, it controls 38% of global oil production. Okay. And with price cuts, OPEC effectively can move the price. But if you look at the global gas market that's evolving, between now and 2030, all FID for FLNG, LNG projects is controlled by 3 countries. It's the Qataris, the Americans, and the Australians. Sure. So the gas OPEC is going to be significantly more powerful than the oil OPEC that is. Sure. I mean, they may not call it OPEC, they may call it something else. GCF. But I think there is a global oligopoly around gas. Yeah. and Nigeria is not yet part of that evolution, even though we have a resource base that should put us right at the heart of that.
Sure.
But probably more compelling for me is the fact that from a logistics standpoint, Nigeria is about just under 5,000 nautical miles from mainland Europe, and all these other players have much longer distances to travel. So our molecules are cheaper, and we will beat Henry Hub by $1, $2 every day of the week into mainland Europe versus these other areas. So it creates an opportunity for us to create a new business market that is part of a transition into a cleaner energy. As an African and Nigerian, we see gas as our transition fuel. And again, this is not to lower the importance of alternative sources of energy like wind and solar, etc. But I think it's important that we recognize that there is no high-income country in the world that has a low energy intensity. So we need to develop our energy resources for our use and also to grow our economy. So unashamedly, we are oil and gas people, and we will drill. Right? So, yeah, just saying.
Thank you for that.
So, in looking at the discovered but undeveloped resources, this is where we focus on. And for me, it's about ensuring that we can bring this asset into that development pipeline. And in that portfolio, we have discoveries that have oil, condensate, gas, etc. And if we then overlay the combination of becoming a swing supplier into Europe, that could potentially complement volumes from NLNG, and developing liquid molecules that would otherwise be stranded, it creates an opportunity that wasn't there historically. And if I look at the hub, because we don't see, in the deep water, we don't see it as OML by OML, we look at the hub. We see a world-class asset in Agbami that has, I think we have over 50% ullage, available capacity. Less than 50 kilometers away, we have another world-class asset in Egina. We have Akpo. So to the extent that when we get to the point where we're looking at development options, it's not necessarily greenfield. We're not going to go build another brand new FPSO. There are conversations that we can have with the partners in that area. In that neighborhood, we have Total, we have ENI, we have ExxonMobil, we have Chevron. And so for us, our role is pushing the development of these assets through that FID corridor to the point where we can sit down and say, let's have a conversation about how we handle these resources. And in the deep water on this side, we have over 15 TCF of gas and over 1 billion barrels of liquids. And that in itself represents a production profile that would take Nigeria as a country another 20 and 30 years to harvest. So this is how we see ourselves working with Chevron and the partners on the deep water. Again, the commission has been incredibly helpful. In fact, when we met with development plans, actually took more time than the actual divestment itself. And as a consequence of that, they gave us certain mandates. So we are looking to start the seismic program this year. And we're excited about how that asset will the value that we can bring from that asset going forward.
Thank you, Foreman. And I really like the fact that you actually went into gas, because when we talk about production growth, it's not just oil, it's also gas, and especially deep water gas. So thank you very much for that. I just want to give Roger also opportunity to answer the same question in terms of strategies for Seplat in terms of actually bringing production growth to realization. Then we can begin to wrap up. 2 minutes.
I'll try to be summarized here. It's pretty clear it's on 3 levels. So first level is upstream oil and gas, and of course with this new acquisition, we're going to get after and grow production, not just on existing assets, but obviously the new set new assets. But at the same time, we need to decarbonize that. We do need to be very mindful of ESG. and look to eradicate Scope 1, Scope 2 emissions is very important. That's really important, access capital and other, and to be also a responsible operator. Okay. So that's one level. Next level is obviously gas. And for us, we invested in gas in 2012 when only an idiot would have invested in gas in 2012 because there was no value to it, but we saw the future. And we saw, and we can't create jobs, we can't create healthcare and education and advance the nation without electricity, and affordable, reliable electricity. But it's going to be gas, right? And so for us as a company, whilst we have a domestic supply obligation, all of our gas on the legacy assets is domestic, right? So we're going to we'll have an operations alongside our partner, 850 million scuffs a day producing this year. If I add in thank you. If I add in the Exxon assets, they're mobile, we're almost we'll be a BCF a day, okay? And we want to grow that massively. And so there'll be a mixture of domestic gas, there'll be export, there'll be all the products around gas, will it be CNG, LPG, around that. And we're going to look to see if we can follow that molecule, whatever makes sense for us as a business. And then the third plank of our strategy is electricity. But again, for us, it's taken us a long time because A, the DNA of electricity is very different. Sure. But B, we need to someone needs to supply that gas, right? So you've got electricity providers in country, they need feedstock supply. Yeah. And Sepet's been one of the most reliable feedstock suppliers. So I think we'll sit more in the gas expansion end, and then at the right time get into electricity. And then deliver that transformation for Nigeria. Now, it's all about lowering the cost of energy. Talk about energy security. When Abdulrazaq charged us with that, how are we going to make a difference to the lives of people in Nigeria? Absolutely. It's going to be cheaper electricity. It's the only way we're going to do it. And without that, we can't develop this country. So that's our commitment.
Thank you, Roger. Thank you. Yeah, time goes so fast. So it's already 1 hour gone. Richmond.
Yes, sir. Thank you very much. Let me quickly welcome Mr. Ostagi Okumbo, who will give us the final thoughts in this session. Let's please welcome MD SPDC.
A pleasure to, when it comes to the business of divestment, I've been in it for the past 10 years, so I'm probably the oldest in the game in this regard. So I've seen many twists and turns. But I think the place to start is to indeed thank most sincerely our president, who doubles as our minister for petroleum, for bringing these latest rounds of divestments to conclusion. It was at times rocky, for reasons that the CC mentioned earlier. And I also want to take this opportunity to thank him deeply for the challenge. He was quite challenging. He just mentioned the passing his 7 criteria. Each of those criteria, trust me, was like going through surgery without anesthesia. So, Sisi, me and you, we debated quite a few times, but ultimately I think it was for the benefit of the country and for the industry. So I really want to, on behalf of all of us on this side, really thank you. I'm IOC, but as many people know, I'm a very, very strong believer in this transition that is happening. I think we have a set of capable and very motivated parties, as you could have heard from the panel discussions, who are taking over these assets. I think the minister did a good job yesterday of trying to explain that it's not the exit of IOCs. As a matter of fact, I think we're probably investing more in the country. Taking my own company, for example, we're investing more in the country now than we've ever done, but it's just in a different parts of the terrain in deep water. Do best, but also essentially shifts the onshore and deep water. And I strongly believe both parties can coexist for the benefit of our industry and the country. I really do think we don't go into a world of competition between indigenous and IOC. As you can see, NNPCL is represented by an expert. Roger is there. I am IOC, I'm Nigerian, so the industry is so the industry is a lot more unified than we all think, and I think we can really, really work together. We have a very welcoming and a very accessible regulator. It's not always an easy regulator to get past, but he's always available. As you can see, he comes to the panel to sit here today and join in the discussion. So I think the industry will benefit from it. So, Mr. Regulator, I really want to thank you. I know from close collaboration with many on this side on the panel that there is a deep energy to grow production. And that is what the country needs right now. And I just believe that the unique capabilities that they bring, you have heard some of them mentioned today, that they bring to the table as indigenous players, I think will serve this industry very well. And I really want to wish you well. We'll be on the sidelines, essentially applauding you, and frankly holding you to your promise, holding your feet to the fire. Many of you have actually put on the table very, very ambitious targets of growing production. And I'm sure the CCE, the minister, everyone would be essentially watching out for you, supporting you, but very, very promised land. So again, thank you, Austin, for great facilitation, and thanks to the panel member. We all wish you well. We'll be here watching and praying for you.
Section, sir. Please present this to him for speaking. Leave now to attend. Thank you very much. Let's give them a round of applause, the panel lady. Allow him go so that we can give you your plaques now, so we can just end the panel now, correct?
At least 1 minute each, because there were some questions that didn't. Just 1 minute to wrap up, and then we'll thank you excellently. Thank you.
Given the prize.
Your time starts now.
Good. Just the way the time has started, I think the industry's clock has just been reset. We truly hold the future of this country in our hands, the future of any forms of divestment, and truly prosperity for Nigerians. I think across this entire panel set, I see a group of people I've had to also work with in the last 18 months, and I know very few that are better than them in the world. So we have the team, we have the impetus, we have the alignment, we have the country, and we have the president that's interested in driving this right from the top. So my final words would be, let's just do it. Thank you. I think that was one.
Let's just do it. Okay.
Thank you. So I think his key word is alignment. No, actually, you didn't ask about NEPL strategy. But if I talk about NEPL strategy, it's very similar to what Roger and Alex have explained. No? So I think alignment is key. And as I said before in my intervention, I think personally I see it positive, what is happening at divestment. I'm sure we're gonna see a lot of production growth with the new players. We know them very well, and I think that alignment, that's what we've been doing, at least in NEPL. We're doing very closely. We know exactly what we're going to do in the next years, and I'm sure it's going to be a very, very positive. And we'll see the big results actually in the short term. We should see that already happening. So again, for me, the final word is positive transformation.
Thank you, Nicola. So it's alignment, alignment, alignment. Roger?
Okay, I was going to say it's a renaissance, but that name's already been taken. So I'll drop
Okay.
that one and call it a new dawn. I think it's a new dawn for Nigeria.
Yeah.
and the people of Nigeria. I think now we have much more alignment than we've ever had, certainly since I've been here, in the IOCs, the indigenous, the government, the presidency, the drive to get this up. And we're going to transform Nigeria. Nigeria is extremely exciting. The desire to get the production up to 2.75 to 4 million barrels. It's very achievable, and we're all going to do it. And the pledge I bring here today is that Seplat Group is absolutely going to be a very dominant part of that growth for the future. So thank you.
Thank you. So it's a new dawn. Ufoma.
Thank you, sir. I think most...
CC will wrap it up, so don't worry.
So I think most of I think the pertinent themes have just been spoken on, and I don't have too much to add to the themes of renewed sensitivity, ongoing in everything that we have done and the things that... Collaboration.
CC.
Thank you. You have a nation, you have an enabling president, and you have a regulator that rich in hydrocarbon.
Yes.
At the point Venezuela or a sweet pill, our huge hydrocarbon.
You also were one of the winners of the Industrial Recognition Award deals of 2024. That was from last night's award. The year. The other two received operation experts. And of course, regulatory experts as well. Completing the number is our opening address speaker, Chairman IPPG, Alhaji Isa. Thank you so much. Okay, so this is, yes. Yeah, we will, you will. So once we're done, you take a picture. Now, once you take this picture, this is what we're going to do, right? I would ask the speakers on this panel who are not in my next panel. Oh, sorry. Who are not in my next panel to please proceed to the speaker VIP room for debrief, while we would leave the likes of Mr. Foucault and the CCE, who are with me in the next panel. Family photo. Ogaisa, please. SG, photo. Ogaisa, photo, please. Photo. Please rise for photo. Please come. Augustine, photo. Please rise for photo. Go ahead. Please rise for photo. So we are going over to the next panel immediately. The ministers have been standing, waiting in the holding room. We're going straight to that panel. You remain seated with us. We're moving on swiftly. The speakers, the moderator, Dr. Aino J, Mr. Brown, Mr. Emmanuel, they will be moving over to the speaker holding room. Please do not stop them in the front here because the other panel is coming in immediately. Please do not stop them in the front here, please. Do not stop them in the front here. Thank you very much. Please do not stop in the front here. Now, we want to say a big thank you to our sponsors for this session, Oando Energy Resources. Now, please give them a resounding applause. Thank you for sponsoring. And just give us a few minutes and enjoy this video from our sponsors.
Thank you very much.
Please remain seated. We're moving over to the next panel. Let's watch this video. Technical, what are we waiting for?
Was to build this world-class energy company built by Nigerians, owned, proudly indigenous.
New company, new thinking, different approach to the traditional business. We found it necessary to rebrand.
ConocoPhillips was a game changer for all of us. Huge deal, but it's put us on the map. That not only is Oando ready and can upgrade the asset, they believe that this is the start of a new dawn.
All right, thank you very much. Please now be seated. Let's allow the ministers access to their seat. Please allow the Honorable Minister of State or Honorable Minister of State Gas access to their seat. Thank you very much. And now be seated on your own respective seats. Our panel is ready to go. We are set. We have 2 addresses before the panel will take center stage. On the panel, please take your seat. 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 Please. Look at the panel is on the stage already. The panel is on the stage already, and I have Mr. Matthew Bouye online. Mr. Bouye, good morning. Please confirm you can hear me. Technical, can I talk to Mr. Bouye, please? Technical.
Can you hear me?
I need to hear Mr. Bouye before I take the first speaker.
Yes, can you hear me? I can hear you very well.
Okay. Good morning, sir. Bonjour.
Good morning. How are you doing?
I'm very well, sir.
Good. Nice to be here.
Photographers, that's okay. Thank you. Please go to the flanks now. Thank you. Thank you. Thank you. Thank you. Good morning, distinguished Senator Heineke Brisa. Good morning. Right Honorable. Good morning, sir. You're welcome. Thank you. Please, I want this place free now. Thank you. Please, please. Please, can we be seated? In the right of the hall, please be seated. Thank you very much. Please, can the lovely ladies there be seated? Thank you. Thank you very much. Can we simmer down with the noise a bit? I think the noise is generating the heat. If the noise stops, the room will be cool. So please, let's stop the noise for the room to be cool now, right? Thank you. Can this door area be free, please? Please take your seats. You don't see, there are dignitaries seated all around here. Can we not block them? Please just go to the flank, please. Thank you, everyone. Thank you very much. Thank you. You're all far too kind. Great. Please give yourselves a round of applause. Thank you so very much. Thank you. All right. So as I said, we have 2 addresses. One is from the CCE, the other from the Minister of State Oil. But before that, let me tell you of those who are already seated here. On the panel, we have Mr. Mele Kolokiari, of course, GCEO NNPC, represented by the MD of NEPL, Mr. Foucault. Thank you again for joining us. Thank you so much. We have the Managing Director of HERS Energy, Mr. Osayende Igihon. Good morning. Thank you very much. He's there already. We have virtually, you've heard his voice, the MDC of Total Energies companies in Nigeria, Mr. Matthew Bouye. You heard him earlier. You will meet him when it's time for him to speak. We have the Managing Director and CEO of SunTrust Atlantic Energies, Mr. Ugo Okafor. He's on the panel already. Yes. We have the MDC of Aradel Holdings PLC, Mr. Adegbite Falade. He's on the panel already. We have the MD and CEO of Chevron Nigeria and Mid-Africa Business Unit, Mr. Jim Swaz is on the panel already. A very good morning. We have the Chairman and MD of Exxon. Is it ESSO now? Oh, okay, thank you. Mr. Shane Harris is on the panel. Thank you very much. The Chief Operating Officer of Lake Oil is also on the panel, Mr. Sam Olotu. Thank you very much. And then the moderator, after the two early speakers will be Mansour. Mohammed is the head of West Africa Upstream Content, Sub-Saharan Africa Oil and Gas for Wood Mackenzie. Now to close will be the Honorable Minister of State Gas. But let's begin the conversation around African upstream from resources to revenue. Welcome the Public Sector CEO of the Year and our policy change maker for the year. Welcome Engineer Gbenga Komolafe, FNSE, CCE, NUPRC, as he begins with the opening address.
Good morning, everyone. Once again, as you can all see, when the regulator is busy giving oxygen to the industry, reflating the industry, and you see the two ministers of state under a president that is very committed to business, that says Nigeria is ready for business. That is President Bola Ahmed Tinubu. And you see the two ministers of state, the Minister of State for Oil, the Minister of State for Gas, all collaborating together. Just the same way the gas, that is the hydrocarbon exists in the associated manner. Is that not awesome for our nation? Please clap for yourself. I think it's a very exciting moment for us in the industry, ladies and gentlemen. It's a very, very exciting moment since the beginning of this event. And why am I saying it's very exciting? We're at the point when the industry is witnessing a rebound in a manner that we all agree that we have quite a lot to celebrate as an industry, and of course, as a nation. There has been a number of significant growth, development, and achievements that we can celebrate as an industry. And that from what we have all listened to from the previous sessions. So, Your Excellencies, captains of industry, other industry stakeholders, gentlemen of the press, ladies and gentlemen, I am particularly pleased to present this opening address today at the 2025 Nigeria International Energy Summit. As we are all aware, the theme of this session is Transformative Deals and Nigeria's Upstream Future. While commending the organizers of the summit for sustaining the laudable ideals that NIES represents, it is appropriate to start this session with an address titled Imperative of Regulatory Efficacy in Optimization of Upstream Activities. This topic will provide the foundation for our esteemed panelists to delve into the critical conversations shaping the future of Nigeria's upstream oil and gas sector. There's no doubt that the Nigeria Upstream Petroleum Regulatory Commission stands as a powerful catalyst for the growth, sustainability, and global competitiveness of our sector. The Nigeria oil and gas industry is the heartbeat of our economy, contributing 95%, that is at the last check, of foreign exchange earnings, and 70% to government revenue, unlocking employment opportunities and positioning Nigeria as a formidable leader in the global energy arena. Yet, sustaining and accelerating this momentum demands a regulator that is visionary, predictable, firm, transparent, innovative, and business enabling. We are proud to remark that the NUPRC today strives to sustain all these attributes of a 21st century regulator. This address briefly outlines how NUPRC's strategic regulatory interventions are attracting investment driving production optimization, enhancing local content and technological innovation, promoting decarbonization and social inclusivity, thereby securing a future of resilience and prosperity for Nigeria's oil and gas sector. Ladies and gentlemen, at the heart of NUPRC's effort is the growth of Nigeria's hydrocarbon reserves and production in a cleaner manner for enhanced revenue generation. In the short term, we have set new benchmarks for oil and gas production and significantly strengthening the nation's energy security. Our achievements speak for themselves. Between 2023 and 2024, oil reserves increased by 1.43%, reaching 37.5 billion barrels, while gas reserves grew by 0.21%, reaching 209.26 TCF of gas. In particular, rig count increased from 8 in 2021, now standing at 40 rigs in the industry. And by our projection, the rig count in the industry is projected to hit 50 by end of March. This is a huge achievement. Ladies and gentlemen, we expect production to equally increase by 70% from 1 million barrels in 2021 to the current production of 1.75 million barrels. These accomplishments are not just numbers, but are parameters for measuring vibrancy in the industry driven by effective regulatory policies. In pursuit of our goal to reach 40 billion barrels of oil, 220 TCF of gas, we have vigorously pursued strategies to stimulate exploration activities and accelerate development. As part of these efforts, the Commission successfully completed the 2024 bid licensing round and awarded 27 petroleum prospecting licenses across the various terrains. Efforts are also on for the 2025 licensing round. So those of us in the industry who are interested in, and of course, I can see the faces of a number of our foreign investors. So we are using this opportunity to equally announce that the Commission is already preparing for the 2024 licensing round. So it's an opportunity for prospective bidders to be getting prepared to participate in this very important exercise to unlock our huge hydrocarbon potentials. This proactive approach empowers informed decision-making and fuels strategic investments that will shape the future of Nigeria's oil and gas sector for shared prosperity. Nigeria's vast oil reserves present a remarkable opportunity for growth and economic transformation. While our current production averages 1.75 million barrels per day, as I've said, our technical potential, that is the technical allowable, stands at 2.24 million barrels of oil per day. That is a growth from the initial 2.21 million barrels of oil per day as a technical allowable. So the implication of this is that the regulator now has a line of sight that we can produce 2.24 million barrels of oil per day. That is the import of that data. The Commission is working assiduously to bridge the gap between the actual production and the potentials through actions aimed at improving transparency, driving collaboration with the A&P companies, ensuring financial viability, fast-tracking field developments, approvals, adopting cutting-edge technology, improved oil recovery technologies, reducing costs, eliminating entry barriers, and of course, optimizing production. The potential for increased production is immense, and NUPRC is committed to unlocking every opportunity. Our efforts to reactivate shut-in wells, and leverage low-hanging fruit will bring us closer to actualization of the Project 1 million barrels additional production target that was launched during the NUPRC-R3. So, ladies and gentlemen, you recall during the NUPRC-R3, we did not just make the event a merrymaking event. We used it strategically to launch the Project 1 million additional incremental production. The philosophy, like I said, behind that objective is to leverage the power of collaboration, teamwork, because we recognize that the industry, of course, the industry is well-resourced. Looking at the faces of everyone here, Nigeria industry, judging from our almost 70 years of exploration and production, we have the experience, we have the people, we have the know-how, but the industry is well-resourced. Nonetheless, the paradox of it is that we have, as stakeholders, existed in silos. So we, recognizing that, we chose to leverage that power of collaboration that bathed the Project 1 million barrel initiative. And I'm proud, I want to announce that as at the time of launching that initiative, our production was at 1.5 million barrels. So by today, we have been able to add about 250,000 barrels a day, which is significant enough. So the NUPRC will be monitoring, that is the performance on day-by-day basis, be able to bring all the players along the value chain, even including the funder. The funders, because we recognize that one major challenge in the industry is funding. So we've tried to midwife both the funder, the rig providers. As a matter of fact, we've launched a rig intervention unit in the NUPRC so that we could have line of sight into available rigs, and this is part of how, as a proactive regulator, we are equally helping to assist both the, that is to ensure successful implementation of the divestment program, and of course, the PPL awardees and holding them. So for you as industry stakeholders, you have issues with rig availability. We have a unit in the commission that equally helps to attend to that. Like I said, our efforts to reactivate shut-in wells and leverage low-hanging fruits opportunity will bring us closer to that 1 million realization. So we are steadily progressing actions also on the advanced cargo declaration solution and the engineering audit of upstream production. That is all tailored towards ensuring that we curb leakages and we facilitate transparency in hydrocarbon accounting measurement. It's a statutory prescription under the Petroleum Industry Act, so we are committed to that. So at NUPRC, transparency is the cornerstone of our regulatory approach. We have introduced innovative regulations to improve hydrocarbon measurement, combat crude oil theft, and enhance hydrocarbon accounting. Through our upstream divestment and exit guidance framework, we have ensured smooth asset transitions, attracting new capital and expertise. In collaboration with industry stakeholders, we have developed 24 forward-thinking regulations to bolster energy security, address transition risks, and foster a resilient, competitive upstream sector. Ladies and gentlemen, for us as a regulator, sustainability is not just a choice, it is an imperative. As the global focus shifts towards a low-carbon future, NUPRC is embedding sustainability into upstream operations, mitigating environmental risks and protecting communities. The key actions include managing methane and greenhouse gas emissions, fostering energy efficiency and carbon credits, promoting investment in carbon capture, utilization, and storage, and of course, trying to enforce environmental and social goals in our field development approvals. Through the Nigerian gas flare commercialization program, approximately about $2.5 billion in investment will potentially be unlocked, generating huge revenue and creating significant jobs for our nation. NUPRC's commitment to shared prosperity is equally demonstrated in the effective implementation of the Host Community Development Trust as provided under the PIA, because we recognize that without communal peace, that is without peace in the host communities, we listened to, some of the panelists in the previous session, they equally highlighted that facilitating peace in the host community environment is very key for us to achieve this lofty objective of meeting our national production. So again, the task of NUPRC is very huge. We are equally at the forefront of driving peace in the host communities as provided in the PIA. So in this respect, within a timeline of existence of the Commission, we have been able to, as of today, incorporate 154 host community development trusts. And that is huge, 154. And with that, we have been able to facilitate about 250 billion naira into the accounts of these various host community development trusts. So that itself has resulted in flagging off of 198 projects in the host community, within the host communities. So the combined effect of all this effort is that we expect to see collaboration, peace, and inclusiveness in the host community that will self-impact positively in the activities, operations of the industry in the host communities. Don't forget that that is abandoning all these key areas, led to, that is militancy in the host communities. The people of host communities are very good people. They are normal human beings like all of us. So it is because of the neglect in the past years that actually precipitated the ground for militancy. But with what we are doing now, you begin to realize that people in the host communities are very, very patriotic people who are equally committed to seeing growth in the upstream. Through strategic policy interventions, we have fostered an environment that enables transformative deals, unlocking value for both investors and the nation. One of our key achievements has been the establishment of a clear and robust divestment framework. This framework has provided a structured pathway for asset transitions, ensuring regulatory certainty, protecting industry interests, and sustaining production. Of course, we have talked much enough about the issue of divestment and, of course, the role of the NUPRC. Indeed, NUPRC has provided and will continue to provide regulatory support in advancing Nigeria upstream oil and gas success. NUPRC's relentless effort to eliminate investment barriers, streamline regulatory processes, and foster transparency alongside strategic investment roadshows have strengthened investors' confidence and firmly reestablished Nigeria as a dominant force in the global energy market. Through clear policies and competitive frameworks, we are attracting both local and international investments. We are also fostering innovation, advancing automation, digital oil fields, and enhanced oil recovery to drive sustainability, as well as supporting local content and technology localization. Nigeria's commitment to transparency, accountability, and global safety standards provides a level playing field and securing a resilient, thriving future for Nigeria's oil and gas sector. We are also adopting innovative approaches to enhance industry stability. An example of such approaches is the NUPRC's Alternative Dispute Resolution Center, which plays a crucial role in fostering efficient, fair, and timely resolution of conflicts within the Nigerian oil and gas sector through the recent inauguration of the body of neutrals. At the NUPRC, we are committed to enriching domestic gas utilization and expanding gas infrastructure to meet Nigeria's growing energy demands. In this respect, we will ensure that every field development plan includes a firm commitment to fulfilling gas development delivery obligations and increasing gas supply to the domestic market to meet rising local demand. As part of our forward-looking plan to advance deep water project, we will promote the creation of deep water clusters. Ladies and gentlemen, this is a very, very key and important initiative as part of the forward-looking plan of the Commission that we are putting in place. We recognize that one of the inhibitions to deep water development and, of course, unlocking the gas potentials is the fact that we had not embraced cluster development. So we are going to ingrain that in our field development approvals going forward. That is the point I'm making there. We believe that will reduce cost and that will leverage economies of scale. Furthermore, we are aligning our upstream operations with global decarbonization goals. In this regard, the Commission is collaborating with the Ministry to organize the first Nigeria Upstream Oil and Gas Decarbonization Forum by next month, where we will present our governance and regulatory frameworks for decarbonization in the Nigeria upstream sector. This forum will provide a platform for key stakeholders to engage in meaningful discussions on decarbonization and carbon monetization, while allowing regulators, agencies, and companies across the globe to share their valuable insights and experiences. In conclusion, ladies and gentlemen, Nigeria's success in the upstream oil and gas sector is anchored on a predictable and enabling regulatory environment. Though regulatory excellence, collaboration, and visionary planning, NUPRC is poised to guide Nigeria towards a future defined by energy security, economic growth, and environmental responsibility. The journey ahead is promising, and with the sustenance of the right regulatory direction as being steered by the NUPRC, Nigeria's upstream sector will continue to be a beacon of success on the global stage. As Albert Einstein wisely said, in the middle of difficulty lies opportunity. With every challenge comes an opportunity to build a brighter, more prosperous future. Thank you for listening.
Thank you very much, Engineer Benga Komolofe, the Commission Chief Executive of NUPRC, giving the Commission's perspective on the theme of this session. And moving on swiftly from there on, we go now to the Honorable Minister of State Petroleum Resources, Oil. Let's welcome the distinguished Senator Heineken Lokobri for his own address.
Thank you very much, for the opportunity, to say a few things before, the experts, will go to the real business of the day. But let me first of all, recognize my colleague, my twin brother, the Honorable Minister of State for Gas, Right Honorable Ekpo. Let me welcome, a colleague from Equatorial Guinea. Let me recognize the CC and UPRC. Let me recognize all of you, the captains of the industry. Let me simply say, ladies and gentlemen, today gives us another opportunity, to hear from the experts, what we can do, to unlock the hydrocarbon resources that are buried in the soil and in the sea, and then transform that to revenue. I've always contended that the success of the oil and gas industry is predicated on the success of the upstream. Today we have a challenge about domestic crude oil supply obligation, which is provided for in the PIA. But you can't give what you don't produce. You can't give what you have already committed. I do know that most of the companies operating in Nigeria have commitments when they were raising funds for investment. But if we increase our production, we'll be able to get more volumes, satisfy both our domestic obligation and also satisfy our own external obligations. So the most important thing to me is to hear from the panelists. I'm just a politician. I'm not, I'm just a politician. I'm here to listen to, to experts, the operators of the upstream, to tell us what else can government do to support the operators so that we can maximize the potentials that exist, in the oil industry. For me, the 125 billion barrels, of oil buried in the African soil means nothing unless they are extracted from the ground or from the sea to the market. Somebody once told me that oil is called the black gold. Why? It's the easiest thing. Once you make the right investment, it is the easiest way to get revenue. I've always asked myself, why is Africa's scenario different from the Middle East? Why should we go to UAE? Why should we go to Saudi Arabia to beg for budget support when they have similar resources that we have? What have they done differently? That they have now turned their own, hydrocarbon resources to substantial revenue. Nobody will do it for us. It is we Africans, it is we Nigerians that can do it for ourselves. So today, I'm looking forward to an exciting panel that will tell us what do they think that we can do, as government to support them so that collectively we can, transform these resources to revenue that can guarantee economic growth, that can guarantee industrialization, that can guarantee better life for our own people. I've always said we can't borrow ourselves out of poverty. We do not need aid from the global north. Even when they promise, they won't keep their promises. And as a lawyer of over 30 years, I know that promises are not enforceable. If I promise to dash you money, if I don't dash you, there's nothing you can do to me. But if we have investments, if we have agreements to invest, all of us will have shared benefits from those investments. And so the only way, we can change the narrative in Africa is to increase production. And once the upstream succeeds, the midstream will succeed, and the downstream will succeed. If the upstream fails, the reason why we're struggling, in the entire sector is because the upstream is underperforming. And you guys know the reason why we're underperforming. I also do know, as I've been briefed. Since I had the privilege of becoming a minister, I got briefed. Whether those briefs are correct or not correct is for another day. But my own, responsibility is to ensure that despite the briefs, what can we do to change the narrative? And that is why within the short period we've been in office, less than 1.5 years, you could agree with me that we are making steady progress. We are guaranteeing a stable, predictable, regulatory, and legal framework. We are making policies that will make our fiscals globally competitive. Now, nobody will tell me he will prefer Guyana to Nigeria. And I've always told those who are going to Guyana that you've operated in Nigeria for 60, 70 years. So you have an old wife. If at 70 years you take a new wife of 20 years, know that you are marrying that wife for another man. So those of you who are going to Guyana, you don't know what you are going to see there. But this old wife, you have known everything she can do. And that is Nigeria for you. You've been in Nigeria for 60, 70 years. You can predict what is possible in Nigeria. So let's together fix Nigeria. Let's together, work together to change the narrative so that we can have a successful upstream that will translate to a successful midstream and downstream. And ultimately, transforming these hydrocarbon resources to economic prosperity. Transforming these, resources to revenue to be able to finance critical sectors of our economy. Let me conclude, by saying that as government, we are willing to always partner. We are willing to always engage. One of the, points we've always emphasized is sustainable engagement. At any point in time, instead of us, to drag ourselves to arbitration, instead of us to drag ourselves, to the public, let's sit together, build consensus, so that together we can find solutions to the problems of the industry. And that is why when we came, we tried to do what other governments didn't do. We changed the story. Today, the divestments in the upstream have all been done. Because I don't see the reason why we are appealing to the global, community to say, come and invest in Nigeria at will. And we won't allow them to divest at will. That is hypocrisy. And Nigeria is not known for hypocrisy. We're known for saying the truth, whether you like it or not, whether you like Henneken's face or not, I will always tell you the truth. And there's nothing you can do, but I'm privileged, to speak to you. Whether you like what I'm saying or not, you will listen to me. And when you go back, you will reflect whether what I'm saying makes sense or not. And that is what we have done. We've been able to clear all the divestments that were pending. And today, the world can now agree with us that Nigeria is a place that you can come and invest, and you can also divest at will. Distinguished ladies and gentlemen, I believe that the only way, we can increase our, upstream development is by investments. And these investments will not come unless, we that are seated here, agree that that is the pathway to follow. Those of you who are here are CEOs of different upstream companies, but know that the success of the oil sector in Nigeria, indeed in Africa, because we lay the foundation. It is what we do that other African countries are likely going to follow. So many companies, so many countries are coming to Nigeria to come and learn what we do about local content. So if you find oil in a neighboring country, and you are rushing to go there because they are giving you for free, the problems you will see there, you will run back home. And by the time you come back, those blocks may no longer be available. So it's better you sit with us, let's agree, discuss, disagree to agree, find common solutions, to be able to, to move the upstream sector, forward. Distinguished ladies and gentlemen, I want to also use the opportunity to also, thank you for being good partners when we came. In 2023, we're doing barely, about 1 million barrels. Today, we're doing about 1.750 to 1.8 million barrels a day, inclusive of condensate. And I've been told that bulk of that is condensate. So I'm looking forward to engaging the operators, of our terminals together with NUPRC, so that we do not offend the OPEC quota. If we have more of what, is produced is condensate, why do we categorize it as crude? We're doing disservice to ourselves. So we'll work together with you so that we can, get some reservoirs for, even if it's going to be from the wellhead. I was having some, background, discussions with the experts, and he told us that, look, it's better you get it from the oil wells. This one has a lot of gas, and so by the time it is transported, although it is associated, but, it is condensate. Well, leave that one for me to play at the OPEC level. But the point I want is that, look, I want us to work together so that we can increase production. That is the only way we can get more value. Our budget 2025 itself is predicated on 2.06 million barrels. Today we're doing less than that. That is my burden. So when I push you, understand why I'm pushing you. So please, this is doable. I can do it. I'm not an operator. It is you guys who are here and those who are here who can make it happen. And I believe that if we work together, there's nothing that is not possible. Thank you very much for listening to me, and I look forward to, hearing what the panelists will tell us, how we can ramp up production, how we can do 3 million barrels, half of it condensate, half of it crude, so that we don't offend anybody. Thank you, and may God bless you.
Super. Okay, thank you very much. Good morning, distinguished delegates and the honorable ministers. Thank you for joining us, the CCE of the Upstream Commission. Thank you very much, and welcome and thank you to our esteemed panelists for this session titled From Resources to Revenue. I must also remind us that the MD of Total Energies Nigeria's companies is joining us virtually, Mathieu Bouye. He's online. He's an active participant on this session. We've heard from the Honorable Minister and the CCE that the regulatory environment is supportive of investments. Nigeria is open for business. I've heard the Honorable Minister say that. The government is supportive of industry, and you will agree with me, the panelists here represent the doers of the industry. We have NNPC represented by Nicholas from NEPL. We have marginal field operators, we have the majors, we have indigenous players. So really, this conversation is centered around what the industry is doing to ensure that the resources in the ground that the Honorable Minister talked about, the scale of the resources, the production growth, how is that going to be actualized? We all know Nigeria is at a pivotal point. Last year's successes include the presidential directives on fiscal incentives, encouraging investment, the IOC divestments from onshore and shallow water, so they're not exiting Nigeria, they're still very much with us in the deep water, were approved by the regulators, so the assets are in the right hands, they're primed for investments. We will hear about that today. So the transformation really is not only about change of asset ownership, but really positioning the upstream to attract sustainable investment. So that's what we're going to focus on today. And when I was briefing the panelists, helping them prepare, I told them they have the easy job, really. Just talk about what you're doing. They do this day and night, every day. So it's an easy conversation, but I asked them to focus on 3 things. One, what are the key business and regulatory frameworks that companies need to thrive and also to attract investment so that they can execute their development programs? The second is really to remind us all what are the opportunities in Nigeria, what are they excited about, and how are they navigating the challenges to execute their mandates. And thirdly, I asked them to share their strategies and development plans. We know there's a lot of activity in the sector, but let's remind ourselves that work is going on to ensure that the resources really do slate into revenue for investors, but also the nation. So let's kick off the discussions. Nicholas, I'll come to you from the NNPC, NEPL point of view. We know Nigeria is the largest oil producer in Africa. It has substantial resources. What is NEPL in particular doing to increase investor confidence and also to attract those investments to fast track your process, because there's a time limit and there's a sense of urgency from the government, but also from the companies. So if you can share how you're progressing with projects, how you're increasing confidence in light of the regulatory changes.
Okay, thank you. I think you need the opportunity to talk about the strategy of NEPL. No? So again, similar to other companies, no, we have defined, actually in 2023, a strategy. We've got a strategy roadmap with very, very ambitious strategic targets, operational, financial, organizational. And that strategy is built around 3 pillars, actually 4 pillars. No, it's about increased safe and sustainable production, cost optimization, decarbonization, and also the people aspect. No, make sure we've got the right skills and capabilities in the company, and also the right mindset. No, it's moving from to have a real business mindset still in the company. But you are talking about increasing production. So what does that mean for us? Increase safe and sustainable production. So our plan is, from this year target, that we have 373,000 barrels average production for the year. That's our target in 25, to grow that to 550,000. That's oil and condensate in the next 3-4 years. And that from that production, we operate 65% of that production. If I go to gas, today we are producing 1.4 BCF per day, and our strat plan is showing that we should achieve close to 3 BCF over the next 3-4 years. Again, we operate 50% of that production as NEPL. So you can imagine behind that plan there's a lot of activities and a lot of investment. If we look at our strategic plan, we are talking about $4 billion per year. That's NEPL equity over the next 5 years. That's the money we need to invest between OPEX and CAPEX. So definitely, where is that fund coming from? And how we can make sure it's going to be there. So of course, as any company, the fund will come from profit that we are generating, so it's a self-funding aspect, but also we've got external funding. So the way we've done that in NEPL, so we've got financing entities, also providing some technical services in certain assets. So we operate those assets, and then there's a joint team executing the activities. But just to secure those funds, either the funds from the shareholders, but that's what it is when it's self-funded. No, we could provide them with dividends, but instead of dividend we use part of dividends to fund our activities. So either from shareholders or external entities, financing entities, we want to make sure that there is a business case, there is value behind all the projects. But I think what is important is everybody is looking for certainty, sustainability. And that has been the key focus. So how can you make sure that the production is going to be there, and growing, and not go up and down, up and down, up and down? I think that's what the financing entities are looking for. So what did we do as NEPL to make sure that we can do that? We can basically perform and deliver our targets. So what we did, we looked back at performance, historical performance, and identified the root causes of underperformance. And we looked then at the enablers that we need, and we have identified around 50 enablers that will help us to achieve those targets. And we build that under a transformation program. So we've got a transformation office that has been set up in NEPL, helping us to implement all those initiatives that we have identified. And when I talk about initiatives, enablers, we are talking about back to sustainability. It's all about focusing on maintenance integrity. So make sure that we've got the right level of maintenance of the rotating equipment to increase uptime, integrity of pipelines. So we are doing sectional replacement. We're starting to replace flow lines. We are looking at well intervention, which is the cheap barrels, I think. So we did a lot of that last year. So we're looking at anything, processes, organization, operating model across the asset. On on the project side, what can we do to make sure that we deliver? Because that's also important. We need to give confidence to shareholders and investors, know that we can deliver. It's performing, but deliver all the projects that we have. So we look at what can we do to deliver those projects. So it's about planning, it's long-term vision. So we move from short-term thinking to long-term thinking. So we are working those 5-year plans. The idea is, if I bring a rig, let's keep it. Make it sure it's going to work for the next 5 years. And then we have the option, because we've got a big portfolio, to move those rigs across the different assets. So that's what we've been doing, I think, in the last 18, 24 months. And what have we seen? Well, last year, the average production of NEPL was 244,000 barrels. Today, we are at 310, working towards the 370,000 barrels average for the year. So that's a 30% increase that we achieved, basically, in 12 months. So that's our strategy, gaining confidence. And then, so we've got those finance technical service agreements on asset on the gas. We're also focusing on gas, so we can look at different options. So we just last year agreed on the gas development agreement. So same principle about the execution of activities, and then the financing is done through share revenue. So that's for a specific NAC field development that we're targeting 500 million scf per day of production. So that's what we are doing in NEPL.
Fantastic. Thank you very much. Thanks for sharing your strategy and those growth targets. It's really useful to know. Shane, if I can turn to you from ExxonMobil. As investors weigh their options across different geographies, ExxonMobil is a global entity. What makes Nigeria and Africa competitive, and what sort of improvements do you see that can really support the upstream business?
Yeah, thanks, Mansour. And good morning, everyone. I appreciate the opportunity to be here alongside my esteemed colleagues. It's always nice to be at this summit. Yeah, I think if I think of what kind of percolates to the surface as kind of those top, couple of competitive advantages that we have here, especially in Nigeria, it's really first and foremost is the resource, right? I mean, this is one of the few super basins of the world. Over 10 billion barrels of oil that's being produced. Prospectively, 10 billion barrels of oil ahead of us that we could potentially produce, plus a significant gas resource that's out there. A large portion of this is in the deep water. And so for a company like ourselves, which has the skills and capability and that global experience and leverage and scale to be able to effectively and efficiently develop such resources, that certainly is what excites us about Nigeria. So that's the first one. The second one, of course, is the people, right? We've had a footprint here for many, many decades. We've had the fortunate opportunity to develop and train and experience just top-class individuals. Nigeria has some of the most experienced, capable, and well-educated people in the energy sector that there is around the world. And many of those within our own company have certainly shaped what our organization looks like here, especially in the ESSO deepwater business. But of course, have gone on around the world and shaped our global business as well. So, they're two competitive advantages that, certainly continue to excite us. We want to leverage as part of our multi-decade journey ahead. As for opportunities, I think it's important to recognize as an international company that we have opportunities all over the globe. There is a plethora of projects and investments that we can make in numerous countries around the world. And yet, as part of our financial discipline as a company, we only have a finite set of capital that can be allocated to those opportunities. So it's a very competitive landscape amongst those investment opportunities. So for Nigeria, it's going to be critically important that we can pull every lever we possibly can to really compete to win for those investment dollars to bring it in because of that finite resource. So I think when I think about where those two big opportunities, I kind of put them into two buckets. One is really around profitability and competitiveness. Certainly some significant improvements that have taken place in the last 12 months around that with the presidential directives and the executive orders. A huge enabler. We've seen that enabler in action already. We're seeing projects that were previously stalled that are starting to move through the pipeline. We had the FID for Bonga North here in December, a $5 billion gross investment. You know, just phenomenal to see those moving along. And there's a lot more in the pipeline that are progressing, and many of those are ours. So we're looking forward to continuing that journey. But it's, what's imperative with the presidential directives and the executive orders is how they're operationalized. At the end of the day, how the rubber hits the road, because that's what ultimately provides the true value to our companies. That's how we assess the profitability and the competitiveness of those. So that's an area that continues to need some focus, some attention, and as we talked about a little bit earlier on, a lot of collaboration to really pull the full value out of that. An additional value lever that we really need to focus on is monetization of the gas. And how do we ensure that you know, we're getting fair value as an IOC out of the gas developments that may be standalone or gas that's coming along with our oil developments. And so a lot of great discussions are taking place in that space already, and a lot of open minds, which I really appreciate. And that's going to be an area that we're going to have to continue to focus on. So that's kind of the competitiveness and profitability side of the equation. The other one is then just around stability, predictability, and consistency of laws and regulations. And of course, again, we've made significant inroads in that as an industry here in Nigeria over recent years on the foundation of the PIA. So that's really kind of locked us in and kind of narrowed the range of outcomes and challenges that previously existed. The key now is, again, about operationalization of the PIA. You know, how do we ensure that once we get into the details, they continue to meet the intent of the PIA, that regulations, guidelines, frameworks continue to be investor favorable. But again, we have a lot of collaboration that's taking place with the regulator, with the rest of the government, across industry, to really drive us to the right place in that space. So I have a lot of confidence that those areas that I've kind of articulated as the areas for improvement are making progress, and we're going to get there. But it still requires a lot of work, because at the end of the day, it's that work that translates to the competitiveness of the Nigerian environment, which translates to the massive investments that are on the slate to come down the pipeline.
Thank you. Thank you. You started off there, what I heard was a significant vote of confidence for Nigeria, the resources and the people. It's how you translate that really to workable operations, workable collaboration with the government and your partners to ensure you continue to invest. Great to hear. Bete, if I can come to Aradel and really talk about how a company like Aradel, indigenous operators, can really position themselves as viable partners. So what can companies do right to be an attractive entity for investors?
All right, thank you, Mansour, and good morning to everybody. It's a privilege to be on this panel. This year makes it 20 years of continuous production operations from Aradel. We'll be marking 20 years since we attained first oil in 2005, and we started off with a marginal field that at the time we came into possession, or we came into acquisition, was deemed to contain just about 5 million barrels remaining reserves. And at that time was practically just operating at about 1,000 barrels per day. As we speak today, 19 and a half years after, we've successfully extracted about 34 million barrels from that same field. And we exited from that field at a production rate of about 17,000 barrels at the end of 2024. Also with significant gas that has been monetized, leveraging the cash flow from all of that to also invest and integrating the value chain into a modular refinery. what that has shown us is the capability of when we continue to push the boundary of resource extraction, responsible, safe, and decent resource extraction, and also stretching the runway by increasing the reserves. What it has done is it's created a platform that attracts investors to us. So sometimes last year, we successfully joined Seplat and Oando as listed entities on the Nigerian Stock Exchange. And till date, we continue to get very strong demand in terms of clamor for our shares. As we stand today, our total shareholder base is about 8,000, comprising institutional investors, private equity firms, family businesses, and individuals. I think what we've shown is the attraction, or the fact that it's attractive if you run the business in such a way that investments will always come in. But that's not all about how we make it attractive. What we've then done along that journey is also to leverage partnerships. And the first set of partnerships we leveraged was in 2011, when together with other strong and credible independents, we acquired the divested interest of Shell, Total, and Ajib from OMA 34 using the vehicle and the Western. So it's about running your business well to build a track record, building partnerships, and with that partnerships, you could do more. And as they say, fortune favors the brave. So in 2021, when Shell commenced the process of divesting, we then leveraged that partnership on a larger scale and became what is known today as Renaissance, that is now acquiring the onshore business of Shell. Throughout that journey, we continue to be solicited with parties, both locally and internationally, that want to invest just because they believe in the track record of this assemblage of players. So how do we continue to attract? The Arade story teaches us run a business that is sustainable, run on best practice, focus on resource extraction, focus on resource additions, reserves replacement, and just set up a very strong corporate governance that creates a platform where investors are comfortable to risk their capital with you. Along the line, build credible partnerships, and that then brings you into a space where you continue to remain attractive for foreign capital investment. Thank you.
Very, very insightful, BT. Thank you very much. And congratulations to Aradel on the 20-year mark for production.
Thank you.
I'd like to bring in Matthew from Total Energies into the conversation. Thank you very much for dialing in. I know it's important for you and you've made the time, so it's great to have you here. Now, with the emphasis on low carbon, how can African operators really ensure that the upstream remains competitive as a viable and sustainable energy source?
Yeah, thank you, Mansour, and thank you for making it possible for me to attend online. Indeed, it's quite important for me to participate today. So to the topic, to your question, actually, you know, the world, it's true, is investing more and more in low carbon energies, but we shall not forget that still the world consumes 80% of fossil fuel for its energy. So it's still the vast majority of the energy we consume every day. So actually, while there is a transition, we still need oil and gas and more oil and gas year after year, and it will be like that, we believe, for long. Energy, actually, if you look at the last 150 years, is more adding, you know, from oil, nuclear, gas, renewable, than removing energies along the way. So it is fueled by the growing energy demand, and we believe it will be like that for quite long. What we need, though, is to make sure that we produce energy that is clean in the cleanest possible way, in order to valorize every molecule of gas in particular that we have on our asset, and that was clearly mentioned by the CC in his previous speech. I must comment in this case the forum that will be organized very soon on that topic, and we believe that it's part also of the duty as a sustainable operator to move on a clean development of our molecules and reserves. In that domain, we've done a lot already. We've stopped the routine flaring in 2023, end of 2023. We are the first operator in Nigeria to do it. And we are abating methane emissions on every of our assets and supporting NNPC also, NEPL, in its own assets in order to identify methane leaks and to reduce them eventually. So in that context, I believe that Africa and Nigeria in particular can create a difference in attracting investments. So the first one is gas. It is today a clean energy and it's balancing the intermittency of renewables. So it has a big advantage in that sphere. It's good for Nigerians. It is clean and abundant. So it's an energy which is there somehow. And it's part of the President roadmap, who is committed to develop gas significantly in the country. So we believe that, gas in Nigeria is well positioned with all these resources. It is also close to Europe. So if you want to export gas through LNG, it's a big competitive advantage. And you know that Europe today is diversifying its gas supply mix. So that's a formidable opportunity for a gas-rich country like Nigeria in terms of business. So gas. Then it's competitive oil to attract investments on all terrains. It is a worldwide competitive business, as was mentioned already by my colleagues. And Nigeria in this domain needs to be in the best quartile to attract investments. That requires collaboration within the sector, and there is here a lot of opportunities in order to increase this collaboration. We need also stability in fiscal rules and policies. And last but not least, we need security in oil and gas, onshore in particular. As you know, that to attract investment, security is of paramount importance, in particular on the onshore landscape, where we still face a lot of disturbances. Nigeria has successfully started to pivot towards a competitive landscape. Last year, the executive order on the NAG and on the deep water, as well as on the supply chain simplification, have been remarkable. The exploration bid round also was a significant push towards attracting investors. And finally, the divestment framework gave clarity from NUPRC and the CCE to create a trustful business landscape and environment. So all these were significant moves. We have started to work in Total Energies, and we announced shortly after the executive orders the FID of the Ubeta gas project onshore. That was in June 2024 last year. So that shows that with moves, you find investment, you find opportunities in order to go in the way the authorities want to go. So in the full support of the country's strategy. So we believe that we are going in the right direction. There are still some elements to be done, but it's going in the positive way, and we must continue, of course.
Fantastic. Thank you very much, Mathieu. I am glad you mentioned gas. We have the Honorable Minister of State for Gas, and I'm sure that message resonated well with him, that gas is a priority. And I'm sure gas was mentioned a couple of times earlier by Shane. So it's a dual fuel strategy that's been adopted. Also, regarding NIES energies, how do you navigate the biggest challenge, which is securing finance?
Yeah, thank you very much, Marcel. I think NIES Energies, as a lot of us would know, is a member of the NIES Holding Group. Our asset OMS 17 we acquired in 2021. And in the 4 years we've operated this asset, we've doubled oil production from above 20,000 to well over 55 to 60,000 barrels of oil per day. We've also doubled gas production from about 40 million scf we took the asset at to between 80 to 100 million scf today. Looking forward, our ambition is to grow this asset to produce at a level of about 100,000 barrels of oil per day and over 150 million scf of gas per day. In achieving what we've achieved and taking this asset to its full potential, we have had to use a number of financial constructs to secure the funding to unlock the asset. Some of them we have used and some of them we have not used, but it's kind of in the bouquet of options that are available to independents today. So when you think about it, there are a number of them. So I think first we can talk about resource-based financing. That typically would look at the resource base in the asset, and it would be typically syndicated across various financial institutions. Could be international, could be continental, which has made a significant impact in the past couple of years, and it could also be local. In the case of NIES Energies, we have a very broad-based lender suite of international, African, and local that provided the debt and some of the quasi debt to fund the asset. We raised $1.2 billion in 2021, $1.2 billion in 2021 to acquire OMS 17, and it had a significant component of international financing. So when we reflect on 2021 and the investment climate at that time in the industry where, globally there was almost like a freeze on oil and gas investment. For us to have attracted that funds was a validation of our investment thesis and the track record that NIES Holding has demonstrated in all the other sectors it has invested in terms of turnaround and value delivery. The second, so this reserve-based lending option would typically be used for long-term financing. It would be for either asset acquisition or large-scale projects. And what is key in this is to ensure that it is efficient, because you don't want to end up with a long-term financing that has kind of short-term repayment characteristics. The second level will be offtake financing, which has become more and more important in the past couple of years as international, the global climate, the global environment around investing in oil and gas are diminished. So for that, and this is where typically off-takers and the traders will come in and provide forward funding against the products and enables the operator to invest, to acquire assets or to invest in projects. And this typically will be a medium-term kind of vehicle. And what the off-takers would be looking for, the investors will be looking for critically, is track record and performance assurance that it will be delivered. Third option, I will call that activity financing. Some companies have used it. Some we will look forward to use it as we are going forward. And that's where we have specific activities, and we enlist the contractors not only to just be a service provider, but to be a stakeholder. So they will have a specialized involvement in the financing of that activity that they bring in. And they will be paid not just for the activity, but from the proceeds of the activity. Of course, this requires that the service providers themselves have to be strong to be able to provide that capacity to operators. This typically we use for very specific activities. It will be used for things that involve short-term but high confidence activities. And I think more and more, particularly for independents, this is going to be a key tool that we'll be using to accelerate production.
Okay.
The fourth element is around a bridge.
We're just pressed for time a little bit, but I think you've given us a lot to chew on. 3 really key strong financing options there for long-term, the reserve-based lending. Thank you very much. On that, apologies for that press for time. And I really want to bring in LECOIL on a similar theme in terms of how are you progressing with your partner in a producing field. You've got substantial resources and an exploration position. How do you blend that in terms of, one, the activity, but also ensuring that your financiers are confident that you're able to progress with your assets?
Yeah, thank you very much, and good morning, ladies and gentlemen. LECOIL came into the industry in 2013, and we were not successful in the divestment round of twice, in 2013 and 2014. So that kind of gave us a wake-up call, because the world will not end because we were not successful in a divestment round. So we had to go back to our drawing board and re-strategize and say, how do we get into the business? So we decided to do it in the hard way. So we had to do the traditional exploration, basin study, and all that gamut. And we farmed into one of our assets, 310. And in 2013, Wood and Mackenzie, when we drilled Ogo, it was classified by Wood and Mackenzie as one of the top 3 world discoveries in 2013. So it paid off. So we were sitting at the end of 2013, we were sitting on over 3 billion BOE equivalent of contingent resources, and triple that in terms of prospective resources. Not that we didn't have access to funds, but you can't go back when you have such a beautiful thing. You can't go back cap in hand to your investors and say they should provide you funding for such a huge asset. So we had to re-strategize again, in order to get a cash flow base, in order to now stepwise develop the resources that we have. So that was how, again, went back to the drawing board and, farmed in as technical and financial partner into a marginal field. And indeed, we brought that marginal field because we were kind of not chasing the maturation of resources, but we're chasing cash flow. So that's how we gained the confidence of our investors. And we brought that marginal field, at least as of today, the fastest marginal field that came on stream within 18 months. And today, that marginal field has produced close to 20 million barrels, and we are ramping up into 20,000 barrels per day with our other partner. So gaining confidence with your investor in terms of your capability to do what you promised to do, to work the plans as you presented to the investor is key. And focusing on your cash flow is very key. And you need to convince your investor that you are not going to do things in the conventional way, because it's very easy when you have discovered, you have the largest discovery, one of the top largest discovery in the world, they would traditionally think that you are an exploration company. And like was mentioned, we don't have a reserve-based lending friendly environment, if you remember around that time. So you just have to hunker down and show your path to production and your cash flow. And that we have done successfully.
Fantastic. Thank you very much. Cash flow is truly king, and that's where we're talking about translating resources to revenues. Jim, if I can bring you in from Chevron. Obviously, Chevron is a household name in Nigeria. You've been operating here for decades. If you can share some of the operational efficiencies you're deploying in your business model, and how you're focused on maximizing the returns on your asset base.
Yeah, thanks, and good morning. I think one of the things that we have that's a strength for us, again, building on our foundation of being here for a long time and having really great people, is also a really great set of resources. And we continue to develop our shallow water, swamp, as well as our deep water assets. And so the way we're approaching it is really figuring out how to, in the near term, unlock as much of that as we can, as well as then grow longer term. And so we're doing that we have 2 rigs running right now in our shallow water, developing wells. We'll probably bring on a swamp rig to do some work. We have a program at Egbami that we're planning to do late next year. So again, it's really trying to speed up the what you have available. That, and I think focusing on the asset integrity and keeping the production flowing, right? And so that also, then there's the security element that goes with that also. But the more efficient we can run our operation, the better off we are. So we've taken what I would say sort of a hub strategy in the deep waters. We look at our areas where we have some things we wanted to work through. Shallow water, similarly, it's like, where do we want to focus on? We've also ramped up our exploration as well. So we drilled our first exploration well in the shallow water this year, and had a nice extension of our Meji field with the discovery. And these things are valuable because you can tie them back fast. And it's really building off similar to what colleagues on my right and left of taking advantage of what you got in the infrastructure, building your cash flow, and then trying to move from that. But then also exploring on a more broadly to see what else we can find. We have a lot of undeveloped gas that we're working through options as well, and it's why we really like these assets, and we really like where we're at in Nigeria. I think with the advent of the PIA and certainly supportive regulators, so thank you for those in the front row that are supporting that, it's helped us give the signals that we need to continue to seek investment and to continue to grow the business. The foundation's always going to be, though, on the safe delivery of it, and so one of the things that we really continue to focus on is the safety and security of our people and our assets, and then fundamentally built on a foundation of integrity, collaboration, and then the people side of things. So, I think made us to round it out. We like what we have. We want to see what else we can find and continue to develop it, and really make the most out of it and continue to drive our efficiencies. It's not just in Nigeria, since this is a broader convention. It's really in the region as well. We also have some operations in Equatorial Guinea that were recently signed a couple exploration blocks there as well. So lots of things I think in the hopper, kind of short, mid, and longer term that we're trying to do to not only sustain production, actually grow production, and more importantly, grow our cash flow, right? Because cash pays for the business. So you have to be more efficient in your cost structure and more effective in how you actually deliver that. Thank you.
Thank you very much, Jim. So SunTrust Atlantic, Ugo, part of the challenge operating onshore Nigeria is the infrastructure, access to infrastructure. If you can share how companies are navigating it and how SunTrust is working to accelerate development of its field.
Thank you very much. Good morning, everyone. And we are SunTrust Atlantic. And there have been two, I believe, marginal field bid rounds in Nigeria, 2003 and 2020. Of the marginal field bid rounds, I think it's fact to state that the two most successful have been the Umusadege field in Wale, onshore, and also more recently, the 2020 bid round, the Ebolum field, which has also gone into production. Those have been the two most successful of the two bid rounds. The common denominator in the success stories of those marginal field bid rounds have been SunTrust. We have been there as a partner with Midwestern. We made it work. We made it work because of our belief in collaboration, our belief in eyes on the ball, and our belief in the fact that, listen, the government gave these assets because they wanted to get the indigenous companies involved. So our onus is to actually justify that trust. So we made that work. The more recently, in the 2020 marginal field bid round, the Ebolum field was awarded to initially 10 companies. We whittled it down to 5. And we got that field into production in record time. And we're doing, I think, well over 2,500 barrels in Ebolum now, where we're looking to drill more wells this year to get it north of 10,000. So how have we been able to address and get all these fields working? Collaboration has been key. Collaboration with our partners in all the fields, recognizing that essentially, the folks who are with us have a common interest to get these assets working. So our jobs, particularly as their collaborators with our partners, is to figure out where we can find areas of agreement, and from that we can get things to work. So what we did for Umusadege, for example, in order to address the infrastructure challenges, is we built a pipeline, the Umugini pipeline, a 53-kilometer pipeline from Wale to Eriemu, and from there we inject through Transformative pipeline. And to do that, we put together essentially a project financing framework where we worked with Zenith Bank, And we took a Naira facility knowing that our proceeds were in dollars. So it was a mismatch that helped us to be able to bring that pipeline and also the infrastructure to work. For Eboloom, what we did to make that work is our partner to the north, Aradel, we worked with them to truck to their facility. And within that trucking, we were able to get the production going. And what we're now doing is also building another pipeline to the south, where we're going to evacuate through the Ogunokom River. So what we've done is we've kept our eye on the ball, working with our partners, understanding that collaboration was key, and figuring out how we could get these assets, unlock the resources as quickly as possible, using all the different financing frameworks available to us. And that's how we made it work. Yeah, thank you.
Great. Thank you very much. We're currently pushed for time. I think everyone's had the opportunity to share their thoughts around Nigeria and what their businesses are doing. We have time for maybe 2 questions, and maybe we can do quick fire. Nicholas, I want to bring you in, if I can, to talk about the fiscals, the role the fiscal terms within the PIA have, the incentives and the presidential directives. How are those supportive, and how are companies really taking advantage of those?
Okay. Yeah, I mentioned before, no, I think, for the strategy, to implement the strategy, you need, of course, the funding aspect, you need the people, supply chain, but I think you need also the right environment in terms of legislator and regulator. And I think that's what we have today. Definitely at NEPL, we see the PIA is a key component for us. We see that as a key element in our strategy. That's why we're working on the conversion of assets. Now we see the benefit of the fiscal terms. Yes, there is less royalty on oil, more tax. Now with the CIT and the HT on the oil, but gas is less royalty and same level of tax. So from a net point of view, we see a benefit. And I think that's going to help us to implement our strategy. Again, we're going to have more profit that will help us to increase the production, giving more revenue, and then more dividend to the federal government. So I think it's a win-win situation, and we want to take advantage of that. That's what we saw by doing the assessment. I think HCDT was already mentioned by the CCE. Now we are working on that. We've inaugurated in 24 so far. We are a bit behind on the funding. We need to acknowledge that, but we are working on it. That's a key aspect. And then on presidential directive, definitely the NAC one is a key one, the tax credit, the gas tax credit for all those NAC fields that will see a first gas before 2028. As I said, last year we did already an FID for a 500 million SCF NAC field. We started drilling the wells this year. We are looking, the idea would be to make FID on another 500 million SCF between different fields this year to make sure that we can reach that target of 2028. So taking advantage of that fiscal terms. I think the long-term contract as well is aligned with our strategy. We said short-term thinking to long-term thinking. That means long-term contract. That's what we are doing. We are getting rig for 5 years or plus. That definitely is helping us. And I think that maybe, if I may, what could be needed when we see, I think the NUPRC is not the only regulator. I think that to have a holistic view of all the agencies involved in the execution of our activity would be good, and sometimes to have them on board and see what we can do with them to improve, because sometimes that can be, I won't say a bottleneck, but it's something that we need to take into account. There are so many permits or so many things that we need to secure, to execute activity. So I think that's something that could be relevant.
Fantastic. Thank you very much. I think if I can piggyback on what you said, the PIA provides the fiscal terms, the incentives provide fiscal terms, but there's some more work regarding regulatory clarity, stability.
Yes.
I think it was mentioned previously, and there's a lot of talk about collaboration amongst the industry players on stage. You're talking about collaboration from the government side, the regulators collaborating to really provide that enabling environment so investments can flow. Matthew, from Total, let me bring you back into the conversation, and still maybe just thinking about the fiscal change, the regulatory environment. Total Energies was a partner to the FIDs last year. If you can share, what more can we expect from Total Energies this year?
Thank you, Mansour. So definitely, as was mentioned before, Nigeria has a lot of
We can't hear you. We can't hear you. Can we check the system, team?
Can you hear? Yes, can you hear me, Mansour?
Not yet. I'll come back to you. I'll save that question and ask the organizers to give us just a little bit more time so we can come back to Matthew if possible. Bite, you were talking about Aradel's journey and successes, and it's really fascinating, and it's perhaps a template other indigenous companies can follow. If you can just summarize so we can have a takeaway, what are the key lessons from Aradel's transition?
In no particular order, the key lessons include the following. For independence and indigenous, cash generation is very key. We have assets to develop, but we've got a business to run. And that business rises and falls on cash. So everything we can do to remove the above ground challenges that limit cash generation should be areas of priority. The CC spoke earlier on about the gap between our technical allowable rate of 2.2 million and what we're currently doing today. That variance is due to the above ground issues. And there are moments when just going after those things and unblocking them may just be your quickest path to cash generation. In our own case, what we did is integrate and create multiple evacuation paths to the market for each of our product stream, whether we're speaking about oil or we're speaking about gas. And we created those redundancies both physically and in terms of market classification. What that did is to enable cash that can then be leveraged for development. Strong corporate governance is very key. If you're thinking as an indigenous in migrating to listed capital markets, you can't do that without very strong corporate governance, because that's the strongest signal to investors that their investment is safe. You need the track record as you build it on. And all of that put together will help in that journey. As we speak about an aspiration nationally of $1 trillion economy, we can't achieve that outside of the Nigerian Stock Exchange. Today, the total market cap of the Nigerian Stock Exchange is barely $45 billion equivalent. So we're still a long shot from getting there. But probably the biggest short-term contributors to bridging that gap would be the energy companies here. When we joined at a market cap of almost 2 billion. And if you can then imagine if 10, 20 other indigenous companies become listed, we are well on the way to becoming the $1 trillion economy. So run it sustainably, prioritize cash, grow organically, keep stretching the wrong way by way of resource addition, just to give confidence that you are running a sustainable business. That would be my take on that.
Super. Thank you very much for the valuable lesson. I'm not sure if we have, he can? Okay, Matthew, if you can come in.
Can you hear me?
Yes, we can.
Thank you. Yeah, so question. So, I mean, as we said, Nigeria has a lot of resources. Total Energies, in the past 15 years, we've been one of the major investors. You know, we developed AG now, one of the largest investors in Nigeria over the past 15 years, and we are definitely committed to Nigeria. And we have the footprint, and we believe Nigeria has the talents, the people to deploy large resources projects in the country. We have a strategy based on several pillars. One is to focus on our operated portfolio on all terrains in order to make it as reliable and efficient as possible. It requires maintenance, deployment of skills to make sure that we intervene on the well, so well intervention programs also to kind of fight the decline. But the strategy also focuses on leveraging the footprint with the tiebacks of resources that we have in the vicinity of our facilities. We also do exploration in order to find new resources in order to be able to grow the production of the country and of the company. Finally, we deploy some carbon initiatives across all our facilities to minimize our footprint to the environment. So we already invest significantly. We have a deep water rig currently drilling, and we started up a year ago Akpo West, which was a new Akpo FPSO. And the results actually are quite encouraging and quite good, so we are quite satisfied. And as I was mentioning, we also launched the FID of Ubeta onshore gas in June last year. Within our portfolio, we have many opportunities that we are now maturing and that could be developed under favorable conditions. Few of them are offshore, Entocon that we discovered 2 years ago, but we also have some NAC projects and some deep offshore potential tiebacks on the Egina and the Akpo FPSOs. What's important to have in mind is that those projects are opportunities. They've been there for some of them for very long, and they need to have the proper environment because it's not straightforward to develop those resources today. They need the proper environment, and we are moving in the right direction to do so. On top of those portfolio opportunities that we already have, there is exploration. We were very happy to be successful in getting 2 deep offshore blocks during the last bid round of 2024, and I want to thank the NUPRC and the Ministry of Oil also for being able to deploy this transparent and open bid round. We also have exploration opportunities in the nearby of our facilities, both in deep water and in shallow water. And the best example of them is the Entocon discoveries that we made 18 months ago, and that now we are maturing in order to reach a possible FID in the coming years. So we are clearly contributing to the 1 million barrels per day initiative that CC was mentioning before, and we are resolute to deploy the strategy in the country.
Super. Thank you very much. Lots to look out for from Total Energies and indeed other operators. That's all we have time for today. But if I can just quickly recap what we've heard, there's a lot of talk about collaboration, particularly between SunTrust and Aradel in terms of infrastructure. You've got to build the infrastructure to evacuate the volumes. I heard 4 billion in terms of investment and 1.5 billion in terms of investments. We've heard multiple FIDs talked about. Shane, ExxonMobil, you recognize the resource base. It's substantial, it's attractive, a lot to go after. Sam, you're talking about pivoting, being agile in terms of making sure you can move as opportunities change, so you can make sure you're well positioned as a company. And Osa from NIES Energies was giving us the blueprint for securing financing. I thought maybe he can save that for a masterclass in finance, and given their successes in a time where there was no finance, they were able to secure those volumes. So make sure you speak to him so you can get those 4th and 5th options for financing. But ultimately, what we're hearing is cash flow is king. There's lots of opportunity in terms of the resource base. And this is just a cross-section of the operators in Nigeria. And we've heard they're doing a lot in terms of their investment plans. Lots to look forward to, not only from Total Energies, but from across the companies represented here by my panelists. So please join me in thanking them for their times and insight. We can sit here for days and learn a lot, but that's all we have time for. So thank you very much.
Thank you. Just remain seated for a few more minutes, please. Just remain seated for a few more minutes. I want to ask a quick question before I proceed to the conclusion of this session. Has anyone in this room ever used crude oil to run their car? Anyone? To run crude oil in its normal state, not refined, to run your car. Your car must be made in the moon. You use crude oil to run your car? That must be a fire cow. Anyway, the point I'm trying to make is, following this session will be the downstream session, right? We need to understand the business of the downstream, which is critical. And then They would go to the speaker room for debrief. We'll take that session on. After that session, we'll go on a lunch break. I will tell you we're at the time, a buffet lunch break. We'll then come back from that lunch break and take the final panel session for today. Remain seated because the Right Honorable Obogeme Ekperikpe Ekpo has the final thoughts for this panel session. Let's welcome Honorable Minister of Petroleum Resources, Gas.
My dear brother, the Honorable Minister of Petroleum Resources, Oil, the former minister that is here with us, CCE, the operators, and the panelists. It's been, distinguished ladies and gentlemen, it's been a wonderful moment listening to the panelists and, of course, looking into the hall. You've seen the hall is filled to capacity because when we talk about oil and gas, this is where we begin from. Without the upstream sector, there is no oil and gas. And today they have come to speak to us. At the opening speech, listening to the head of the commission, a committed, innovative, firm commission, I can see the success story presented by the investors and the operators that are seated here. It gives us hope that Nigeria is heading somewhere. But what I want to say, because I've listened to you, you talked about the collaboration, you talked about financing and a few other things. Most important thing is when the Total was talking, he talks about the zero flaring. How I wish with the leadership of the regulator that all the producers that are seated here would try to take advantage of the gas, monetize it for the success story of their various companies. Because yesterday, gas was a West product. Today, it's no longer. And at this point in time, I have to give credence to the National Assembly for passing the PIA. Because with PIA, you have so many, the ample opportunities to take advantage of it. CCE talks about the relationship with the communities, which hitherto you were having challenges. With the formation of the community's relationship, we are hopeful that the community will be stabilized because most of the amenities that are needed will be provided and there will be peace in the place. At this point in time, I thank the President for coming out with, you talked about fiscal policy and reforms. The President came in with some executive orders that encourage investment, which we are noticing now. So on the whole, what I know is determination is success. Last year, CCE called us together and talked about increase in production. And today we have seen production rising up from there about 1 point something to 1.7 to 1.8. It is encouraging. So it is on that speed that I want to encourage you, the Ministry of Petroleum Resources, under the present administration, will give you all the necessary encouragement to make sure you increase the production. And when you talk about financing, I give kudos to my brother, Senator Heineken, the oil minister, and the secretary of APO is not here. They have brought in the headquarters of the APO. Where is he? Okay, the APO is here. Thank you for bringing in the Africa Energy Bank into Nigeria, because this will help, and I want it to be running in the next few months so that it will contribute to financing some of these projects, and Nigeria will regain its own position as the hub of oil and gas in the whole continent, and we will be able to secure energy security for the teeming populace of our country, Nigeria. You know, Nigeria is the giant of Africa. And within Africa, it is noted that we have up to 600 million households that are lacking access to electricity. And you are the ones that will produce the oil and gas that will produce the energy, the needed energy to serve the transportation system, the industrialization of our country, the power sector, the various homes, so that we move from the burning of coal and other things like that to clean cooking. So I'm really, really impressed that listening to you, you have rolled out your success story. Nobody has complained about anything. It is all about finance. On the issue of security, my brother and I, we are working seriously with the security operative to ensure that the environment is safe for you to operate and bring the good things to our country, Nigeria. So thank you very much, and God bless all of you.
Plaques to our panelists. Thank you. Please give our panelists another round of applause. Thank you very much. Who do we have there? Let me see. Just, you know how we do now. That would go. All right, Mr. Samuel Lutu, thank you so much for your insight. Let me have that of Mr. Swaz. Yes. Drop that one. Take this one. Thank you. Next is Mr. Swaz. Thank you so much for your insights. Thank you so much for your insights. All right. Next will be Mr. Igihon. Thank you as well for your insight. Mansour said you should do a master class on funding projects. I will help you market that master class because we need funds to move these projects forward. All right, let's give to Mr. Shane Harris. Thank you so much for your insights, Mr. Harris. Next will be Mr. Faladay. Thank you as well for the insights that you shared. All right, let's have Mr. Faladay come close. Thank you so much. Next will be Mr. Okafor. Thank you very much. Mr. Falabi, I don't know if you would like to receive from Mr. Bouye. Yes, Mr. Falabi, please receive from Mr. Bouye. Mr. Bouye is still online, of course. Let's finish with Mr. Okafor first. Yes, Mr. Bouye will see you. Thank you for your insights as well. Your colleague, Mr. Falabi, will receive on your behalf. Please proceed, Mr. Falabi, sir. Thank you very much. And Mr. Fokart, we've given you one earlier. We don't want to fill your office with too many plaques. So let's hold this other one, so you have space for when we come next year again to keep the other one. So thank you very much. Thank you. So Mansour, you did a fine job driving this conversation. Please step forward for yours. Thank you very much. You did a fine job driving this conversation. Thank you so much, Mansour. Thank you, thank you, thank you. Thank you. So, Mr. Falabi, you will need to join us for a photo op. The Honorable Minister of State, OSI, you'll also come for the photo op. So, gentlemen, please rise for the photo op now. Please, sir, join the photo. Yes. Honorable Minister of, yes, sir. Oh, yeah, please, sir. Thank you, sir. Please. And after this photo op, the panel members will be going to the VIP speaker room for debrief. Please allow them proceed there. Please allow them proceed there. Do not stand in their way in the room. Please do not meet them in front of the hall. I beg you. Please, sirs and mars. You've been cooperative so excellently. Let's keep it that way. Please go ahead. Photographers, take this picture like this for now because Mr. Bouye is also in the background. Then after that one, we can give you a blank screen. But for now, take this picture. All right, technical, give them blank screen for one final shot. Quick. All right, there you have it. Please allow them proceed to the speaker holding room again, I beg you. We're rolling over to the downstream session immediately. Please allow them to move to the speaker room. Please allow them. Do not hold them in the room here. Do not hold them by the entrance because the other panel is walking in now. Please allow them. After this downstream session, we'll then proceed to launch an exhibition tour. Please allow them. Thank you so much to our panel. Please allow them. Do not hold them. Please allow them. Photographers, not now. I will come and block pictures if I have to. Let them go to the speaker room, please. Allow them go to the speaker room, please. Allow them go to the speaker room, please. We're begging, we're appealing. Please. Please allow them go to the... Thank you. Please allow them go to the speaker. Well done, boss. Thank you so much, as always. Thank you so much. Yeah, good seeing you. Good to see you. Please allow them go to the speaker room. Do not hold them by the door or in the room, please. Just allow them move to the speaker room, please. Thank you. We're doing downstream now. We're moving over to the downstream session now. We all need a downstream, so I would expect to see a full room as well. Hold on. We all need a downstream. We all need a downstream. I know, right? We all need a downstream. You cannot take your gas straight from upstream into your LPG or automobile or Please, we're moving on to downstream. It's an important aspect of our business. Without the downstream, we would always depend on imports. We'll all be living at the mercy of countries who have developed their downstream. We should have an integrated industry. We're on course. We should strengthen it. And the next session, we talk about it. Oh, it's hectic. I know, right? Sorry. Next year we'll go back to the ICCs. Only you first got to... Please, can we free this aisle, please? Free the front, please. Please. We're starting the next session. Please free the front, please. Please free the front, please. Please free the front. Please free the front, please. Thank you very much. Please, let's allow our speakers go to the speaker holding room. We're starting the next session now, please. Please take your seats. We're moving over to downstream now. Please take your seats. It will be funny to think that we don't need downstream in this business. Without the downstream, there's no industry. Without the downstream, there is no industry. Our panelists for the downstream are ready. Let's do justice to the conversation. Please take your seats. Those who are outside, I want to come inside. Without those who are outside that want to sit down, you need to come inside now and take your seats. Without the mid and downstream, there's no industry. Facts. No industry. You can produce your crude and leave them in the FPSOs, and that's it. Those FPSOs, the crude can stay there for whatever how long. If there's no midstream taking it, if there's no downstream processing it, we're back to square one. Depending on foreigners for our sustenance, we need to address all of that. Please take your seats. Can those at the back please move forward? Those at the back, feel free, move forward. Move forward. Let's have a tight room before we start the session. Please, those at the very back, move forward, please. Please move forward. Please move forward. Just leave the front row seats, but you can just move forward. But leave the front row seats. Just move forward to the second row and third. Move forward, please. Please move forward. Those at the back. Let's have... Please move forward. Please move forward. Let's leave the front row seat for our speakers. Please take your seats. 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 Thank you very much. Welcome to the Downstream, the business of fuel. Okay. All right, cool. Carry on, carry on. Don't worry, I got that. Distinguished ladies and gentlemen, Africa's economic transformation is intrinsically tied to the development of its downstream oil sector, and our forum will examine the opportunities and challenges facing the sector on the continent. We're looking at refining, distribution, and transportation networks. Industry leaders and policymakers will be doing, and innovators will be doing justice to this discourse. But please, before I bring them up, I need just the level of quiet we have enjoyed throughout the previous two sessions. Can we repeat it now, please? I'm asking you to indulge us. Please, can we just stop the side chats now, please? Thank you. Most wonderful audience, award-winning audience, thank you. Thank you. Thank you. Thank you. Aren't you the best audience an MC can ask for? Wow. Thank you very much. Now let's get the business going. We're moving on now to the opening statement, and the opening statement is coming from one who has taken up the responsibility of ensuring that the downstream sector remains vibrant. In face of scarcities in this country, his company always keeps their station wet for their customers. And we're delighted to have him kick off this downstream segment. Please welcome with us the Group Managing Director of Rain Oil Limited, Dr. Gabriel Ogbeche, OON. Please, one more time, a round of applause for the CEO of Rain Oil.
Good morning, everyone. The Executive Vice President in charge of Downstream of NNPC, Mr. Isiaku Abdullahi, the Executive Director in charge of Storage, Barrister Carlo Okoha Obugo, other distinguished, very distinguished ladies and gentlemen. It is an honor to be here today at the Nigeria International Energy Summit, where we gather to discuss a sector that is critical to Africa's economic future, which is the downstream oil and gas industry. This panel discussion, The Business of Fuel, Shaping Africa's Downstream Future, comes at a time when the global energy landscape is rapidly evolving, presenting both opportunities and challenges for our region. This theme compels us to look beyond the present and anticipate how we can position Africa's downstream sector for resilience, growth, and sustainability. Over the past year, we have witnessed significant shifts in the African fuel market. These include progress in domestic refining capacity. In Nigeria, the commencement of the 650,000 barrel per day Dangote refinery represents a very significant shift in Nigeria's fuel supply landscape, with NNPCL revitalizing the Port Harcourt and Kaduna refineries and a rise in indigenous modular refinery production. The country is progressing toward eliminating import dependence. Meanwhile, across Africa, nations such as Angola, Algeria, and Egypt are expanding their refining capacities to boost self-sufficiency. Across Africa, countries like Angola, Egypt, and Algeria, oh, sorry, I've taken that before. Number two, deregulation and pricing realities. With Nigeria complete deregulation of its downstream sector, true product costs are now impacting supply, pricing, and market behavior, requiring players to develop new strategies to ensure efficiency and adapt to new market realities. Other African nations are closely observing this transition as they refine their own pricing models as well. Number three, infrastructure, financing, and investments. The African downstream oil sector is set for steady growth with a projected 4% cumulative average growth rate over the next 5 years. To meet this rising demand, $2.1 trillion in energy sector investment will be required by the year 2040. Governments are increasingly collaborating with the private sector to drive investments in refining, storage, pipeline network, and distribution systems. Initiatives such as the Nigeria-Morocco gas pipeline, the expansion of LPG terminals, and regional fuel depot underscore the importance of PPPs in closing infrastructure gaps and ensuring long-term fuel security. Increased focus on gas and renewables. The rise of NLNG, LPG, CNG, and emerging biofuels initiatives highlight Africa's growing inclusion of cleaner and more sustainable energy options. A more diverse energy mix is emerging, with renewables expected to contribute up to 50% of Africa's power generation by 2030, according to the International Energy Agency. In Nigeria, the Ajaokuta-Kaduna-Kano natural gas pipeline, the Nigerian gas flare commercialization program, and the presidential CNG initiative all reflect a strong commitment to diversifying Africa's fuel mix towards cleaner and more affordable alternatives. Regulatory reforms. Across the continent, governments are adjusting policies to attract investments and improve operational efficiency in the downstream sector. Ensuring transparency, fair competition, and a stable investment climate will be key to unlocking further growth. In Nigeria, President Bola Ahmed Tinubu is spearheading these efforts, working with stakeholders, providing clear guidelines for exploration and production companies on the back of the Petroleum Industry Act. These directives are set to attract greater investment in refining, storage, and distribution infrastructure, fostering efficiency and strengthening market competitiveness. Recent monetary policy adjustments and market-driven reforms have contributed to stabilizing the Naira. This can only lead to increased investor confidence in the sector. Sustained policy implementation is crucial in ensuring long-term market stability and efficiency. While these shifts present exciting opportunities, we must also tackle challenges such as supply chain vulnerabilities, forex volatility, and regulatory uncertainties. African downstream future depends on collaboration between policymakers, investors, and industry players to build a sustainable, efficient, and profitable energy future. During the session we are going to have today, we will explore the role of private sector investments and PPPs in transforming Africa's downstream sector, strategies for building a sustainable and competitive fuel supply chain, the future of cleaner fuels, including LPG, CNG, and biofuels in African energy mix, policy recommendations to drive efficiency and stability in the downstream sector. Ladies and gentlemen, I look forward to an engaging insight from our very eminent panelists today, whose expertise will undoubtedly enrich our understanding of the evolving fuel business in Africa. Thank you very much, ladies and gentlemen.
Thank you very much, Mr. Buche Owen, the Group Chief Executive Officer of Rain Oil Limited. Okay, we're moving on swiftly now to the keynote presentation for this particular panel. In the previous panel, when we looked at the upstream, we had a keynote from the CCE. And in this segment, where we're looking at the mid and downstream, we'll also take a keynote from the Mid and Downstream Regulatory Authority. Let's now welcome the ACE Authority Chief Executive, Engineer Farouk Ahmed FNSE, represented by the Executive Director, Distribution Systems, Storage and Retailing Infrastructure. Let's welcome Mr. Obugo Ukoha.
Good morning, ladies and gentlemen. First of all, let me convey the Authority Chief Executive's regrets for not being available today. But on his behalf, I will deliver the keynote address. And also, please permit me to stand on already established protocols. Still, I would like to welcome everybody this morning. Good morning, ladies and gentlemen. And so on behalf of NMDPRA, I would like to begin by first congratulating the organizers of the Nigerian International Energy Summit for putting together once again this annual platform where industry ideas are robustly deliberated. This session is on downstream and is sub-themed the business of fuel. And I have been asked to deliver the keynote address titled Unlocking Opportunities in Africa's Downstream Oil Sector, Strategic Insights for Growth. The Nigerian petroleum downstream sector is fast evolving alongside the dynamic global energy supply industry. Two fundamentals continue to guarantee Nigeria's competitive advantage in the industry. First is Nigeria's large oil and gas reserves, as well as the market potential comprising over 200 million population. The growth or decline of the Nigerian downstream sector will, however, depend on many factors, but it suffices to highlight just two critical variables for the purpose of today's discussion. First, let me speak about liberalized markets. A liberalized market requires that the forces of demand and supply are allowed to modulate each other, leading to an equilibrium which determines the prices of petroleum commodities. From established principles and tested national experiences, market growth is hindered when the fundamentals of demand, supply, and price are regulated. Investments are naturally attracted to liberalized markets because there is a clear pathway to cost recovery. In this regard, Mr. President from day one set this as a #1 strategic objective when on May 29th, 2023, he pronounced the subsidy immediately withdrawn. Thereafter, for about 18 months, we experienced an initial turbulence in supply, demand, and pricing. I am happy, however, to confirm that we are currently experiencing stability within the industry. I thought we should receive a clap for that. This stability offers investment certainty and enables the unlocking of opportunities with every naira invested. To strengthen the evolving liberalized markets, NMDPRA continues to offer regulatory clarity. The authority's initial 18 regulations have been consolidated into 6 regulations and revised to align them more freely with market principles, to offer a level playing field, as well as lowering entry and exit barriers. The authority is also in the process of concluding tariffs, cost benchmarks to catalyze the open access concept contained in the PIA. In addition, the authority's MDGIF is already incentivizing investors by providing counterpart funding to qualifying gas infrastructure projects. We are aware that in the first tranche, the MDGIF has signed up 122 billion to 6 critical gas infrastructure projects. The objective of these counterpart funds is to de-risk such projects and offer comfort to potential investors. Next, let me speak also about the second critical variable that we see as very important in the NMDPRA, and this is the issue of competition. The PIA mandates the authority, with the support of the FCCPC, to ensure competition in this industry. This is a priority that the authority takes very seriously because the ultimate beneficiaries of a competitive petroleum industry are the Nigerian citizens. Competition fosters efficiency, provides options, and ensures fair pricing. The concept of competition, however, has to be broadly implemented. This will require A, competition between operators. Competition is now compelling operators to take deliberate steps to reduce operational costs. There are very clear examples of operators coming together to pull together funds to begin to eliminate some of the cost inefficiencies that they experience. Joint dredging of channels to increase draft and the ability for larger vessels to come in. The open access is a very clear example so that you do not duplicate infrastructure. B, competition between products. The withdrawal of the subsidy has resulted in a more cost-reflective pricing of petroleum products and substantial changes in demand between the liquid products versus the gas derivatives. In 2021, the daily supply of PMS was in excess of 60 million. In 2022, we maintained that trajectory with an increase to 66. And by 2023, before May 29th, we still sustained that 66 million plus daily consumption of PMS. Since May 29th, we have seen a decline, a reduction, very significant, to plus or minus 50 million. Last year, we closed it at 49 point something million liters per day average for the year. For many people, that represents the nearer the clear consumption of what we're using in Nigeria. And Wale has disincentivized all the cross-border diversions we used to experience. As we see, whilst the demand for the liquid products are declining, we're seeing an upscaling of the gas derivatives. In real terms, this will unlock the investment opportunities required to bridge the gas infrastructure deficits. Such infrastructure development offers unprecedented downstream opportunities. These opportunities will, for instance, unlock investment prospects, such as the completion of natural gas trunk lines like the AKK, which will also spur on the recent gas distribution licenses that the authority has issued. With the operationalization of the AKK, we expect that the up-country market will become much more, the growth we expect will become upwards. Also, the resuscitation of liquid products distribution pipelines is a major infrastructure that is required at this. Bottlenecking the gas to power supply chain and the establishment of multiple facilities to produce and distribute petrochemicals, an upgrade of our existing refineries to meet local and regional demands. Finally, in terms of competition, we will also, what is also required is that Nigeria begins to position itself to compete regionally and globally. Let me recap, ladies and gentlemen, by succinctly restating the points already made. 1, a liberalized and competitive market is a guarantee to attracting the necessary investments required to unlock the opportunities in Africa's downstream petroleum sector. 2, the regulator is laser-focused on deploying its regulatory tools in ensuring a level playing field and regulatory certainty, which are strategic flags that every investor must cite before making a commercial decision. And finally, the ultimate beneficiaries of a liberalized and competitive market are the Nigerian citizens. If fulfilled, Nigeria's place as a major contributor to the growth and sustainability of the downstream will be guaranteed. Finally, let me on this note commend in advance the very qualified panelists, subject matter experts in their own rights, who will deliberate further and come up with more extensive perspectives. On that note, I would like to welcome them and ask them and urge them to share their insights so that will contribute to the upgrade of the industry. Thank you very much, everybody.
Thank you very much, Mr. Ubugo Okoha. So Koha is Executive Director in charge of Distribution Systems, Storage, and Retailing Infrastructure. Speaking on behalf of the ACE, the Authority Chief Executive of NMDPRA, please a round of applause for him one more time. Setting the tone himself and the CEO of GCEO of Rain Oil, setting the tone for the conversation to follow. And my business now is to get the discussants on their chairs to discuss for our own knowledge and education. So let's begin without further delay by welcoming first to his seat on the panel, the man who is committed to not just driving conversation in the downstream sector, but helping in driving that conversation around infrastructure across the entire continent. He is Executive Secretary of African Refiners Distributors Association. Let's welcome Engineer Anibo Krager. He's on our panel. Yes, sir, that one. Yes, sir, thank you. Joining him is one who is working alongside his colleagues here in Nigeria to give refiners of crude in the country a voice for advocacy and a platform to unify different purposes. He is the chairman of the Crude Oil Refiners Association of Nigeria, Mr. Moma Jima Oyerekwa. He's not here. He's doing the same thing across the continent as well, looking for those partnerships. But representing him is the publicity secretary for Coran. Let's welcome Mr. Eche Idoko. You're welcome. Of course, major energy marketers in Nigeria are critical to the conversation of keeping the downstream sector vibrant and products circulating. Our next panelist is their chairman, also the CEO of NNPC Retail. Let's welcome Mr. Hub Stockman. And then the executive vice president downstream of the NNPC Limited is a key player in this conversation. Let's welcome Mr. Isyaku Abdullahi. You're welcome. Next is the managing director and chief executive officer of Etana PLC, another leading downstream company, Olumide Adeosun. You're welcome, sir. Joining them is the managing director and chief executive of Total Energies Marketing Nigeria PLC, Dr. Samba Shaye. Dr. Samba Shaye on the panel today is represented by Charles Atiomo, General Manager Special Duties. Mr. Atiomo, you're welcome to your seat. You're not Charles? Special Advisor. Special Advisor. Thank you very much. You know, when it comes to special duty, maybe there's a presidential appointment waiting for you in the future. I might be prophesying, you never can tell. Anyways, you're welcome. Thank you. And who is helping us drive this conversation? He's a renowned anchor on Channels TV and former chairman of Energy Correspondence in Nigeria, Olu Phillips. You're welcome. Please. Yes, please. He was a governor of one of the western states, and I like it every time. He said, it's tete at tete. Let's do a small tete at tete. The show is yours, Mr. Olu Phillips. Ladies and gentlemen, one more round of applause for our panel. Thank you very much.
Good morning, everybody. Good afternoon, everybody. That was harsh. Okay, I get it. So I think we've come to the granular level where we really need to discuss and talk about how all of this makes sense. I know we've been discussing upstream, investment, partnerships, connecting regions, but the truth is that crude is nothing without value. And I think that that value addition, value creation is where the gentlemen on this panel actually apply their trade. And it's important for us to understand what the future, like the opening speeches said, and the opportunities, insights on how these can become more valuable. And let me quickly put up a disclaimer that downstream conversations aren't just necessarily about petroleum conversation. So it's everything. There is the derivative from crude refining and the conversations around energy transition. So if you see an over and above conversation beyond petroleum, then you understand that we're still discussing downstream and how it relates and connects with the people in terms of value addition. I'm going to just start straight by asking, okay, Charles, your opening insights.
Okay, thank you very much. Can you hear me?
Yes, I can.
Yeah, I will start by saying upstream is nothing without the downstream. When the upstream guys were here, this place was full, choked up, I could not come in. Now, it's time for the downstream. I can see very many empty seats. same is norm. Upstream is nothing without the downstream. And I'll start by saying, too, that the downstream is very problematic. That's why most people tend to run away from investing in the downstream sector. Because if something happens in a station, or if something happens to your depot, your business can go down. The center point for the downstream, in my view, should be safety. Because of the kind of product we handle, more so, we're not in the business of killing people. So safety must drive our business plan and all what we do. Investment in safety is key, but also investment in infrastructure should also be key. I'll give you an example. Most people go to Lagos mainly to take product up north, or rather to the hinterland. They go to the south too. To me, it's not normal. I had a discussion with the EVP, Downstream, we were talking just before we came in. So the ideal thing, in my view, is that trucks are not supposed to move more than, at most, 50 to 100 kilometers. So in the long term, I think we should look for funds to work on our pipelines and our depots up country, so that moving products from the coastal areas to the hinterland should not be by trucks. It should mainly be by pipelines, and the truck should be based in the depots up country, taking them from there to their various stations. That is one. Two, the authorities came out last week or 2 weeks back with a policy saying that trucks on our roads should not carry more than 45,000 liters maximum, probably to start 1st of March. I key to that idea. Transporters may not agree with me, but to me, I say that is one of the best decisions that have been taken so far this year by the authorities, and I say thank you to them. And why am I saying this? The deaths as a result of rollovers, I mean trucks filled with products getting accident, and people going around to scoop the product is really getting out of hand. No matter what you say, or no matter the advocacy you push towards the public, as long as there's a little bit of poverty, the people would always come out to scoop product. Looking at the kind of products that we market, anything can happen, and it's always a disaster. We need to find a way of stopping that. Authorities, thank you again for doing that. Well, let's hope we have the courage to enforce it. Secondly, too, I would like a situation, we mentioned it earlier, whereby we can get funding for the downstream. Investment.
Charles, sorry, we'll come to that.
Okay.
I just wanted to hear your perspective on how we can connect and create these opportunities, especially for the consumers, as it were. But let me come to you, Olumide, and clearly so, he's speaking specifically to liquids, as it were. But I think for the downstream, there's a bit more an expanded conversation which has to do beyond just the liquids and the opportunities about how to move the liquids. But generally speaking about how the downstream, in terms of other energy sources, can be harnessed for greater value. Olumide, let me hear your perspective.
Thank you very much, Olu. So I think that was a very good starting platform, not the part where he said upstream, house was full, but downstream, house is light. But from the part where safety is actually the foundation of, from an investor's point of view, particularly in our business, if an investor believes that the rule of law doesn't apply or safety principles do not apply in a particular jurisdiction, particularly in our field, they're unlikely to invest. So I think it's critical to take that as a foundation. Before I get into the very specific and narrow question you've asked me, which is to really speak of the speak to the non-hydrocarbon opportunities that we see, I think it's important to set the tone for the breadth of investment opportunity there is perhaps. 2 years ago, 3 years ago, well, maybe more 3 years ago, and before that, these conferences were always prevailed by the imminent arrival of the Dangote refinery. It seemed as though refining was the biggest investment opportunity in the downstream industry, or in the midstream to downstream industry. I myself, as a PwC director, had written a couple of papers on modular refineries and why they were the way to go for Nigeria. That Rubicon has been crossed, and it will take a very brave investor with deep pockets to put another refinery to match that which we have now. So then once you agree that we've got products, Nigeria is going to become an aviation hub quite soon. We are net exporters of gas oil, and we have good balanced competition in the liquids business to the benefit of the consumers, I dare say. It means that we really have to start to think about how we invest for the future, how we make sure that the industry is sustainable in the future. If you speak to people under the age of 40 today, they not only have stars in their eyes, but they have batteries in their mind. They have alternative ways of fueling their cars in their mind. They say some of them don't even want to own cars. So if we take the transportation system in itself as a case study, we are looking at CNG right now. CNG is trying to account for a percentage of, I'd say, commercial transportation, because it would be unwise to use diesel to carry CNG. So CNG is good for commercial transportation. So let's take that and hold it to one side. And then let's take the transportation, common transportation day to day. It's very unlikely that EVs will become the mainstay, because we need to solve for power in a meaningful way. So all the research that I've seen and I've done is pointing to the fact that there's a lot to be done in the battery space. Batteries can be charged via solar. In fact, a lot of us, when we have solar systems, we have inverters that hold that store the energy that's been collected. And in terms of use cases, the most prevalent use that we're seeing globally are around two-wheelers. Two-wheel bikes can work on swappable batteries. They can be powered by solar. And if you look at the Nigerian situation specifically, Nigeria has about 5 million registered bikes. Of those bikes, they consume they're all 200cc bikes. They consume anywhere between 5 to 10 million liters of petrol daily, because all the bikes we have are commercial. That's 25 million liters of petrol daily being consumed. My honorable friend, the EDDSSRI for NMDPRA, mentioned that petrol consumption is at 49% for last year, stabilizing at around 50 million rather for this year. That tells you something. That tells you that there's an investment opportunity there somewhere. That's half of fuel consumption is being consumed by a particular demography. And if you look at what's going on in our industry, just to round up, I know I'm looking at the clock as well. And if you look at our industry, there is a potential risk, because you have banks that are running and building tricycles. Those tricycles are running on batteries. And we're saying that bikes account for about 25 million liters. So there's a great investment opportunity there. That investment opportunity should not be for just anybody. It should be for those of us that have already invested in the assets, that have invested in the market, and that have invested in the very, very core hyper-distributed retail infrastructure it takes to make a great success of those. I'll stop there.
Thank you very much, Olumi.
Thank you.
Thank you. So I wouldn't want to say an illusion was created, but it does appear to my mind, my contemplation would be that we created a silver bullet in our minds regarding refining solution, and thought that once we had that massive, put together maybe 1.1 billion storage capacity or refining capacity, then all the problems have been solved already. But that in itself has created a different kind of value problem, because once you solve this, you've created a logistical problem, you've created transportation problem. Let me come to you, Mr. Shak. When you look at the dashboard from the point of view of the Executive Vice President Downstream, how do you push the chase on that board to tie up this nexus of these opportunities and new areas, challenges, transportation. You have over 5,000 kilometers of pipeline crisscrossing the parts of this country and not effectively in use. At the very best, they are in a very source situation. What would be your comments and perspective to this?
Yeah, good afternoon all. For us in NNPC and Downstream, we are a major dominant player in the Downstream. And of course, as of today, we are the first of Downstream. Across the value chain in the Downstream, from refining, transportation, which included waterways as well as land, we are dominant there. And with the new opportunities that we have by the PIA, we are now competitive, and we are striving to ensure within, as a major player, allowing for competitiveness to achieving affordability and availability. I'm so happy, before I go ahead, we had a pre-meeting, some of the panelists, and found out that the government company is not fully supported, but I'm very happy that the Minister of Petroleum Resources Oil is available in this panel room and other important players in the oil and gas. That means the downstream is very critical. That is where we have the impact. If we make all the volumes up there as enabler in the upstream, and we don't have the end user satisfaction and services, then we're in deep shit. The government will be challenged, we will be challenged, and all the end users will not be comfortable. So I need to make that very clearly. For us, we run through the value chain, and what we're trying to do to support the downstream system is to ensure that we have infrastructure issues. For the pipeline, which is the easiest mode of transportation, there is an approved existing BOT because of funding issues that we have consciousness, and out of our 5,000 kilometers of pipeline network across the country, we are trying to fix it, and then we'll look forward for long-term transportation process and system that will work for us. That will give issues to the safety, security of our products to reaching all our footprints. That's very important. And it will then bring down prices, and people will be able to be affordable. And as I said, our retail, because of the competitiveness of the environment we have today, it's very clear. You can go to any pump station, look at the price, look at the quality, which we assured every Nigerian that we're going to provide quality products, quality service at affordable prices. So we're doing much in that aspect, ensuring that we fix our infrastructure, give services, and then be able to generate and make the economy active. I think that's my point.
Okay, I'm going to make a bit of a detour. I'll come to you, Stockman. Let's look at a Pan-African view of what the entire value chain is, which actually starts from the upstream, producers, all the way you produce the midstream, you bring it down to the downstream. We're looking at volumes above 6 billion for Africa, but what's the capacity in terms of refining? Refining capacity. Let me hear from the Pan-African perspective so that we are not all dressed up with nowhere to go. Yes, I come to you, Kreger.
Thank you very much, and I'd like to thank the organizers for inviting Ada here, and I'd also like to echo the points as I travel and speak at about 10, 20 conferences around the continent and abroad. Having the Minister of State for Petroleum here is actually very rewarding for me, because one of the things I like to say is you only get support when you get it at the highest levels. First and foremost, before I get into that, nobody puts a barrel of crude oil into anything to go anywhere. Let's be clear. Coming here, we didn't put crude oil into our planes, we didn't put crude oil into our cars. So we need to ensure that we can consistently, because 90%, over 90% of Nigerians will never see a barrel of crude oil in their lives, ever. But they will cook with LPG. They will travel with jet fuel, and all the things we want to do around the continent depend on that. That's the first thing. Second thing, there must be collaboration across the whole value chain. Honorable Minister, I sat in for your other remarks where you talked about countries around the world and how they've developed, especially the Middle East. The biggest thing is that it's a relay. The upstream is the first leg, but the midstream second, downstream third. Nobody only focuses on the first leg. We have to do it. And I'm happy you are sitting beside my senior brother, Dr. Omar Farouk Ibrahim, who actually went out of his way to bring ADA into the OPEC Africa Energy Dialogue, which covers the upstream and downstream, to develop a robust pan-African oil and gas industry. And you start to see things that impact you that you may not be aware of. For example, we're here talking of the downstream. We keep talking refining, but the big thing is petrochemicals that we don't always talk about. Plastics. Nigeria spent $1.82 billion importing plastics in 2023. We found out yesterday that apparently there's an African country, and this is thanks to him inviting me to the dialogue, which he hosted yesterday, that's actually putting forward regulation globally to ban plastics production. Yet we have a polypropylene plant in Warri. We have probably the most successful petrochemical company in Africa, in Indorama, which was former Element Petrochemical. I used to sit on the board of that, so I understand. So to bring it back, I think first and foremost, we must look at, you said we have about 6 million barrels a day of of production. We have just over 3 million barrels of refining capacity on the continent. That's installed. We've had 18 refineries closed, 6 mothballs. And when you look at Africa's trajectory over the next few years, you'll see that in actual volumes, by 2040, we'll be using 70 million metric tons more of petroleum products than we are using today. So when you look at the net imports to Africa, you will see that with Dangote refinery coming on stream and all that, it's starting to close. But given that 1 in 2 people born between now and 2040 will be African, by 2050, 3 of the top 10 countries by population globally, Nigeria at number 3, DRC at number 8, Ethiopia at number 9 will be African. You'll see how much energy demand we had. So that brings the fundamental question. What happens if Africa cannot import petroleum products for 30 days? Just 30 days. Agriculture that we all depend on runs on diesel, all the equipment. The mining sector that we're all excited about, the mines run on diesel. The trains to get things out run on diesel. So you start to see, I'm not even talking about all the other interconnectivity. So we have to look at, holistically, how do we, to your point, run a relay where every part of the value chain is supported collectively. In my mind, I think you talked about investments. I just use this to talk about investments. When we talk about investments and what will attract investments across the value chain, I think it's important to understand that for investments to show up, there are 4 key things that must be in place. The first thing is effective regulations across the investment horizon of the investor. And I am happy with the work that's been done, PIA and all of that, which is great. But the second thing is we need to move from, for lack of a better word, wish lists to better project preparation. Let's define the scope, cost, and schedule of the projects and the economics that supports it end to end. When you talk to the DFIs, which I do a lot, whether it's AFC, Afrexim Bank, and all of that, which we did at our investment forum, they talk about what is important to them, what they're looking at. So those are the first 2. The third one is in today's world, whether you like it or not, ESG is important. So my fellow panelists talked about safety. The E in ESG is environmental, but it's part of HSE. We need to go beyond just safety to ESG. Are you reducing carbon footprints? Are you reducing emissions? So for example, when you look at the fact that globally, in 2022, 3% of all emissions came from shipping. So when you ship our crude to Europe and ship products back, that's emissions. If you put a refinery in place and the supporting infrastructure, you can do that. The next thing, and the most critical, and I like to do an exercise usually which gets mixed results, is I always say, put your hand up if you are going to be 40 years old or younger by 2030. In this room. Because if you are not, I see one hand there, in this whole room too. These are the people who are going to run energy transition, not us. How are we developing the human capital to execute the business plans as envisioned over our investment horizon? That is how you get the investments. When you start to put that together, you start to see the quantums. I applaud again what my other brother has done with the African Energy Bank, Apple has done, the collaboration involved, but that is just the starting point. So for us, we're looking at how we're going to do that and also the challenges of multiple fuel specs. Nigeria has done a good job there, but across Africa we have 11 different grades of gas, oil, or diesel with specs ranging from 10 ppm to 10,000 ppm. 12 different grades of gasoline ranging from 10 ppm to 2,500 ppm. If you don't have harmonization of that, how does that work? And the harmonization is not just with the Ministry of Energy. There's the Ministry of Finance, Ministry of Environment. What we found in our dialogue is a lot of the decisions that impact us are taken because, for example, a Ministry of Environment has different perspectives from the Ministry of Petroleum and Finance. Can we harmonize that position? So in summary, across Africa, we need to ensure that we put in place the right strategies and policies to attract investment, the right frameworks to do it, not just for refining, but for the storage and distribution infrastructure, the ports, the rail, and so on to deliver. Thank you.
That's a bird-eye view of this conversation, and I come to you, Stockman. I mean, we're still a hydrocarbon-driven environment. That's the installation that we have, or installations that we have, and we are quite well ring-fenced when it comes to the coastal area for storage, for logistics, as it were. But how to move that from that point to the inlands is where you, for instance, may have logistical challenge, talking about fuels, for instance, and transportation issue. Are we taking advantage of the shipping allowances where, for instance, if you have bigger barge, you get some incentives and all of that? From your perspective, I mean, downstream and what you represent, retail, what do you see?
Well, I think, first of all, a lot of what's been said addresses actually the fact, and it's not just with hydrocarbon, but as Memon, we also say you need to address the energy poverty. And it will not just be hydrocarbons. It will have to be, and it's not just Nigeria, but even if we're parochial, Nigeria, with its growing population, it will have to have many energy sources just to drive economic development. Because if there's energy, you can drive economic development, both for the individual as for industrialization. So it's not just going to be from hydrocarbons. Let's be very clear. We'll have to bring in solar. You need to bring in hydropower. You'll have to bring potentially wind. But not only there, you'll have to look at things like bring maybe ethanol in there to actually expand the reach of PMS. So I think it's a multiple set of energies. But as you said rightfully, at the end it has to come to the consumer, to the users, etc. And then I think hydrocarbons have a challenge. Yeah. It is, yes, it's all good and well to have it at the coast, yeah, and but it's quite expensive to do everything by road. The EVP, and my colleague already said, the pipelines have to be refurbished because it's an efficient and safe way to bring product up north. But it can't do it for all products. It might be only limited to PMS and to AGO. So one of the big challenges that we see also is how do you bring LPG to the north in a way it can compete with charcoal and firewood? Because it's all nice to have LPG on the coast, but actually there's a huge population, and Africa actually is also a good example of that, where 1 billion people don't have access to clean cooking fuels. And they're doing it on charcoal and on firewood. How can you bring a product like LPG, which is an excellent product for that, how can you bring that in the lowest possible way up north in Nigeria, but in many places in Africa, to give people access to clean cooking fuels? Now, for that, I think you'll have to, road will remain in many countries, including Nigeria, a major way of bringing products across. Not just actually hydrocarbons. It's actually all products in Nigeria are done by road. So I think you need to be looking at the road infrastructure network to improve that. And we as an industry can say, can we bring it cheaper up? Now, I think I think CNG, and I think it was already mentioned, is an excellent fuel to actually to power trucks. It's a cheaper way to transport fuel and many other products across the country. So I think CNG will play a major role in transport, in our view, and it will reduce the cost of transporting goods across the country. But you also need to do it safely, so we'll have to invest in better trucks. It's not enough just to say we're going to go down from 60,000 liters to 45,000 liters, but we'll also have to invest as an industry in better trucks. Trucks that actually have technology, anti-slip, anti-spill, that have cameras on board, that have speed limiters, that have onboard computers, that also actually have electronic seals, which can only be unlocked on the side where it comes with an OTP. Why? Because then actually product pilferation is a much more difficult to do. So I think, look, the beauty of Nigeria is, and I've said it before, is with the refineries now coming to the fore, but they're coastal refineries. How can you then, the value they create by turning crude that is locally sourced, how can you preserve that value when you go up the chain to the rest of the country? Because it would be a waste to have it not used in an appropriate way. Now, one way is the transport, and we discussed it, pipelines, waterways, you mentioned it yourself. We go through the Escravos channel with 15 KT vessels. Now, if you dredge it, maybe we can go with 20 KT vessels. Doesn't sound like a lot, but this has two benefits. One, a refinery rather loads a 20 KT vessel than a 15 KT vessel, and it costs the same money per day to take 15 KT through that vessel, through that channel, as 20 KT. So you reduce, again, the cost of bringing product to the consumer. Because at the end of the day, that's our responsibility. Giving the consumer, in whatever country, but especially also in Nigeria, an affordable product.
Thank you very much. Let me oscillate a bit. Refining, retail, trading. This group seem to be singing from a different song sheet. In the last, in my estimate, say 18 months, since we had a lot of policy change and, of course, upward review of some policies that have helped. But that has also created that dysfunctionality in my mind, trading, crude refiners like you. So how has that impacted on the skill at which you operate as crude oil refiners?
Yeah, okay. Thank you very much. Interestingly, in the last 72 months, the conversation in Nigeria has moved from when you have forums like this, what elsewhere would be the discourse production, upstream, and then when it comes to downstream, what you have them discuss is importation. At that time, Nigeria would be referred to as, would be a perfect reference when you talk about countries that produce and are not refining. But in the last 72 months, this narrative has changed. And somehow, even though we expected this to happen, I think people didn't quite believe that it was going to happen. People didn't believe that at the time, when you're talking about refining in Africa, you will be referencing Nigeria as a viable market. So we have the Dangote refinery at the game changer with their 650 barrels per day. You have the NNPC refineries, which a lot of people thought was more or less like soundbites when you talk about the refineries coming back. And today we have the Port Harcourt refinery operating, the Warri refinery operating, and then the Kaduna refinery is going to come on stream very soon. And then we have the modular refineries complementing whatsoever they are doing. Right now, the modulars, we refine about 27,000 liters.
Put together?
Day. Yes, within.
Put together?
Yes, put together. And they're also contributing to the quota. So the conversation has changed from, the regime of importation now to the regime of, look, we are also refining. And, but unfortunately, in projecting this, people had created an artificial dichotomy between the refineries, the retailers, and even the bulk traders. So you have people saying, okay, on the one hand, you want to bring, you're giving licenses for importation, and then you have the refiners. How how is this hampering the refining sector? But in the real sense, we want to achieve, I think the regulators want to achieve one thing, to make sure that we have self-sufficiency in refined petroleum products, and then we also are able to give this, distribute this product at an affordable rate. And what the local refining, what the local refining offers is that it gives you an opportunity to achieve this. You get cheap product and you get product availability. But for us to be able to work, for us to be able to achieve this effectively, we would need the guys who are in the distribution segment and those who are retailing as well. Because when we refine, we won't distribute. We would need to work with the DAPMans, we need to work with the MAMANs, we need to work with the IPMans of this world to be able to get these products to this place, to the end users, and achieve what the government wants to achieve on the long run, which is to deliver these products at an affordable rate. And so what we want to see is to see more collaboration between the refiners and the other segments, other actors playing within the downstream segment.
Rather than fighting. Yeah. All right. Let me come to the Executive Vice President, Downstream. Our inland depots could have been some sort of huge relief in terms of how you move this product bulk. You have them strategically located. What's the latest with those storages as it helps with distribution?
As I said earlier, because of non-usage, obsolescence, and abandonment, our pipelines and depots across the country are down. But as we speak right now, in NNPC, because of funding issues, we're able to do a BOT scheme that right now we have concessionaires, and right now they are working on it. The over 22 depots that are placed across the country from Kano, Gusau, Gombe, Maiduguri, Yola are being refixed. And then in not too distant time, that will give us a better capacity of depot where we'll be dispensing and distributing our products. Before now, years back from not too distant time, 2017 and thereabout, all these depots were focal points where people and our marketers, our vendors, take finished products from there to the neighborhood because of proximity. But because the pipeline is also down, we're, just like I said, we're refixing it, including the largest, the System 2C, which is coming from Escravos through Warri, then to Kaduna, because right now the Kaduna refinery is on a higher level of mechanical completion. So that transportation model is being refixed with cognizance with the latest technology to support safety, insertions, security of products, and the lines. So we're doing a great thing, and I think in a not too distant time that I said, the mode of transportation, the one we have, will refix it, and then the depots will be able to support up-country distributions of our finished products. This is what we are doing right now, and then there may be long-term plans so that we do a lot of pipeline networking because of safety and because of avoidability, risks, and easier. The tariffs are minimal, they are not cost-effective, and then to reduce the impact of our motoring in the road landmarks. So I think this is the position that we are right now.
Thank you very much. Okay, because of time, I'm just going to run through all of the panelists here for at least a minute and a half. If it's just going to be a general question. If you were to take away a key decision to run back to your board for a conversation on what next to be done as a derivative from this conference, derivative from this granular conversation around the future opportunities and outlooks for the downstream, what will that be so that by 2026 February, perhaps if this conversation opens the conference next year, quite ambitious, but what would that be? I will start with you, Olumide, toss it back to Charles, and we can now flow back to Stockholm, Idoko, and Kreger.
Wow, thank you. Big thing to change. So I think that just as much as there is an energy mix, we've talked about diesel, CNG, etc., there's also a transportation mix. The purpose of the downstream and what differentiates us from the upstream is that we deliver energy to people at their point of need, right? It's a very direct thing. So I would say that maybe one or two areas where we really need to focus in terms of, given what we have right now and the mileage we can get out of it, is that we really look at the road network and we address that as an investment opportunity. The only way is up. The last time I checked, about less than 15% of Nigerian roads were developed. I understand that there's a 35,000 kilometer road network that is being scheduled for upgrade, for renewal. I further understand that there are tax incentives that are being deployed. We've seen those tax incentives deployed. We've seen it deployed at the Obajana to Kaba Road. We've seen it at the Apapa Oshodi. There is a lot that can be done, and there's a lot of impact in getting the road fixing right. We see drivers that drive 7-8 days to deliver petrol to stations. It's a miracle those guys do those things. And it's a miracle that they do it at what we pay them to do. I think if we fix that, we will take a big chunk out of the cost and time of running petrol up and down this great, or delivering energy and fuel up and down this great country of ours. It would go a long, long way. And if you isolated that alone as a fix, I think the impact would be significant, especially when you think about the amount of effort it's going to take to fix every bad tanker there is on the road. A good road forgives a lot of bad engineering. Thank you.
Charles.
Okay. For me, the downstream sector needs a lot of investment. And the concept of the African Energy Bank, to me, is a masterstroke. My appeal or advice is that I hope when it takes us fully, they don't forget the downstream. They should assist the downstream in terms of loans and investment.
Minister is smiling and happy at your requests, I guess. Hob? Use the microphone.
Oh, sorry. And just to add to what others have said, I think making sure that Nigerians have a choice of the fuel that suits them best at an affordable price, being it CNG, being it LPG, being it PMS, being it whatever it takes for them to sort out their energy need. So there's a choice for people how they sort their energy need.
Who's going to drive that?
We can drive that as an industry.
Idoko?
Thank you very much. I want to add to what my colleague from Total has said. For us in the refining segment, we would need a lot of funds. Funds has been quite an issue, and we would appeal to the Honorable Minister and then the representative from Apple. As the Energy Bank is coming on stream, we want to see an intentional effort to make funds available to the downstream. We are the ones who drive the economy. We create value. And you can only feel those values, not so much when you do upstream like you do to downstream. And then there's been conversations around increasing, our production output upstream. We want to appeal that going forward, there should be also some intentionality around making crude available from the increased output in the spirit of the DCSO as contained in the PIA to address the domestic needs, because as we speak, most of our refineries are still producing below capacity, and most of these challenges come from access to feedstock. We also want to appeal, and I'm sure this is just at the industry level, that in trading our products, it should be customized such that there should be some uniqueness to how trading is done, not us adopting a trading mechanics that is foreign to us. For instance, they would say, okay, we trade in Brent or WTA, while we were purchasing and refining for a local market. I'm thinking that if we want to be a proper hub, then we should have a trading mechanic that is unique to Nigeria and unique to the sub-region. Like that, we can maximize whatsoever advantage that comes from refining locally. Thank you.
Yeah, yes. Speaking, directly from from what he said, the sub-region perspective, we still have a lot of countries within the sub-region that are landlocked. And that in itself, for me, it's an opportunity. They're going to need the coastal countries. And in terms of connectivity and all of that, what will be the Pan-African view for you in all of this conversation around the downstream and growth?
All right, thank you. The first one is harmonized Pan-African specs. You can't have so many different specs across the continent and talk about collaboration when you're not pumping the same thing. So first thing would be, please let us focus on getting at least 50 ppm. I was at the meeting of ECOWAS ministers in 2020 when they said by January 1st, 2025, we are going to ensure that everybody's producing 50 ppm. We know where we are, so we are advocating that. That's the first thing. Second one is on focusing on actionable projects, bankable regional infrastructure. One of the things I'm very proud to support at ADA, working again with Apple, and His Excellency Gabriel Obiang is not here. He's the president of the Central African Pipeline System. 11 countries across Central Africa are coming together to collaborate on petroleum and gas infrastructure that will really help because you're now putting together a market. Okay. Third thing, I have mentioned petrochemicals. Please, let's stop exporting propane. Let's stop exporting naphtha. Let's start putting the value here. And last but not least, it's a longer-term thing, but it's something that I'm happy the minister is here and the regulator is here. Sustainable aviation fuel. At our other storage and distribution conference in Addis last year, the CEO of Ethiopian Airlines came and talked about the issues they are going to have given that the International Civil Aviation Authority has stated that they must comply with SAF by, I think, 2040 or so. Africa has some very busy airports. Nigeria has two of the busiest airports in Africa, but we need to get regulations and start to think about how we can build sustainable aviation fuel. How can we start to look at our refineries for crop processing and put those investments in place so that we ensure that we're an investment destination and we don't lose out on either sustainable aviation fuel or Minister, you talk about Saudi. They are looking for refineries to support in low-carbon aviation fuel as well. Those are two options I think we should also look at. Thank you.
It's a good thing that the regulator is here, and I hear so much about DNA of products, finished products, which, of course, in the last few months and weeks in Nigeria, for instance, has become a very touchy and very controversial issue. I see what Petan tried to do, summary of what they tried to do at the SIPEC conference a few weeks back, and the conversation around how to move an integration from just local content partners and practitioners from Nigeria to the regional level. And I think that in itself should signal, in my estimate, for the regulator, when now you're talking Pan-Africa, I'm talking about NMDPRA, where you can have also that kind of regional collaboration to have maybe laboratories that ensures that the kind of product spec you're talking about is harnessed, whether you want to choose 50 ppm, you want to choose 100 ppm, but within allowances that can be allowed within, say, 5 countries regionally or 3 countries regionally. And so if you're pumping here, it gets all the way and it's the same spec. You've been a wonderful audience. Thank you, panelists. This brings us to the end of this conversation. So that in itself also underscores what I and Richmond discussed when we started. So that's the secret of what we're chatting here. Asked me to stay on time. Thank you very much, audience. Thank you.
Just remain seated 1 second. The minister has joined us here since, and I've listened to you. I think it's only fitting that we also listen to him to give us some thoughts on the panel. We've been talking upstream since, and now we're talking downstream. And I'm sure our minister has been briefed on the downstream as well. So let's welcome distinguished Senator Heineken Lokbobiri.
Thank you, Your Excellencies, distinguished ladies and gentlemen. I was actually waiting for the panel to start discussion. I didn't know that they've already started until somebody drew my attention to it. That the panel has already gone halfway and I wasn't here. And now I'm compelled to say a few things. But it could have been better if I was there from the beginning to hear from them, so I can also share my thoughts. But however, the issues are always the same. From the period I came in, all of you will agree with me that, everybody is talking about the same issues that we've always, discussed in different, fora. You agree with me that one of the reasons why this government decided to take the bold step of completely deregulating the downstream sector is to create more opportunities. So that Nigerians can get the best, of the industry. Before now, NPG used to be the sole importer of PMS because of subsidy. And we realized that that wasn't sustainable. There was no point, to continue to do the same thing the same way and expect that there will be a different result. So the president, from the very first day he took, out of office, said subsidy was gone. And today, we are getting the benefits of food deregulation. I was in the South during the Christmas period, and I had an opportunity to visit a couple of filling stations. NPG filling stations were selling at a higher price than, other marketers. The implication of that is, of the regulation, is that price is finding its own level. And it's always interesting, to hear from experts about the challenges each operator, whether you're in the upstream, whether you're in the midstream, or you're in the downstream, faces as far as this industry is concerned. And everybody who has spoken here, had mentioned about the issue of funding. Funding is always a challenge, and that was why I always, thank Apple, in collaboration with African Exim Bank, to come up with this African Energy Bank. It may not solve all the funding problems, but like what, we've always, said is that it will complement, other sources of funding for investment in oil and gas. And I want to assure you people, as the head of delegation to Apple from Nigeria, I want to assure you, and one of those, people who work tirelessly to ensure that the bank is hosted in Nigeria, I can assure you that no sector will be discriminated. Whether it's upstream, downstream, midstream, no sector will be discriminated. The bank is basically going to be like other banks. You have to actually make your case. Let the bank evaluate, your documents and be sure that, look, whatever you are proposing is bankable. But the point is that we are trying to create an exclusive platform, to fund, oil and gas. In the downstream sector, I've been told that if you export our raw crude, to the international market, we don't get the real value. And I was talking to, the experts are talking to Meman, chairman who is here, and some other, officials of his own group. And somebody said that if you refine your products, you actually get about $2,500. Whereas a barrel of crude is going for about $75 per barrel, if you refine the same barrel, you may get up to $2,500. From the byproducts, petrochemicals, you will get $2,500. And that, corroborates what, a friend of mine told me from UAE. He told me that you get 18 times more value if you refine. And that is why government took the pains to ensure that there's food deregulation. Because if we continue to, import fuel and sell at a subsidized rate, refineries will never survive. And that was why, that bold decision, though painful to government, was taken. And all of us are beginning to get the benefits of, of that decision. I had always said that if the upstream do not succeed, the midstream and downstream will not succeed. You always talk about the issue of supplying crude to the refineries. We must get the crude first before the upstream operators can sell crude to you. They themselves, anytime I talk about the issue of domestic crude oil supply obligation, they say, look, our crude is committed to our financiers. Because they are going to borrow money from maybe some Vitol or from some marketers who are giving them finance, to develop their blocks, and they've already committed, the crude. But what we're telling them is that, look, this is a legal obligation that you have to find a way to balance. We're not saying that, look, sell all, but look, there's a legal obligation. We have an obligation as government to ensure that we provide crude to domestic refiners. But that is on the basis of a willing seller and a willing buyer. We don't want to favor one group against the other. We don't want to say that, the stories I hear are very conflicting. Those from upstream will tell me that the refiners are saying that they should be given discount. The refiners are saying that no, these guys are selling, the crude at a higher price. I don't even know whom to believe. But I've always encouraged them to please sit on a table, negotiate. This is business. The upstream operators, we have told them you have obligation to sell to them, but at the international price. Even if you have to sell to them in local currency, it should be based on the prevailing exchange rate. Because we have to be fair to everybody. But the truth is that even the refiners have no money to even buy the crude. So in most cases, we'll go back to the same problem, financing. And that is why the game changer is this African Energy Bank. And this is not a small bank, it's a very big bank that may not solve all the financing problems, but it will go a long way. It will be the beginning of we finding solution to our financing problem. And I've always, said that the West is using finance as a weapon against Africa. And so, once they know that we have found a financing solution, that may stop. Whereas, we are finding it difficult to, for investment in fossil fuel here. They are investing in fossil fuel in their own jurisdictions. Want us to stop hydrocarbon, exploration in Africa so that they can sell renewables to us. But I've also asked them, are you going to give us for free? If we have to buy your renewables, then we must raise money from oil and gas. We must raise the money from oil and gas to be able to buy that. And I've also told them what we need is investment, not aids anymore. If you have grown-up children who are depending on you for aids, they will never grow up. That's why in the West, once you are 18, your parents will drive you out of the house. You go and struggle. But in Africa, what has happened is that somebody is 50 years, he still lives in his father's house. So he will continue to be a baby forever. So, ladies and gentlemen, the point that is important here is that for the downstream to be successful, all of us have to work together. It's also important that those of you who are in the downstream should also take into consideration the security of both your trucks, your staff, and Nigerians. You agree with me that one of the things that are most disturbing now has to do with tanker explosions. most of the tankers conveying, refined products are not roadworthy, and we know it. The drivers are the most illiterate, who can't even identify road signs. And the trucks are sometimes overloaded. I can't imagine how NNPC will take a truck of 60,000 liters. You know what that does to our roads? That's a national oil company. The one of them that happened in Niger, I heard NNPC truck was carrying 60,000 liters. Our roads are not meant to carry 60,000 in only. I mean, it's not acceptable. NNPC is our own. That's a national oil company. And I believe going forward, we should be able to adhere to strict traffic regulations, strict traffic rules, so that if a truck is meant to carry 33,000 liters, carry 33,000 liters. It is safer. We need to also deploy technology to your trucks, so that in your office you can know, you can control, you can see what is going on with your driver. Some of them on the way they are drinking kai. And Nigerians also have to appreciate the danger of going to any accidented tanker to scoop fuel. I don't know how dead the Nigerians are. Somebody will die in Niger. Next week, another truck will fall. Everybody is still. And at the end of the day, they want to blame it on who? On government? Government can't be the one. The trucks don't belong to government. Government can't be everywhere. What we have done as government is to ensure that from the loading points, we have deployed personnel to ensure that, we get some control. But that is not enough. This problem cannot be solved when all of us, team up together. So for those of you who are in the downstream, I want to assure you that refined products will continue to be used in Africa. Continue to be used in Africa. Energy transition. The OPEC Secretary General said the Paris Agreement has to do with reducing emissions. Those countries that are responsible for those emissions. Nobody is stopping those emissions. But they are the most vocal proponents of energy transition. But they are not. The real purpose of Paris Agreement is to reduce emissions. Are they reducing emissions? The answer is no. Between China and USA, over 55%. Are they stopping? No. The electric cars are still being manufactured from factories that are powered by either coal or fossil fuel. So this is real hypocrisy. And I've told them in any global, forum that I've been privileged to attend, I've told them that, look, this is basically geopolitics and it's unacceptable. Africa is a victim. We should see ourselves as victims. We should also appreciate that we have enough market in Africa. Let me conclude by saying that, look, Africa will get the full potentials of most of the products that we use here, close their affairs in Africa. The real value of these God-given resources. Let me conclude by thanking you, the experts, the panelists, for your brilliant discussions, and I've been very well educated, having had the privilege of listening to you people. Thank you very much, and enjoy the rest of the day.
Thank you very much, distinguished Senator. Let's begin with Dr. Sheye, who is represented. Thank you. Let's give you represented there. I'll be followed by Mr. Adeosun. All right. Please proceed, Mr. Adeosun. Thank you very much. Next is Mr. Abdullahi. Engineer Krager was talking about sustainable aviation fuels. If you know any seed that is not edible seed that we can convert to sustainable aviation oil, please talk to me. We're interested. Mr. Stockman, please. Mr. Stockman, thank you very much. And then, of course, Mr. Oyarekwa, Koran chairman, as represented by the PS Idogo. Engineer Krager, ES ADA. If you're in the downstream and you're not part of ADA, then you are not ready for an African-wide collaboration. You should be a part of ADA. ADA is driving the conversation ever so seriously, and the collaboration is deeper every year. Olu Phillips, you will get an award this year. You did a fantastic job moderating, and your time management is impeccable. Thank you very much. Dr. Ogweche OON, sir, please come forward. Let's say thank you to you for your opening address. Allow Oga pass now, photographer. You want snap him, one pass. If you no pass, how you go snap him? Thank you very much. ED, you're receiving on behalf of ACE. Mr. Boagu Koha, thank you very much. Please, ED, can we allow ED pass as well? Thank you very much. Your Excellencies, distinguished ladies and gentlemen, lunch is served at the Coconut Garden. Lunch is served at the Coconut Garden. The Coconut Garden is where you had refreshment yesterday. A little further down to your right, you'll find the Coconut Garden. That is lunch for the delegates. Distinguished delegates, that is your lunch. Lunch for the VIPs and speakers is served in the VIP speaker holding room. We'll be back here at 2:45. 2:45 to continue the session. Please, distinguished, Oga Okoha, photo please, photo. Dr. Ogbeche, please, sir, photo, family photo with the panel, please. Can we give them a round of applause one more time? Thank you very much. I'll see you at 2:45 for the final panel session here. 2:45. 2:45. I'll see you at 2:45 for the. Please take care of your personal belongings. $2:45 for the and the Energy Alliance session. Our lead speaker for that is ready. Let's meet at 2:45. Bon appetit. Enjoy your lunch. Photographers, you never do. Thank you very much. Take care of your belongings. Please, we want to say a big thank you to Total Energies for sponsoring our lunch. Thank you so much, Total Energies. Thank you, Total Energies, sponsors for our lunch. A big thank you to Total Energies. Delegates' lunch is at the Coconut Garden. Delegates' lunch at the Coconut Garden. VIP and speakers in the VIP speaker holding room. Delegates' lunch at the Coconut Garden. I explained to you, just go through the place you had refreshment yesterday. A little down to your right, you find the Coconut Garden. We want to say a big thank you again to Total Energies for sponsoring this afternoon's lunch. We appreciate providing us the deep pockets to have a delicious meal this afternoon. Again, thank you, Total Energies.
Summit 2025, featuring Duncan Might.
Yes, 27 February, I'm going to be performing live at the Nigerian International Energy Summit in Abuja.
Also featuring the DJ battles, old school, Afropop, and Amapiano. The Richmond Game Show with lots of prizes to be won. 7 p.m. Thursday, the 27th of February at the Abuja Continental Hotel. Welcome to Nigeria. A great people, a great nation, a whole vibe. Experience the people, the food, the music, the culture at the African Rave Nigeria International Energy Summit 2025, featuring Duncan Might.
Yes, 27 February, I'm going to be performing live at the Nigerian International Energy Summit in Abuja.
Also featuring the DJ battles, old school, Afropop, and Amapiano. The Richmond Game Show with lots of prizes to be won. 7 p.m. Thursday, the 27th of February at the Abuja Continental Hotel. Welcome to Nigeria. A great people, a great nation, a whole vibe. Experience the people, the food, the music, the culture at the African Rave Nigeria International.
All right. Welcome back from lunch. Good afternoon. Hope you enjoyed it. Strategic Energy Alliance session is where we now are. Again, we want to say a big thank you to Total Energies for sponsoring lunch. Let's please give them a round of applause one more time. Global Partnerships for Africa's Energy Future, a sub-theme of our central theme for this year's conference. And we're going to take some remarks, and after that, the panel will take center stage and do a discourse around building bridges, the role of alliances in unlocking Africa's energy potential. Without much ado, let's get into the business of the session, as I'd like to welcome the Secretary General of African Petroleum Producers Organization, His Excellency Dr. Omar Farouk Ibrahim.
Thank you, Richmond. From yesterday to this morning, we've been inundated with reports about how President Bola Ahmed Tinubu has been supporting the Nigerian oil and gas industry. From Komalafe to Kyari to Minister of Gas, Minister of Petroleum, everybody. I have been to many African countries. The industry is for the press. I have been attending the Egypt's Energy Conference for the last 8 editions. He participates. I go to Libya Energy and Economic Summit. Prime Minister Debeba is also there. I go to Angola. President Lourenço is there. The symbolism of that is that you are telling investors that there is support for the industry at the highest level. Even if you don't come and say anything, your presence for 5 minutes makes all the difference. So for those who have the ears of Mr. President, please tell him that it's not enough for people to come and say, Mr. President supports the industry. It should be shown by action as other countries are doing. Thank you. Excellency, I was passing a message to you, you are not here. I will. Excellency, Minister, distinguished ladies and gentlemen, this session is on strategic energy alliances, and the theme that the organizers have requested me to speak on is global partnerships for Africa's energy future. The organizers were also clear on what they want highlighted for critical discussions. These include shared challenges, innovative strategies and frameworks necessary to foster collaboration, attract investments, and position Africa as a global energy powerhouse. I like the focus on innovative strategies and frameworks necessary to foster collaboration, because this has been sorely lacking in the discourse on finding solutions to Africa's energy challenges, and indeed, most other challenges. While all of us have come to accept a global paradigm shift away from fossil fuels to renewable energies, euphemistically called the energy transition, and the various challenges it poses to the African oil and gas industry, our search for solutions to the new challenges have relied essentially on the same old received wisdom, have failed to recognize that the new challenges posed by the new paradigm shift cannot be fundamentally addressed in the traditional way. And what is the traditional way? It is looking up to those who created the challenges for you, for them to help you find solutions to the very problems that they deliberately created for you. Of course, the solutions that I propose to you is to do more of the same thing. Create a more enabling environment for foreign investors, and by this, they mean reduce taxes, allow for unhindered repatriation of funds and capital, and provide risk guarantees. And this is what we've been hearing in the last few days. Sadly, our intellectuals accept these prescriptions and simply regurgitate them, and our policymakers adopt them. Our intellectuals have lost their critical thinking faculties, and simply echo what they read from others. But Africa is changing. With the reform of Apple to Apple, we are championing that paradigm shift in the search for solutions to the imminent challenges that face the African oil industry as a result of the global energy transition. What are the common challenges that the oil and gas industry faces on the African continent today? Excellency, distinguished ladies and gentlemen, some 3 years ago, Apple conducted a major study on the future of the oil and gas industry in Africa in the light of the energy transition. The findings of that study is that the oil and gas industry in Africa face 3 imminent challenges, namely the challenge of funding, the challenge of technology, and the challenge of markets. Funding, because in the last 70 to 100 years that Africa has been producing oil and gas, we have failed to raise the capital necessary to control that industry. We have relied heavily on outside forces, outside investors. We have been made to believe that we don't have the money to invest, but it's not true. The second is technology. Again, for the 70 to 100 years that we've been doing this, we have failed to be able to domesticate, take control of the oil and gas industry. Even when IOCs come to Africa to do business, their research and innovation centers are in their home countries. As for markets, we are told that we are too poor to buy energy, so the infrastructure to make energy go round is not even there. If you go to every African country that produces oil and gas, the pipelines run from the fields to the seaport to be exported. How did we go about addressing these challenges? We decided in Apple to be innovative, and I'll explain how. For the funding challenge, we decided that it is suicidal to have complete trust on those that have traditionally funded our oil and gas projects. This is because we came to realize that for as long as it suits them, they will fund our oil and gas projects. But when it doesn't suit their interest, even when they know that our lives depend on it, they will not fund it. And this is very clear from what happened up to 2022. Is it 2023 or 2023 that the Ukraine-Russian war started? Before then, we were begging them, please come and invest in Africa. They were saying it's dirty oil, it's dirty energy. Immediately, the Ukraine war started, these same countries were coming to us say, we are ready to put the money, provided that you produce this energy for us, not for yourselves. This informed our decision to look within for solutions to the funding challenge. And this is how Apple went into partnership with Afrexim Bank to found the Africa Energy Bank, AEB. And as you heard me say yesterday, we are not going to open our doors to those who bring in lots of money with a hidden agenda of distracting us from pursuing our objectives. When I said this yesterday, some people felt we were crazy. We want to be able to control that bank for the purpose of which we set it up. We don't want anybody to come with billions, lure us into accepting, and then derail us from our objectives. I recall the many snide remarks and attempts to discourage us from pursuing the establishment of the Africa Energy Bank from the very first time we signed the MOU with Afrexim Bank to establish the AEB. Sadly, that lack of confidence in the ability of Africa to establish our own financial institution for energy was also expressed by our own African brothers. But we were not deterred. We remained focused, and I'm pleased to say that it has paid off. Even before we had signed the establishment agreement and charter of the bank, a number of our member countries had paid part of their subscriptions to the share capital of the bank. As I speak today, we have gone beyond having an agreement to having a treaty in force, because we have had the required number of member countries sign and ratify the establishment agreement and the charter of the Africa Energy Bank. I want to use this opportunity to thank His Excellency Minister Henry Lokpebiri for the excellent work he did in getting Nigeria to sign and ratify the charter and also the agreement to make it a treaty. As you are aware, Nigeria was given the hosting right of the Africa Energy Bank headquarters. We are waiting for the building to be ready for us to move in and launch the bank. The second area of common challenge for the industry on the continent is the control of technology of the industry. As I said earlier, in the over 100 years that Africa has been producing oil and gas, we have depended heavily on foreign technology, just as we have been on funding. We send our operators to Europe and America to be trained. Almost all member countries have oil and gas research and development institutions and also training institutions. Almost all of them have agencies or departments for local content. All of them aspire to be the best in all the sectors of the industry, upstream, midstream, and downstream. But ladies and gentlemen, how realistic is this ambition? To be given the huge cost involved in establishing research, development, and innovation centers, as well as training centers in the oil and gas industry. Does a country with 200,000 barrels a day production need to spend huge amounts of money to set up world-class research and training institutions? Do we need to duplicate efforts in all these sectors? Thinking out of the box, Apple decided that it makes better sense to have various centers of excellence across the continent for the different sectors of the industry. We undertook a tour of our member countries' oil and gas research, development, and training institutions with a view to identifying those that are most advanced in each of the sectors. When we have decided on an institution, we plan to audit it to know what it needs to become a world center of excellence. That institution shall then be designated as a regional center of excellence by Apple. We shall have these centers of excellence across the continent. That way, we will be pooling our resources to pursue common objectives of solving the technological challenge on the African continent. To secure the buy-in of all our member countries and industry players, we created the Forum of CEOs of Apple NOCs, the Forum of Directors of Research, Development, and Innovation, as well as the Forum of Rectors of Oil and Gas Training Institutions of Apple member countries. These various fora meet across the various member countries. The reason why we rotate the meetings is for these CEOs, directors, and rectors to see for themselves what obtains in other countries and compare them with what they have. That way, when a particular institution is selected, few CEOs will complain that they have better facilities. Let me say this. When we started the Forum of CEOs of Apple member countries, we had 15 Apple member countries at that time. It was the following year that we added 3 more countries to make it 18. Out of the 15 CEOs of Apple member country NOCs, not more than 2 of them knew each other. So I had the task of introducing, oh, this is the CEO of Sonatrach, this is the CEO of NMPC, and so on. But each of them knew the CEO of Total, of ExxonMobil, of Schlumberger, and all of them. And that was a telling story to us at that time. When they go to these countries, we make it a point that they just don't sit in a conference room, but they take them to the facilities. The idea is that when we have finished that, we come, and if we say that Nigeria has gone farthest in terms of upstream, none of them will contest because they have come and seen it. So we designate Nigeria. Algeria has gone farthest in gas, for example. Egypt, petrochemicals. Angola, midstream, etc. When you do that, because everybody has gone and seen what is on the ground, nobody, it's like when we were doing, selecting Nigeria, we're selecting the headquarters of the African Energy Bank. We asked the team, go to all the countries that have indicated interest, and this is the criteria. So, with this, we are going to have regional centers of excellence in upstream, midstream, and downstream. And Nigeria has no business trying to say that they want to be a center of excellence in upstream, in midstream, and no, you don't have the resources. If you have invested in one so that the whole of Africa will come here and see this as the center of excellence. Where it is not your area, send your people to another country and let them be so. But the understanding is, if Egypt, for example, has place for 500 people every year, and they currently take 450 in their country, 50 to other African countries, we are going to sit with them to say, you take 250 and others will bring 250. Or you double and we are going to put the money to help you do that. The whole idea, like I said, we need that to be able to make the progress that we have, that we need to make. The final challenge is that of markets. Yesterday, I noted that even though we have the largest proportion of the world's population living without access to modern energy, some 1 billion people in the African continent, we export 75% of our oil and 45% of our gas, respectively, outside of Africa. This is because we have been made to believe that there is no market in Africa for energy. In Apple, we do not believe in this narrative. Markets do not just emerge, they are consciously developed. And I'll give an example. Immediately after the Second World War, and the whole of Europe was devastated, infrastructurally, economically, and everything, the United States decided to do the Marshall Plan. A lot of money was pumped into Europe to revive the economy. Why did they do this? Charity? Definitely not. They need a market. They needed trading partners. They were not going to trade with the communists, so they needed to trade. And this is why we keep saying that in Africa, we should begin to look into developing trade relations amongst our countries, not between our countries and Europe and America, because you will continue to be dependent. I will now turn to global partnerships. Excellencies, ladies and gentlemen, for too long, Africa has been treated as an appendage in the global energy trade and discourse, as in many other affairs, primarily because most of the 54 countries on the continent see collaboration with countries or blocs outside of Africa, particularly with the global north, as the only or the best means for their socio-economic development, and that they stand to gain little or nothing by collaborating with their neighbors or other blocs on the African continent. In fact, in many instances, even when the economic advantages of collaboration with neighboring countries are so obvious, mistrust makes such collaborations impossible. We have become so preoccupied with defending the so-called sovereignty of our territories that we have lost the whole essence of state and governance. This, to me, partly explains the failure of the OAU, the African Union, and if we are not careful, the much heralded AFTA, to take us to the promised land. Africa cannot get out of Africa cannot get the full benefit of partnership if we are seen as weak partners. Look at how Europe faces the United States or China or India. They have common rules on trade and many endeavors. While I believe in global partnership, I also believe that we need to be strong to go into partnership so that we can be treated as equals. Anything less will make us continue to receive the crumb of partnership as we have been doing for over a century. I look forward to an exciting discussion, and I thank you for your kind attention.
Thank you very much, His Excellency Dr. Omar Farouk Ibrahim, Secretary General of ARPO. You set the stage for the panel so well that the distinguished senator had asked me to continue straight to the panel following the stage that you have set for the panel to discuss. Before you walked in, distinguished senator, sir, Your Excellency, the ARPO Secretary General was saying that he's gone to many African countries to attend these conferences, and part of the demonstration to show commitment is that the presidents attend, that he's sending that next time a message should be sent to the president that should attend. It wasn't me, sir. It was the SG. I was just re-echoing what the SG said, sir. Thank you very much. Let's please give the SG another round of applause. Thank you, thank you. To the business of the panel, now I go. First off, we'd like to welcome one who again is adding the A in the STEM to make his team accountant, who has gone on to work in this industry, one time a permanent secretary in his country's Ministry of Agriculture. He's worked for ECOWAS in renewable energy commissions and all, but currently he's overseeing the petroleum and gas business in his country as managing director of the Gambian National Oil Company. Please, corporation, let's welcome our first panelist, Dr. Boubacar Njay. Second seat from my right. Yes, that way. The other one. No, to your right. Yes, right there. Thank you, right there. Thank you, thank you, thank you, thank you. All right, moving on is one who is one of only few Africans, if not the only African, who has received the highest honor given by the American Association of Geoscientists, Petroleum Geoscientists, that is AAPG, the Michael Halbotti, I think, Distinguished Leadership Award. He's also received such an honor from his home association of NAPE, currently overseeing the business of SLB in Nigeria as country director. Welcome, Dr. Nosa Omorojon, F. NAPE. Okay, joining them on the panel, we'd like to welcome the commercial director, head of bilateral section Nigeria at the Chamber of Commerce, Industry and Agriculture for Belgium, Luxembourg, Africa, the Caribbean, and the Pacific. Interesting. Let's welcome Thomas Debout. Mr. Thomas, you're welcome. Please give me a round of applause. Thank you very much. All right, our next panelist is a founding partner at Alex, a full-service commercial and disputes law firm in Lagos, Abuja, Port Harcourt, and Ghana, and chairman of the board of Major Oil Service Company, and chairman of the Lagos Chamber of Commerce and Industry Law and Taxation Committee, and chairs the board of the River State Investment Promotion Agency, a senior advocate of Nigeria. Let's welcome Mr. Lawrence Fubara Anga, SAN. Okay. Just to be safe, I've not seen AJ in the room. Is anyone presenting NJ? So I don't make a mistake. No one. All right, I just carry on. I know NJ is in London. Okay, our next panelist is one who has served the industry in Nigeria, working for Shell, and has gone on to work for many multinationals, advising governments in the energy industry, helping accelerate projects, and indeed helping also assess funding. Currently, he's executive vice chairman, Africa Energy Council. Let's welcome Dr. Chinan Dikwal. Next, we'd like to welcome one of those who are truly fostering collaboration across the continent of Africa. They make effort from parts of Africa to learn diverse languages so they can do business easily with their neighbors across the continent. He's the managing director of SONAP from Guinea. Let's welcome Dr. Lassine Conde. You're welcome. So, to help us drive this conversation is an expert with many years of experience under his belt working for a leading IOC in Nigeria. He served in many different positions working for Chevron in Nigeria, but currently he is overseeing Chevron's government policy and public affairs relations. Let's welcome our moderator, Mr. Olusoga Oduselu, GM Policy, Government and Public Affairs for Chevron. The show is yours, boss.
Yeah, thank you, Desmond. I appreciate this opportunity to moderate with this distinguished gentleman. Good afternoon, everyone. First and foremost, I just want us to give another round of applause for Dr. Farouk. I think he did justice to the topic of today. When he started, I was following and trying to understand where he was going. And I appreciated that you took us through that journey and to give us a background as to why Apple was pushing this. And you touched on many things that is very important. And the panelists, I think, will be talking about it. The key thing is the fact that you recognize the limitations across Africa. If Africa is to achieve its objective to be self-sustaining and self-sufficient in the oil and gas industry, we need to leverage each other's strength. And currently, we are all looking at ourselves and trying to grow ourselves. And for us to look beyond that to go to the next level, we need to see where the area of collaboration exists. If Egypt is strong in midstream, and Algeria is strong in downstream, and Nigeria is strong in upstream, beyond development, human capital development is also key. How do we grow those talents, sustain the feeder pool? So this is very excellent. So that's why I was very impressed with what Apple is trying to do. So to the panelists, I will be asking questions, and let's talk about this. To my very good friend, Dr. Babuka Njay. I went to learn that, and I think I have passed, right? So the question is, what role do state-owned energy enterprise play in fostering international collaboration? He has talked about it, and I think he was spot on. When the group executives of each country don't even know each other, how can we foster collaboration? So the question is, what role do you think state-owned energy enterprise have to play in fostering this international collaboration?
Thank you very much. Good afternoon, everyone, and greetings from the smiling coast of the Gambia. International energy companies are very, very important as far as our respective countries are concerned. And I believe key among what we stand for is improved national security, because we all know that there is a need to continuously oil the wheels of energy security. And energy security translates to national security, because it is through energy that energy serves as the pivot around which all other considerations revolve. And we cannot talk about energy security and sideline oil and gas development. And I always say this, you look at the West, the Middle East, they've developed their economies, and they are able to negotiate or discuss at the international level. Right now, African nations, through our respective NOCs, must step up and develop what we have. Because if we develop our oil and gas reserves, then we can be on the same wavelength to discuss with them, at the global stage. But energy security translates to national security. And if you don't have national security, forget about international collaboration. And I think that is key. Another point is investments. We, for instance, in the Gambia National Petroleum Corporation is the business arm of government. And by virtue of that, we are mandated to enter into contract negotiations with IOCs and other indigents. So we play that role in trying to bring in, mobilize investments, could be through co-funding energy projects or foreign direct investments. Then the other role we play is oil and gas diplomacy, and that is needed. The detractors are talking about a cleaner, greener world, but like someone alluded yesterday, until 2050, the oil and gas would account for 80% of the global energy mix. So we are charged with the responsibility of evangelizing the importance of continuously developing our oil and gas reserves, because these are God-given reserves. They are natural reserves. And I said diplomacy, and we are diplomats in this piece. We are not lobbyists, because we are actively engaged in this provision, in this trade, in this industry that we believe can be the catalyst to a complete transformation of our different economies. To sum it all, our role is to foster economic development and better trade terms. In the Gambia, for instance, looking at the Gambian context, over the years, we've relied on productive sectors like agriculture and service sectors like tourism. In a given year, most of our tourists come from Great Britain. In a given year, there was a travel advisory, there was a travel ban. So the foreign exchange that, we hitherto benefited from tourism, collapsed. Then you look at the productive sectors like agriculture. We believe our agricultural system is predominantly peasant-based, with heavy reliance on the rains. Sometimes the rains do not come as predicted, and agricultural failure wouldn't guarantee us the relevant foreign currency that we need as far as our balance of trade is concerned. But if we develop our oil and gas reserves, which are our God-given resources, we can be assured of better economic development within our member countries. Thank you very much.
All right, thank you so much. Appreciate that. I'm moving over to Dr. Omoredion. So, based on your experience, when the moderator was introducing you, he tells me you have global expertise and you appreciate what's going on in the international space. And if we are to achieve that African regional objectives, as mentioned by Dr. Farouk, I just want you to point out to us the biggest technological gaps in Africa's energy sector that global partnership can address. Because right now we are on a journey, so how do we close those gaps, and what are those gaps?
Thank you very much, Mr. Moderator. And let me go straight to the question. First of all, you have to understand the context we're talking about. Africa today sits on about 127 billion barrels proven oil reserves. Gas, about 6 to 8 TCF, all proven. That's about 8% of the entire energy resource in the world. And yet, despite all of this, about 600 million of Africans have no access to energy. Energy is the backbone of technology. So I wanted to throw that concept in for us to understand where we are coming from. Beyond oil and gas, coal is in the mix as well in terms of a source of energy for Africa. Renewable energy is in the mix as well in terms of source of energy for Africa. Sub-Saharan Africa in particular has the lowest kilowatt per capita in terms of consumption, not just in Africa, but globally. So then it's a problem. The beauty of this is that we're talking about technology gap. The technology gap is occasioned by nothing but limited ability to have this technology. The continent remains largely, despite the fact that I just said we have about 127, the continent still remains largely underexploited. We are underdeveloped, it's underproduced, it's underutilized. But in the midst of all this, there is a country called Giant of Africa that is redefining the space. So when I speak about technology gap, the bulk of it may not be applicable to Nigeria, because in Nigeria you see a situation whereby the independents are stepping in, taking on the stage, and owning assets and running it based on expertise that's been acquired over the years. So what are these gaps? We've been underexploited. There's nothing that fits all. So rather than go specific, I'll try to be generalistic. When you're talking about exploration, we are suddenly making huge discoveries in deeper sands. We are making discoveries in some other parts of the continent. Oil did not just flow there overnight. Technology did not get there on time. Because it did not get there on time. The ballerina we are talking about in Ivory Coast didn't just flow underneath there in the last 20 years. It's always been there. It wasn't until the requisite technology was made available and deployed that those game-changing discovery was made. So when you talk about exploration, some things that are game-changing, Nigeria is doing it already, and a lot of African countries are going to do it in the area of advanced subsurface imaging. It helps you to define the underlying hydrocarbon. That's new technology. Technology that if you really want to unlock your reserves, because I tell people, the beauty about this hydrocarbon is that there's no boundary that limits it. It flows across. It flows across until you're able to have enough requisites, regulatory, and in situ enablers in place. You won't be able to attract the right technology to come in there and deploy the technology that SLB deployed in Nigeria 75 years ago when we logged the first well, produced the first well. You won't be able to get access to all of that. So technology is key, there's no doubt. Yesterday, 2 days ago, when we had this local content session, there was a question that was raised by one of the universities. So look, we have universities in Nigeria, all over Africa. We have competence, we have the know-how, but what we do not have is the fund to support us so we can help actualize some of this technology they're going to procure outside. We have it here. One university came here and talked about how they've developed a rig. PTI. Came here to develop how they've developed a rig. So what PTI needs, thank God the minister is here. We have PTDF. PTDF was set up for a reason, to ensure that at any point in time, the technology that this nation needs to compete competitively is deployed and available. PTI shouldn't be coming here and say, I have rig, I don't have access to technology, when there's PTDF that has a charter to ensure that technology that you need at any point in time is made available. So technology gap exists across the entire value chain. I'm a technology guy. I do not want to be here selling company and doing technology. I said, you need this, you need this, you need this. In the business of every line, when you go to trying to want to produce, you need enhanced oil recovery technology. When it comes to bringing it to the surface, you need surface technology. Another one that I can tell you, if you give me 1 minute to say this, I work for SLB, and we've invested over $150 million over the years to ensure today we assemble and produce Christmas tree in Nigeria. That's technology. It's not lip service, putting your money where your mouth is. So the technology gap will continue to exist. That's why, I mean, when Dr. Farouk sat next to me, I told him, look, I knew you when you were OPEC governor. You weren't this radical then. So it's good and very music to ears to have somebody like him that's been through an NPC, that was one time OPEC governor, respected administrator globally, come out and tell us, look, it's a charge. Technology is available. It can be procured. It can be acquired. We all have what it takes. But what you need is that enablement. That enablement, be it legislature or whatsoever. I like the idea that somebody is talking about setting some money aside for R&D. But R&D, and that's, Mr. Minister, sir, we equally need an alignment of all of that. You have this agency, R&D, this agency, R&D, that agency, R&D, this agency, R&D. I'm talking to 4, 5, 6 agency, R&D. Put everything together.
Thank you. Thank you. I appreciate that.
I'll come back.
Yeah, so harmonization, utilizing what we have, and strengthening what we've got is the key here. So I'll move on to the next panelist, Thomas. From an EU standpoint and EU perspective, I know EU have created several successful alliances. How can African governments create a more investor-friendly environment for foreign partners? We can't live in isolation. He's talked about technology, right? We have huge resources, we have huge potentials. So what are those enabling environment, investor-friendly environment that African governments need to create?
Yes. No, definitely. I think it's a very important question to ask. And also, Dr. Farouk mentioned it in its beginning of the panel. I think the political support is very important because when you are having almost a whole week of a summit talking about energy, I think it's key to show that the highest office is listening and is taking note of what is being discussed. So I think the political support is very key. Also, of course, stability in all the countries is quite key. And also policies that are, predictable. I think we have seen over the years sometimes policies changing, from one day or the other, which for, of course, long-term investors, it's, I would say a challenge sometimes to cope with those changes. Also, of course, the legal framework, which is quite important when companies making large investments, that I would say their investment is guaranteed, and also the framework regarding regulations is quite key, and that you have I would say a one-stop shop that you can actually go to instead going to all these ministries separately, that also my colleague speaker also mentioned here. And then also the interconnectivity within Africa. I think you have a great example. In West Africa, you have the, if I'm not mistaken, the OMG project, which Gambia is also a crucial player of, where you have, I believe it's Guinea-Bissau and also Senegal providing energy and selling energy to each other. But then we still see that there's quite a big, change in the rates that the African countries are selling electricity to each other. So I think that should also be looked at, that there can be, I would say, a steady supply, but also the prices looked at, and that can be interesting for more interconnectivity within Africa. And I think it's also important to look at, what has the European Union done in the past. I don't think it's necessary to reinvent the wheel. I think we have to look at what works, what doesn't work, and then take the best out of that. So I would say that the political stability is quite important, the framework, the infrastructure as well, of course, and also the financial systems is quite important. I'm happy to hear about the Africa Energy Bank that's being set up. I think it's very key, because also sometimes, I'm going to take an example as a European, as a Belgian. We have so many energy projects that are happening. What I would say now maybe be a bit, biased on my point of view, but we have institutions as the European Investment Bank, facilitating projects within Africa. And then I think it's a bit strange that sometimes, well, I think almost all of the time, you have they not necessarily are looking for quality. And I think that that's a big mistake. I think when you are having key infrastructure project, you have to look at quality, and then yes, the price will be higher, but the quality of the project is higher, the lifespan of the project is higher. I don't think, for me, it doesn't make sense to be investing in projects all over the continent, and then maybe after 5 or 10 years, they are redundant and they have to be renovated, and actually, for the host country, it is more expensive to be fixing those stations and so on. And I think that that's also a policy that I think the European Union should change. I pay taxes in Belgium. I pay is European money. I believe that a European company should, have, I would say, priority to money that's being spent by the European Union. And I think that shifting those policies will make it possible for companies with high competence, to be part of this project. And the same for Nigerian companies. I believe if you have this African energy bank, that you should give priority to Nigerian companies, to indigenous African companies that have the competence. Of course, they can partner with European companies, share knowledge and know-how, and we have so many examples. I think we just have to look at the sponsors under the screen who are investing in Nigeria for so many years. So I think that's key. And then also looking at, diplomatic ways to foster more cooperation. I would say my ambassador, Mr. Peter Leenknecht of Belgium, he made some key remarks yesterday that I know was not, in the line of the whole summit, but, we, as a European pointed stamp view, of course, we have to talk about, renewable energy, and I don't think they are competing in any way. You have, untapped, I would say you have abundant resources. You have more, the highest rate of sun if you look at the planet. So I think you have to look at starting investing in renewable energies. Of course, oil and gas, I completely agree that it's going to be around for many more years. And I also, the African continent only started recently, doing all the exploration and getting the oil and gas. So I think it's fair that, as Europeans, we shouldn't be saying, oh, climate change, you guys have to stop now. No, I think that's not fair. I think you have to also get the profits, so that, let's say in the next 50 years, you still have the profits from this sector, but at the same time, of course, also looking at going to more green energy. My ambassador yesterday also mentioned hydro. There's also a very, a key way to get energy. But then also, Dr. Farouk mentioned it, it's, the Ukraine war changed a lot. But I think that, more opportunities could have been taken, because the European Union was actually, they went, I think it was Van der Merkel that went to West Africa, talking to the government and saying, look, we need energy, provide it. But then I saw articles like Nigeria is not able to supply the energy to Europe because they don't have the right infrastructure, to offload for the ships and so on. So that then
Okay, Thomas, if you don't mind.
Yes.
I may have to cut in here.
Okay.
Just for the benefit of the other panelists, we short on time. Let's limit our contribution to maximum of 2 minutes so that we can go around and give others the opportunity to contribute. Thank you for that, and let's give him a round of applause, please. So, I am going to, just as a segue to the next panelist, I have the benefit of working on West African gas project at the construction phase and a little bit at the planning phase. And to me, that has been an example of a successful regional collaboration between 4 countries. they set up a whole lot of agreements, and they make sure the regulatory issues did not hinder the execution of the project. I'm not sure I've heard of any since then, and I'm going to be looking at the next panelists to help us understand those key legal and regulatory challenges that hinder effective energy partnership in or across Africa.
Good afternoon. And organizers, thank you for inviting me. Excuse me. The first thing I would say is that if you want partnerships and alliances, there must be equal treatment. So why is it that when you got to our side, you said only 2 minutes? You should have given us the same amount of time that you have given others. But you're right. I mean, in Africa with 54 countries, different legal systems, different regulatory imperatives, different policies. You have civil law countries, you have common law countries, you even have some Islamic law countries. Overlaid on that, you have various regional economic groupings. ECOWAS, COMESA, SADC. Some countries actually belong to 2. And so clearly there is no harmonized or consistent regulatory, legal, or policy framework. That challenge is one that has been overcome, as you have said, by the use of various ways, one of which is using treaties, both private international law and public international law. The example you're trying to give, which is the West African gas pipeline, is a very good example where commercial terms and heads of agreements have been agreed upon by people or organizations in different countries. And then you use the imperative and the imprimatur of, for example, a regional organization like ECOWAS to now create a treaty that encapsulates all those terms. At the domestic levels, things like that have been done. So, for example, the fiscal terms that were given to LNG, NLNG, and to some other countries. You take away certain terms and conditions and extract them from the general law and pass a specific law or regulation for a particular project. So that has been done before, but like you say, it's not something that's common. And I'll say one of the biggest problems too is just the multiplicity of laws, regulations, agencies, and at the continental level it's happening, but before you even get to the continental level, at the domestic level, you are not always sure that regulation is policy-driven. You are not really sure that various organizations, MDAs, etc., are being put in place for the specific reason that they are stated to be put in place for. And as has been pointed out, there's very little communication. There's little stakeholder and agency communication, both domestically and internationally, as His Excellency, the Secretary General, has pointed out. And what that does is to create a mishmash of laws, regulations, and policies. I'll stop there since you say we shouldn't say too much.
Thank you. I wish you didn't refer to the 2 minutes again. Thank you. So, I mean, this is something for Honorable Minister and Dr. Farouk as APO is moving forward. The success is having that framework. And also, it touched on something. Not sure regulation is policy-driven. How do we match our policy and the regulations, so as our regulations to make sure it helps enhance policy, not hinder it? I'll move on to the next panelist, Dr. China. How can Africa leverage strategic alliances to expand energy access to underserved regions? Because there are some regions that are not well served. So how do we leverage that strategic alliance to achieve this?
Yeah, thank you for that question. So
I think, to be honest, much of what I'd say, I think has been covered. Dr. Farouk has really done justice to the topic. But I'd say this. If you really want to understand strategic partnerships, if you really want to see that in operation, there's no better place than to see in Europe. It's not perfect, but I think it's probably the best that we've seen. You have pipelines running from Russia, the Nord Stream pipeline, I know, controversial, running from Russia, 6, 7, 8 countries, landing in many countries in Europe. It takes a lot to make that happen. It takes, policy framework, it takes lots of heads of agreements to make all of that happen. You take Norway, pipelines running through Norway all the way. Now, if you look at that and how they functionalize and operate that, and you compare that to what we have, the West African gas pipeline, which has been stalling. This is literally running through 4 countries. It's literally Nigeria, Benin, Togo, and then we're landing, in Ghana. 4 countries. We've not been able to operationalize that. And even if that's the case, if we pause there to think about it, if you listen to what Dr. Farouk was saying, how is it that we have such a pipeline, and then you have the GCEO of GNPC probably not talking to the guy in Togo, and it begs a big question. How can we even make that happen if the person who's right next to you, your neighbor, you are not even in touch? How do you even get that project on the ground? So this is just midstream. I'm just talking midstream right now. If you look at the upstream side of things, go to the continental shelf, the North Sea, UK continental shelf, so the North Sea between UK and Norway. A lot of the exploration that happened in Norway, I can assure you, a lot of that data is also shared across the UK. The reason for that is it's the same basin, it's the same geology. It's the same geology. So by doing that, they ultimately decrease costs in a very substantial way. Go to the Niger Delta. Dr. Farouk was talking about it. Very mature basin. The Niger Delta is very similar to the Congo Basin. It's just right next door. Niger Delta, Congo is down there. How much data sharing do we do? The same 3D seismic you shoot here is probably applicable there. We don't take advantage of it. So I suppose this is just from a technology standpoint. I'd make it very clear that if we're really talking partnerships, one of the big things is, without a doubt, from the point of view of finance. I'm very happy we have the Energy Bank. It's right here. That breaks the monopoly. It gives us an alternative, projects that we could not finance before, that allows us to do it. I'm really hoping that that can open up opportunities for us to start to look at our neighbors before we look at partners out there. I really think that thing you said about most of the oil companies having strategic partnerships, knowing Patrick Pouyan, knowing, all of these guys, all abroad without knowing their neighbors. I think, honestly, that's very disappointing.
Thank you so much. Finance, data sharing, collaboration. The last speaker here, Dr. Conde. I know that there are some key challenges in Guinea. So, what are those challenges facing Guinea's energy sector, and how can regional cooperation help address them?
Thank you very much for having me. Yes, we do have back home some challenges, and when I was hearing Dr. Farouk, I was asking myself, what will I say? Because he's talking about everything I have on my table. But yes, I have seen what the minister did yesterday, so I will try to follow up the same way. Yes, we do have the financing issues, as he highlighted. Fortunately, now we have the African Oil and Gas Bank, and maybe that will help us to fix that issue. The technical gaps we have been talking about, he highlighted properly. I don't have to talk back again because it's a reality. But a side of this issue is the lack in our country to be able to concept and implement research project, even at the small level. When I ask my upstream team, what can we do on the onshore? Is it possible for us to go to collect minerals and make analysis and things like that, they say, no, we don't have equipment for. Small issue like that, I'm depending on a contract with foreigners to help me to make the research, even if it's not that heavy technological needed. That's an issue we also need to address. And something I was not expecting to be an issue, but I have, is the issue of data. When you pay for a study, then you need to go further in the same area. You will be paying the full cost of everything like you never did anything on it. Like our seaboard, I just want to know the depth from A to Z. This is something already done. But there is no data bank I can go and see how to update data about some areas. Because all the areas, reality haven't changed. But the database for that are not available back home. And one key issue we should definitely fight against, but we are not, and we even are reinforcing it, is the bad narrative. We don't have the control on the narrative. This is the same in all the areas. And even though now, instead to be fighting the bad narrative, we are reinforcing the bad narrative. There is universities in Nigeria, in the oil and petroleum areas. During these sessions, I haven't heard any demonstration of research result from that universities. That will be able to show that there is local capacity and we can lay on. We are not giving them floor. And I know some colleagues, because I'm a researcher, economic researcher, some colleagues in the oil and gas areas are doing well and have information they can share to show that here in Nigeria, you can see people you can rely on and they can do some geological, chemical, and physical research for you instead to go sending money abroad. This is something we need definitely to fight against.
Thank you. I will crave the indulgence of the organizers to let me be fair. I've been accused of being unfair. So I'm going to go round 1 minute each to give everyone the opportunity, a final comment from each of the panelists. So please, let's stick to the 1 minute. I'll be starting with Dr. Nje. Can you share quickly successful example of partnership that has significantly boosted energy production in West Africa?
Thank you very much. You see, personally, I am a Pan-Africanist, and I believe as Africans, we should all come together. And these boundaries are artificial boundaries. We have Nigeria, we have Gambia, we have Senegal. These are all artificial boundaries. You see, from a personal example, when I was younger, I went to college in Southwest Louisiana in the US. And for far too long, I didn't come across any African. When I was told that there is someone with an accent working somewhere, it took me 3 weeks looking for him. When I located him, he happened to be someone from Congo. And we established a very strong bond. And I want to believe, as far as oil and gas is concerned, we should see Africa as one. Some countries are endowed in particular resources, others are not. But when it comes to investments, we should all come together. If we come together, we don't have to be looking outwards. Successful examples, if you look at the GTA project for LNG between Senegal and Mauritania, that demonstrates a perfect example of bilateral cooperation for resource sharing and revenue management. Then you also have the Mano River Initiative. You have the NNGP project.
All right, thank you. 1 minute is over. Sorry. I know you want to go on and on, but I don't want to be accused of being unfair. All right. So, Dr. Nusa, quickly, how can you talked about infrastructure, and I want you to just on a final note, how can alliances between African governments and private sector players accelerate infrastructure development for Africa?
Okay, so quick. Recently, Blue Bank published that Africa needs an investment of about $100 billion per annum to be able to sustain, develop and sustain its energy infrastructure. So that is key. So the message is there for everybody. You've heard that Energy Bank has come to stay. Bloomberg says we need $100 billion of investment injected in the continent annually for us to have a sustainable energy infrastructure. The good news is that these things are doable. You've heard the example of West African gas pipeline. I hope it gets to achieve its dream. You've heard, once upon a time, we had a Nigeria-Sao Tome Joint Development Authority. That was an initiative by Nigeria and Sao Tome to use the might of our technology and oil and gas prowess to support and develop a baby brother. You recently, in about 2024, we signed, Nigeria and Equatorial Guinea signed an agreement on a pipeline that would transport gas from Nigeria to Equatorial Guinea. You've heard about the Nigeria-Morocco treat. Many of us that are much older knew about the Nigeria-Algeria transatlantic gas pipeline, which eventually was, I'm sure, has given way to this. Not long ago, we heard about Nigeria, Congo, maritime. I can go on and on and on. What this tells me is that if you follow those agreements to the letter, it will be a different story. We can do it, and I believe we can do it. Thank you.
Thank you. So quickly, Thomas, what factors make Africa an attractive investment destination from an European perspective?
Yes, so I'm going to keep it very short because I already overstepped my time the first time. So I think, looking at the African continent, I think I already mentioned it. I think there are, so much untapped, opportunities. Looking at more the renewable energy, solar energy. It's a country that, continent. Looking at just Morocco, they have one of the biggest solar plants in the world, and it's, creating enough energy for, together with the other mix of generating energy for the country. So I believe it's possible for each African country to have enough energy for, their own sectors, their own industries, and even look at, exporting more energy to other countries that might need more energy. So I think there should be more focus on working together within the African countries, and I think all the panelists are saying that. So I think that should be a main focus, and I think there's an opportunity as well for partnerships to arise from Europe, working together. The example was given that Europe, has done it. So let's look at the examples and see how we can work together. Thank you.
Thank you so much. Mr. Fubara, so how can legal framework be optimized? How can it be optimized to encourage cross-border projects?
Well, very quickly, I believe that charity begins at home. Legal frameworks that you have domestically can be used internationally. And you've heard how the executive order regarding oil and gas has made some changes in the industry here in Nigeria. I'll give you another example, because the building blocks of any economy are the subnationals. You'll forgive me for saying, if the states are working, if the local governments are working, then the nation is working. And so we shouldn't just look at Nigeria, for example, or building partnership and bridges internationally. We should start from the building blocks, which is the very bottom of the pile. So you'll forgive me, but in my own state, for example, through an executive order, the River State Governor, His Excellency Siminalayi Fubara, established the River State Investment Promotion Agency. Now that agency has the mandate to attract investment and to ensure that they make investment easy, not just for foreigners, but for Nigerians. That is one way of doing it. Now, if River State is open for business, Nigerian oil industry is open for business. And if Nigerian oil industry is open for business, you can build all the partnerships that you want.
Thank you. Appreciate that. So, Dr. Chima, quickly, I know African Energy Council has played a lot of role in fostering collaboration. So can you just tell us briefly some of those collaborations you fostered among energy stakeholders?
Absolutely, I will. But I think I'll answer that, but I'll just comment just briefly, actually. If we're running this conference 20 years ago, the logos on here will be different. You'd have a lot of the super majors and all of that. If you look on the screen right now, there are lots of independents. Those independents are birthed from strategic partnerships. The knowledge has been passed from whoever had it onto them today. The next stage, potentially, is for them to then venture out to the Delta and start to go into the Kwanzaa Basin, Namib Basin, and really start to provide value. So I'd say that. But in the African Energy Council, what we do is work with lots of governments, and we have done that over the last couple of years. We've done, lots and lots of work around clean energy, but also oil and gas. So in terms of clean energy, for instance, we've just done a geothermal study, actually. I know it's slightly controversial, but we did that, and they made, introductions into Kenya. Kenya is the, godfather of geothermal in Africa, so we did that. But we have done a lot of work. I'll keep it brief.
Thank you so much. A round of applause for him. So last but not the least, Dr. Konde. So what are your thoughts around what African nations can collectively negotiate to negotiate a better trade and investment agreements in energy space?
Thank you for that question. Just to close the issue of the narrative, I just want to let you know that now I'm working to change the narrative about Guinea. And for that, I'm working to prepare a roadshow that may bring on the table new narrative about Guinea and its energy sector. And regarding the questions you just asked, there is some area of cooperation that are excellent and need to be strengthened. This issue of Center of Excellence is a good idea, and it has to be supported more than it do now. And also the MSBC basin countries organizing promotional activities together is an example of successful cooperation among countries. Something we do not do now is to co-fund the data collection processes. We are buying data from companies, and we are borders. The geological information they can collect from Guinea, they can have on the same time the information on Senegal, on Guinea-Bissau, on Sierra Leone. But they will be selling 4 times. Sell to Guinea, sell to Guinea-Bissau, sell to Senegal, sell to Sierra Leone. This has to change. We need to pool our effort and be doing acquisition together. This is something that can be implemented. Thank you.
Thank you so much. Ladies and gentlemen, sorry we've taken a bit of your time, but I want to thank you, all the panelists, for doing justice to this, and also thank Dr. Farouk for setting the stage for this conversation. Thank you so much for having us.
All right, thank you. So, Dr. Farouk, sir, please, if you can help us present the plaques to them. We'd like to begin, yes, with Dr. Lassine Konde. Merci beaucoup. Dr. Dikwal, thank you so much also for your insights. We appreciate the insights that you all have brought to the Energy Alliance discourse this afternoon. Drop them here, you go to give them. Dr. Dukwal is next. SAN, you would follow Dr. Dukwal. Mr. Lawrence Anga Fubara, SAN, thank you for giving us that learned panelist perspective. Mr. Thomas, is it Thomas or Thomas? Thomas. Oh, okay, I thought it was French. Are you still? Well, you're Belgian, but you know. But thank you, Thomas. Thank you so much for your insights as well. Thank you. Thank you so much. Dr. Nosa Omorodion. Thank you so much. Always delivering when called upon. Thank you so much. Dr. Njay will be next. GMPC. Dr. Njay, I'll see you in camera later. All right. GM Policy, Government and Public Affairs for Chevron was our moderator. Thank you so much. Please give all of them a round of applause. Yes. You did a fine job, GM. Thank you so much. When my moderators make my life easy, it gives me excitement. Thank you so much. You know what comes next after you receive? It will be the family photo. I'm sure everybody here knows that when crude oil is produced with gas, water also comes out, right? Everybody here knows. Please, family photo. SG, don't go yet. Family photo. Gentlemen, please rise for family photo. So, how many of us know what happens to the produced water? How many of us know by a show of hand? You know what happens to the produced water by the show of hand? By the show of hand. Only one, only two, 3, 4, 5, 6, 7, 8, 9. That means the next session is for you. Because we want to talk about what happens to produced water during the E&P process. A lot of water is produced. What happens to it? We're about to share that knowledge. How that impacts the environment, you're about to know. How that impacts the cost of production, you're about to know. So please allow them to take their seat. Don't come to them for networking now. Don't come to them for pictures. We're going straight to the next panel. Please allow them to take their seats. They'll do pictures later. Please allow them to take their seats. Allow them to take their seat, unless you are a staff or colleague of theirs who is receiving the plaques from them. Otherwise, allow them to take their seat. Please allow them to take their seats. Allow them to take their seats. Please allow them to take their seats. Please allow them to take their seats. Dr. Njay, please take your seat, sir. Thank you very much. Please allow them to take their seats. Can we allow the APOSEC Gen take his seats, please? Thank you very much. Please allow them to take their seats. Thank you. Thank you. Now let us move on quickly to the next panel. First off, I would welcome the panelists, and then I would have a presenter speak, and we'll take it from there. Let me welcome, first off, to his seat on the podium, so we're going on now. Can we be quick with the podium, please? All right, so let's talk about produced water now. Thank you very much. Let's welcome to his seat on the podium the Group Chief Technical Officer of Pan Ocean New Cross Group, Mr. Abiodun Ogunjobi FNAPE, and the immediate past president of the Nigerian Association of Petroleum Explorationists. Please a round of applause as Mr. Abiodun takes his seat. Joining him, I would like to welcome the Chief Executive Officer of Polo Energy Limited from Canada, Dr. Maureen Austin Adigio. Is it Adigio or Adigio? Adigio. All right. Please a round of applause, ladies and gentlemen. You're welcome. Thank you very much. Joining them is the former director of the NNPC Chevron JV, Mr. Cosmas Iweze. It's good to see you, sir. Please give me a round of applause. The immediate past director for Chevron NNPC JV. It's good to see you, sir. All right. Joining them is the CTO for Lake Oil, Mr. Samuel Olotu. So Olotu was here earlier. Can someone please ring Mr. Olotu to join us inside? Thank you very much. Joining them is the President Energized Tech Ventures out of Texas. Let's welcome Ben Samuels. Ben, you're welcome. Please take your seats. Joining them. Okay. So our moderator for the panel is the consultant, Dr. Tijani El Badwi. Where are you? Please give him a round of applause. Take his seat. Thank you very much. Before they get all the way down there, yes. Before they get into the conversation, a produced water expert is going to open. We've always had an opening for his session, right? So this is no exception. He's going to open the session by doing a presentation on what this panel is about. And he is the president of the Produced Water Association, or Society, I beg your pardon. Let's welcome Mr. Steve Coffey.
Well, thanks for sticking with us. I know we've had a very long day. Could say somebody's got to go last, but I prefer to say we saved the best for last. This is a really great looking panel and a great wealth of information when it comes to energy and water. This is my 31st year in the industry. I did start when I was 9 years old, just if you're counting. And the Society's 35th year celebrated our 35th birthday in January. Texas-based nonprofit that is dedicated to doing more and better with water for the energy sector. And for the last probably 4 or 5 years, I've been saying energy expansion. A lot of my colleagues have shared in that terminology as opposed to energy transition. We believe, and I believe, that we are needing more, and we're not replacing one for another. We're just enhancing what we're doing because, quite frankly, we are using more energy than ever, and I predict that we will continue to go on that trend. Another trend that I predict that we will continue is the growth of produced water in the industry. We are currently at about 310 billion with a B, barrels per year, and many predict that that number will go to 340 billion barrels per year of water production. So a large number to deal with. But again, a little bit different than how maybe industry thinks of it or refers to it. Instead of a problem or a cost or something to deal with, I prefer to look at water as a valuable resource that we can use and reuse for fit for purpose and beneficial reuse, because we do need water for life. It's not something that's nice to have. We do need water. And in many parts of the world where water is a little bit more scarce, this doesn't have to be explained. Especially here in Africa, there's many places where this is very apparent. And if we don't take care of our valuable resources and use it wisely, we're wasting, just simply wasting. That said, I think the environmental aspect and all the aspects of water as a part of life, you can focus on that and also have a very positive, healthy bottom line for your company. Whether you're an IOC, an NOC, an independent service company, whatever you're serving in the energy sector, I firmly believe that you can do good and do well on your bottom line. They're not independent of each other, they coexist with each other. So with that, I'm going to try to keep quiet and listen to this panel with a lot of knowledge. And hopefully we have time for questions and some answers. And if not, I guess we'll be rolling right into cocktails and networking and have a great rest of our event. But with that, I'm very excited about this panel and the discussion that's happened earlier today. And I think this is a great way to end the day talking about a valuable resource, produced water, and innovation, and what that means for Africa as we start to increase our energy awareness and our access to energy for Nigeria and for Africa. Thank you.
Okay. Thank you so much, Richmond. Thank you, Steve, for the introductions. Very good afternoon to all of us, distinguished panelists and the audience. Thank you for joining us this afternoon. The theme, as Steve has said, is produced water and innovation for Africa, expanding energy access. Produced water, often misunderstood or misconstrued for what it is. For those who know it, they know it as a waste. For those who don't know it, earlier this afternoon at the pavilion, someone was asking me if this produced water is the pure water that we know, the sachet water. This goes to show how much of a misconception there is out there about produced water. But this afternoon, we'll try to dissect all of it with this expert panel. So without further ado, I'll dive right into it. I'll start with Mr. Cosmos. Would you give us a lay of the land? What is happening regarding our current produced water handling in the industry, in the upstream in Nigerian space? Quickly.
Thank you, moderator. Let me start by thanking the organizers of this program for inviting me, especially the Produced Water Society. Especially through one of their members, Future Concerns, that made it possible for me to be here today. You all are doing a great job. Please keep it up. Creating that awareness around what happens with the water that comes with crude oil and gas is important. And how, if we're harnessed, that can bring about a lot of changes in the energy sector. Now, so in terms of the landscape, in terms of status of produced water activities within Nigeria today as we know it, I look at it from 3 or 4 perspectives. 1 is the regulation, 2, technology, 3, operations, and perhaps some of the challenges we are facing in terms of utilizing produced water to make it work. Now, starting with the regulation. Currently, there is a regulation that's called a GASPIN. Actually, it's a standard, derived from previous laws that says thou shalt not dispose of produced water, inland, on land, and within 200 feet of water depth offshore, meaning that if you are drilling oil, operating in oil areas, including the land, the swamp, and then shallow offshore, thou shalt not dispose of your water that comes from crude oil, even after treatment. That's one part of it. The other thing is that if you are deep offshore, where you have a larger body of water, and you are at least within more than 200 feet of water depth out there, and then deep water, then you can discharge, the produced water after treating it to a place where the total hydrocarbon parts is not less than 30 milligrams per liter. So that's what the regulation says. Also provides that whatever water you are going to discharge, for the areas where you can discharge, the temperature should not be more than 2% different from the temperature of the water that is receiving that. Yeah. The whole essence of doing that is to protect the aquatic environment, both the plants and animals. So that's the situation, However, you're also allowed to utilize the produced water in so many other ways, even after treatment, like water injection, essentially allowing you to use that water you produce, treat it, and re-inject into the reservoir to maintain reservoir pressure, not more than that. Yeah. We are not doing fracking like that is done in other regions. It's just maintaining reservoir pressure, meaning you are just replacing the voidage of the reservoir. You are putting back what you produce to increase your production. And also some aspects of it where people can inject for storage. But other than those, you have to pay penalty for disposing produced water to any of these places without following those guidelines. Now, what has happened in the industry today is that most companies are working towards some projects that's going to help them inject the water they produce after treatment to help them with preserving the energy of the reservoir to enhance oil production. That's on regulation part of it. The other part that I need to talk about is on technology. Currently, what is obtainable in the industry is the treatment technology involves, mainly the primary and secondary aspects of it. Essentially, you are using a separator to separate, crude oil and water when it comes from the subsurface. You separate that, remove some solids, and then it goes off, and that's it. And then the next stage of it is that you put it into what we call flotation cells, where, some cases, typically what is available here is EnviroCell, where gas is introduced, it forms bubbles of the crude oil, removes, and then the chemicals is added. It removes, as a de-emulsifier, remove all the emulsified oil in the water body. So that's the second stage of it. Then finally, there's a skimmer pit where, of course, the last part of it, where you put the skimmer pit and then skim off the oil, and then before you dispose, essentially making sure you are achieving the disposal requirement for you to dispose. That's on the technology side of it. Also on technology, you talk about what people are doing to stop water production in the first place. And that takes me into the operational side of things. On the operational side of things, a lot of technology is coming up where people are even preventing the water from coming out in the first place. Because the more you have a water shut-off technology in the wellbore, it's easier for you to reduce the amount of water you produce and therefore enhance the crude oil you produce to the surface.
Thank you, Mr. Cosmos. I'll stop you there. I'd like to ask Mr. Biodun, former immediate past president of NAPE. You have lots of experience and years of experience under your belt, and you're currently CTO for New Cross and Pan Ocean. Can you tell us what you're currently doing with your produced water, and what are we inching towards? What are we looking at in the near future in that space? Thank you.
Okay, thank you, the moderator. I think the last speaker has given us a good overview of what we do with produced water. Produced water is a water that is a necessary evil, unquote, because in a heavy reservoir formation, you have opportunity of getting your gas, your oil, and the water intermingling based on the density separation. So when you produce a combination of the three depending on what stage of production you are. If you are in your secondary stage of production, you are experiencing a lot of water ingress, water cooling, and producing IBS on W, then you know you have to do something to the water. So over the years, facilities are configured based on your developmental strategy. We operate an asset that the philosophy at that time was to have a two-phase separation and just have a centralized dehydration system where all the waters are being dehydrated. So you channel all your crude from all the field to a centralized dehydrating system, and that is where you get the water dehydrated. That has been the system for so long until there was a recent divestment by one of the IOCs, and each of these outfields were now being given to individual separate entities to operate.
So what that means is that individual entity has to come up with their own way of treating produced water. So in our own case, what we did was to have an infield dehydration system. So currently, we are using an infield dehydration system, treating the water to an acceptable Edgar Spring permitted part per million. And that water is currently taken to 17 nautical miles deep into the offshore for injection. Now, that is a temporary solution. But the more permanent one is our plan to have a centralized dehydrating system where we have a water treatment facility, and then we have carried out a reservoir injectivity study to identify a depleted reservoir where we will store the water. So our future plan, which we have started, is to have a centralized dehydrating system, treat the water, then re-inject the water into the reservoir formation. And that is how we're going to dispose it.
Thank you, sir. Thank you. All right, so talking about some of these issues surrounding re-injection, excuse me, in the Permian, there are issues recently coming up around seismic activities with disposal of produced water, deep well disposal of produced water. But I understand the reservoir or the geology there is different of tight oil reservoirs, and that is why you're having some of these issues. Perhaps, Ben, you can give us an overview of some of the advances that is happening in that space regarding produced water. So, because like we've mentioned, waste to wealth, right? So, what are some of these things that you're currently doing in the Permian, you know, for valorization and beneficial reuse of produced water to avoid some of these environmental consequences? Please.
I appreciate the question. I think as an important backdrop before I answer that is the size and scale of what we're talking about. In the Permian Basin, in terms of a geographic area, it's about 3 to 4 times as large as the Nigeria Delta out here. In addition to that, when talking about the oil to water cut, like we're talking about here, in the Permian Basin, for every 1 barrel of oil, on average, you see between 3 and 8 barrels of water that are coming up with that production alongside. And that cut will get larger and larger as the life of the well continues. And then here in the Nigeria Delta, you're looking at closer to 1-to-1. So it's a massive scale difference in comparison also when you talk about the production of oil. In the Nigeria Delta, you're looking at 1.6 to 2 million barrels per day. In the Permian, you're looking at nearly triple that. And so I think it is a size and scalability issue primarily. And then when you back off of that, like you mentioned, in the Permian Basin, again, depending on where you're talking about, there are 3 to 6 different zones, different benches that you can produce from economically and feasibly, and it makes sense to do so. Here, I'm not as familiar. I believe there's 1 or 2, and like you mentioned, it's a much looser formation. I think a lot of those challenges turn into opportunities because in the Permian Basin, we have, like you mentioned, we have reached a point where there are massive areas of the Permian Basin where essentially you cannot dispose anymore, or you certainly can't dispose of nearly as much water as you could have 5 or 10 years ago. And so what do you do with that water? Because the water's not going anywhere, the production is needed, and so there needs to be a solution. And so we've started to talk about some of these beneficial reuse and these reuse initiatives. Some of that is, I say simple, but some of that is as simple as trying to drop out these critical minerals like lithium and some of these other things that you can commoditize on the back end and sell as a product. We're also looking at opportunities. Right now we don't have a way to use any of that water for anything like food that people are eating and things like that, but we started to use it on non-potable ag, and that, what I mean by that is cotton and hay and some of the things that people are not eating. Yeah. And so I think it's important to frame the conversation in a way to, like you mentioned, I think you've said it's sort of a necessary evil. I think it's important. It's an important distinction that, like I mentioned, this problem's not going away, and as this basin and you guys continue to flourish, it's going to grow into a bigger and bigger problem. And if you'd indulge me, I had 30 seconds. I wanted to add to something that was mentioned as well. In the Permian Basin, the 2 major states out there are Texas and New Mexico. And those are fundamentally different states, fundamentally different governments, fundamentally different ways of treating the oil and gas industry. And so when we talk about collaboration and working together in the Permian Basin, a lot of that is divided by state lines. And so I'd just invite in the conversation, because I know in the previous panel, there was a lot of conversation about collaboration internationally on the African continent. I'd just invite in the conversation that invites a significantly higher level of complexity of aligned incentives and how different countries look at these resources and treat them. And so to collaborate across government can be incredibly challenging and a lot of times can be a stopgap to true flourishing and development regionally. But I think it's an incredibly important problem that you guys are at a fantastic opportunity to tackle and create some solutions that maybe we aren't even considering stateside.
Thank you, Ben. I will move to Dr. Morin. You have a PhD in this very area, and you have about 20 years experience in Canada of managing assets, including produced water and produced water valorization. Can you speak to some of the technologies that could help us, say, extract some of these critical minerals from produced water and what to do with the rest of the water? Thank you.
Okay. Thank you very much, and thank you for staying back to listen to us this afternoon. I also want to say a big thank you to the Produced Water Society for having me here. So with water is water everywhere, and produced water is almost the same in across different jurisdictions. So in Canada, what we've seen is similar treatments to what we're probably doing here in Nigeria. They do chemical treatments, they do treatment by mechanical means. But recently, we started adopting a relatively new technology that's called the electrocatalytic advanced oxidation process. And it's a unique solution that really effectively treats water. Because when it comes to the concept of treating water, you have to determine what you want to treat in your water. Like in our space here in Nigeria, where we're treating to meet the regulator's requirement for either disposal or reinjection, or depending on how you're trying to dispose the water. Back in Canada, you see there's a need to reuse water and treat it to a very high level of cleanliness, because most times, especially like in Alberta, where you use steam to produce oil by the steam assisted gravity drainage process, they have to treat water and polish it to a very high level of cleanliness so that they can reinject the water. So sometimes they're looking out for different parameters that from what we see here. So, but then the unique solution that we've recently seen and we're deploying right now is this ECO LP technology that was developed by a Canadian company, Lotic Technologies Incorporated in Canada. And it's a very unique, effective solution because it combines 3 different edge technologies that includes magneto-hydrodynamics, electrocoagulation, and advanced oxidation processes. So basically what that solution does is it creates an environment in the water treatment facility using electricity, or more like an electrochemical process, to destabilize the contaminants in the water, and then the advanced oxidation process that is created also in the treatment facility creates a highly oxidative environment that helps to remove the organic contaminants in the water. Now, the electrochemical process in that treatment solution actually creates coagulants that traps the destabilized components in the water, the pollutants, as it were, in the water. So it's such an effective solution that doesn't require the use of chemicals. You use very little electricity and air, ozone, because basically what you're doing is you are condensing, compressing oxygen from the environment and creating ozone. Ozone has a short half-life, so it has to be generated on site, and you create that environment. You feed your effluent into the reactor, into the treatment facility, and you have an effluent. And the contaminants in the water are broken down in such a way to a level where they are mineralized to their original state, and it can be safely disposed back into the environment. So we've come to see that the ECAOP technology is one of the new technologies that is really making waves in, as we say in Canada, major operators like ExxonMobil, Shell, BP. They're already adopting the use of this treatment solution. So, and one beautiful thing about this unique solution that we see is the fact that it's modular. You know, you can actually use it to treat large volumes of water without using chemicals, reduced OPEX, small footprint, and very effective removal of not just organic contaminants, but you're able to take out dissolved solids in the water. You're able to take out scale in the water, those heavy minerals that are dissolved in water. Like, you know, for those that try to do water injection, like the gentleman here had mentioned that, you know, they're doing some reservoir studies to see how they can improve the injectivity of water. So this solution that we're seeing it's relatively new, but it's able to take out solids and any dissolved solids ahead of injecting downhole. So injectivity issues that are previously problem are kind of eliminated. So that's one of the very good solutions that we have seen and we're adopting right now.
Thank you, Dr. Morin. Steve, I'd like you to speak to the issue of mining critical minerals from produced water. We've seen recently, especially in the Permian and some of the other basins, group of companies making announcements as to having made successes in, you know, kind of mining some of these minerals from produced water, lithium, magnesium, cobalt, vanadium in some of the places. Recently, we saw the announcement from Saudi Aramco, where they've also found lithium in one of their fields in the produced water. So how realistic is this mining of lithium from produced water? What are we looking at in terms of the numbers, you know, the volume, and what we are able to recover in actual sense from the produced water? Thank you.
Yeah, there's a wide range of minerals to be recovered, and I think depending on where you are and what quantities you have and the economics surrounding it, and the economics are getting better as technology is advanced. But I believe it is based on, you know, the need and scalability first and foremost, and then of course some of the other aspects of the perception and need. But and some of it is just mindset. I mean, again, if we still have a hard time qualifying and quantifying the need or the economics of recycling in general, water as water, then, you know, taking a trace amount of lithium out, in my mind, still is an obstacle for many to it's a bigger leap, including, you know, myself and our company looking at what's ahead. It is probably the right thing to do to really maximize recovery, but again, you know, my focus and the society's focus really has been on the use and reuse of water first and foremost. But again, I think it goes hand in hand with some of the other, you know, critical minerals. And, you know, there definitely is a lot of interest and activity. And I'm hoping that that can be combined with some of the excitement about water as well. It makes a lot more when you focus on multiple recovery sources and revenue streams versus just one. So I think there's some great opportunity there.
All right, thank you. Ben, can you give us an idea of what the produced water treatment market is currently and what we're looking at in the near future?
I'll do my best in a short amount of time because it is incredibly complex. In the Permian Basin, everything is hyper regionalized, and what I mean by that is the economics can change, you know, mile to mile, certainly area to area, and so on one side of the basin, you're talking about completely different economics than the other. As a range, disposal can range between 15 cents and $1.50 per barrel. When you talk about some of the treatment options, you can look at something, as low as a dime per barrel up to $1 per barrel. It really just depends on again, sort of what Steve was talking about. What is the ultimate goal? Is the ultimate goal of those processes to drop out some of these minerals and capture that? Is it to, like the lady here was talking about, is it to reintroduce that water so you can reuse it or bring it back into production? And so I think the sort of the goal informs the front end, but it's a wide swath and it's a wide range. There are certain places in the basin, certain places in the Permian where there's really minimal treatment and some of these processes needed to be able to re-inject that into a well or reuse that in production. There's other areas where it is absolutely necessary to do a pretty robust process. In the Permian, we have something called frac on the fly, which we also use to clean the water. And like she was talking about as well, it's about different specs and what you're really trying to accomplish. And so it's hard really for me to answer that in any clean way. The last thing I'll say, though, in addition to sort of the market competitiveness, I guess, is there are companies in the Permian Basin that largely are focused on how many contracts and how many customers can I get, and the bottom line, their profit margin sometimes is less important than just simply getting the contracts because they're big enough, and that's sort of their growth trajectory. Because in America, we have a robust venture capital system, and so a lot of those companies are just looking to sell to someone else, and so how can they make their economics look a lot better, which makes it a lot more challenging to give you a clean answer to that.
Thank you, Ben. Mr. Cosmos, yesterday there was a discussion around whether or not some of the European countries should invest in the upstream, especially in fossil fuel. But here we are talking about the waste to wealth initiatives in produced water. Isn't there a situation where we can have a win-win? So for example, okay, you are not investing in, say, drilling for oil. However, we have wells that are, say, aged, with very high water cuts. However, they probably have some of these minerals in them. Rather, could you come in and invest in mining some of these minerals? Is this something that we can do? Is this possible?
So let's put it clear. Currently, the way it works is that, if you are making sure you are producing the oil you have in the place, that's the most important thing. Not necessarily about mineral. I like what has been said earlier around. Look, depends on where you are, depends on location, quantity, and also the economics of it. So instead of chasing minerals now, I think the focus for this environment, this climate, this region, is how do you recover more oil? I agree with you. Instead of drilling new wells, why don't you look at what you have already existing? To do that means a couple of things have to happen. Means you have to produce more water with the oil.
Yeah.
To produce more water with oil means that then you have to have a means of handling that water. Yeah. Meeting the requirements, not just regulatory, but also, it's a moral obligation that you don't pollute the environment. So whatever you need to do to ensure that you're not dumping that whole waste into the environment with that treatment and all that, has to happen. For example, throughout the life of a well, you can produce as much as 5 times the volume of water compared to oil.
Yeah.
And to do that means that you have to have a system that allows you to produce that oil with that amount of water. Otherwise, you shut down the well. When you shut down the well, the reserves potential for that well is reduced. And what it comes out to the surface is also reduced. And one thing people do is apply technology to ensure that you are doing a shut-off, like I said earlier on, to minimize the amount of water that comes up as you produce more oil. That enhances your reserves recovery. The other thing you do is don't be too greedy about the oil, meaning that ensure that drawdown is not so fast, because when you draw down so fast, then you come quickly with the oil, with the water. And when water comes in, you can't get it off again. Yeah. So these are the things we can do to make sure we're getting the best value from the wells we already drilled than drilling new wells. And having said that, also, every stakeholder has a role to play. Now, you're talking about investment in the fossil fuel, especially in this country. There are a lot of stakeholders that a lot of people have to do a lot of things. For example, regulatory environment. Why do you have to say, do not dispose of water, even after you've treated it to a point where it will have no impact to the aquatic life? So why don't you use risk-based approach to say, okay, how much chemical, how much contamination will be there that will not impact the fish or impact the aquatic life of the environment. And when you establish that, then you're able to produce more water, treat it to a certain level that allows you to keep the lives of the animals living and the plants also living without problems. Right? And when you do that, then you're able to allow people to invest more. Remember, the controlling matter here is the cost of operations. Cost of operations into what you put in there. That cost of operations influences the amount of investment that comes into the country. And that is one of the things that the investors look out for. How much does it cost me to produce? And if I'm spending a lot of money in treating the produced water with no additional value that comes out of it, either from protecting the environment or even increasing production, then why should I continue to produce in this environment? So those are kind of things that will need to happen, even in the midst of this, whether you are going green energy or not.
Thank you. Thank you so much. I'll skip you a bit, Dr. Mr. Abiodun, how do we promote investments in this space in Nigeria? What needs to be done from both government and, say, the operator side?
Okay, so I mentioned earlier that we are going to deal with produced water as long as we continue to operate in this industry. Most of our feeds are either aquifer-driven or a combination of gas and aquifer-driven. So what it means is that will come in the life of your feed that you will then definitely produce a lot of water. Yeah. So the earlier we start preparing and coming up with an innovative solution on how to manage the water, the better for the future producibility of that feed. Yeah. Most of our feed are aquifer-driven. So there is a lot of investment and potential. As technologies are evolving, we'll continue to have a better way of managing our water. And let me just speak a little bit to the premier that you talk about, because seismicity is not something that just occurred. We have a reservoir, because I'm a geologist by background, so I know a bit more about that. If you don't alter the pore pressure within the reservoir, there is tendency of not having any seismic related intrusion. Okay. Well, when the customer was talking, he talked about maintaining the pore pressure within the reservoir. So Niger Delta is a mature basin. There has been a lot of studies on the geomechanical formation of our reservoir. We know the stretch feeds. If you don't alter the stretch feed, you are not introducing any seismic related activities. So what we do normally is that when we want to carry out water injection, we carry out injectivity study to understand the frac pressure of that reservoir. And you make sure that your volume and the rate of injection in such a way that does not alter the frac pressure. And if you are able to do that, you sustain the pressure within a depleted reservoir. Yeah. You are also trying to maintain that pressure. So it's not something that anybody should be scared of, that our introduction of water into the formation is going to alter the geology of that formation. Okay. No, except if they are not done properly. Thank you.
Thank you so much, Mr. Abiodun. Dr. Mori, I'll come to you. We've seen how research, R&D, has accelerated the adoption of technology in Canada, in the US, in Saudi Arabia. How can we promote same here?
Well, thank you so very much. I think in a previous session and in other sessions I've attended in the course of this summit really speaks to it, collaboration. We have very bright minds in Africa, okay? And so it's really about bringing the parties together, bringing technology home. For us, I'm a Nigerian, and I've had the privilege to do research and to be part of various research groups. And I see that the countries, the developed world, they actually formulate policies based on research.
Yeah.
So I think back here in Nigeria, we can actually change our culture where we begin from, even the educational institutions, by reculturing the way we see technology. We should gradually move away from just users of technology to developers of technology. And it starts by really encouraging our young, bright minds back here in Nigeria. There are a lot of organizations out there that are offering these opportunities for exchange programs, for people to do actual collaborative work in research, and that can actually be leveraged on in the area of looking into new technologies for produced water. So I would say collaboration, the students, upcoming students should be more motivated, they shouldn't be discouraged and feel that they don't have the opportunity. There is a lot of opportunity out there for them to be part of good research groups. And in today's world, you don't have to go to China or to Canada or to America to do research. From where you are, you can collaborate with another group out there, organizations that are doing research, and jump into developing technology. So in a nutshell, I would say we have to reculture the way we see technology, reculture our minds here back home, and beginning to look into really developing technologies. Then for those that have developed technologies, they should really be encouraged. The government should promote them, announce them. Every little effort that is being made should be made known and loud. Thanks to the local content that is really trying to promote our indigenous work. So those are the little factors that can really help to improve technology development beyond just adopting technology.
Thank you so much, Dr. Morin. I think we can take one or two questions from the audience. There are questions? Okay, Mike?
Thank you very much, Chiku Chendo, Future Oil Field Services. Thanks to the Produced Water Society for bringing such a topical issue and bringing a wide range of panelists to discuss this. It's clear that the produced water challenges are not just local to the Niger Delta alone, but it's a global challenge from the panelists we see here. Quick thing now, it's become quite an expensive process to manage produced water across the globe. What are the short-term initiatives or solutions or best practices that you guys have experienced when trying to provide solutions to produce water? You've got, in the Niger Delta, you've got a lot of brownfields which are coming on with high water cut. And that's what it is. That's natural for these wells that were initially planned for maybe 10% BS&W or whatever it is and they're now producing from 50 to 70%. But what do we need to do? There are challenges coming from the regulators. I mean, it's becoming expensive to produce this water. Accountability is high. And what technology applications are there now for short-term interventions, short-term solutions for these national operators that have got to produce these wells at high BS&Ws?
Steve, you want to take that?
Yeah, I'll jump in. Thanks, Chike, for the question. I'll also just say one of the big takeaways that I've got so far this week is we really need to share information and collaborate, because I keep hearing the same questions over and over, and a lot of the things that we've globally addressed in many parts of the world and in certain companies 20, 30, 40, 50 years ago. So I think new technology is great, and I'm all for local innovation. However, what has been tried and true and used in the industry, we need to bring that and embrace that technology that's been around for 40, 50 years and again, I could have said the same thing 20 years ago in the Permian, still can say it today, because even if it's known and proven technology, sizing it correctly, putting it in the right place, having the right expectations, there's a host of things that you have to think of that, I mean, many of us here on the stage take for granted, but it's not known, and it's not intuitive and not taught in school. So, and I think with the lack of, handing the baton over and the education for produced water in this space, we have a long ways to go. But the good news is it's fairly simple and it's very well proven. So I think applying technology that we know that works for the right situation is the first step. And that'll really boost everybody's confidence and bottom lines to continue investment and to continue to do the right thing when it comes to water. But, taking a look at it at first, it's going to be big and scary and costly. But if you take a look at it more holistically, it'll become a lot more affordable, a lot more, reasonable.
Okay, thank you so much. Any other one? Raj? Okay.
Thank you, Dr. TK. Is this on? Yeah. My name is Raj. I'm also part of the... My name is Raj. I'm also part of the Produce Water Society. I'm also work as a director of business development at Badwater Alchemy. So 2 questions. One, yesterday we heard that Nigeria is also pretty much heavily involved in hydrogen economy as well, generating green hydrogen and then also blue hydrogen. Now in Nigeria, fresh water is already a very scarce commodity, right? So using fresh water to generate green hydrogen, that does not sound very sustainable to me. So has there been any discussion on using treated produced water to generate green hydrogen? That's one question. The next question is that, just like Ben was mentioning about, in the United States, and I think Mr. Abu did mention about centralized treatment facility, most of these produced water management has been centralized by the produced water midstream companies. So these midstream companies, especially the independent producers, they are selling their water assets and giving a long-term contract to these private equity-funded companies where they manage all of this produced water, both the collection, transportation, treatment, and then provide that recycled, treated water for the producer as well. So that has been a very successful trend in managing high volume of produced water. Has there been any sort of discussion like that within Nigeria? Thank you.
On the first question, I can say no. And for the same reason I said what I said before, which is you need to look at the value you're trying to bring. You need to look at the cost. Look at other competing priorities. First and foremost is for people to increase the amount of reserve they can produce from the reservoir. That's number one, right? Whatever they have to do to make that happen is what happens. Now, trying to convert the produced water into hydrogen will be, hopefully, my sister, you need to come back from Canada and help us with that research, But it's not something we're doing right now. And all these other extra, activities to utilize produced water, it requires a lot of treatment to get to that phase. And given the amount of operating costs we are involved in, and also given our current security challenges, you need to use the available time to do what you need to do to process what you can process, maximize the opportunity to produce more oil so as to help with energy need of the country. I think that's, but over time, with further research, especially if my sister comes home, we can do more research and then get to what you're talking about.
Thank you so much, Mr. Cosman. Richmond, over to you. I think
Thank you very much. Please give them a round of applause, ladies and gentlemen. We've come to the end of today's sessions. We thank you immensely. Just a few announcements and then we're done for today. Tomorrow morning, today we'll begin at 9 on the dot. We're going to start 9 on the dot again tomorrow. This evening, there's an invite-only Shell-sponsored CCE's dinner at Transcorp Hilton. And then tomorrow evening, we're going to close out with the Africa Rave concert. If you like to party, you'd like to have fun, like real fun, Thursday evening, you've got the energy and the stomach for that, Richmond will be waiting. But for now, see you in the evening. Bye-bye. Enjoy the rest of the evening. Please, one more time, round of applause for them. A family photo, please. Family photo for all of you. Family photo. Let's have their family photo. All my photographers. Let's do the family photo real quick. Thank you very much.
Okay, want to take it? Okay.